Good morning, everyone, and welcome to ABG Sundal Collier's Investor Day. My name is Mikkel Korsgaard Rasmussen, and I'm working as an equity analyst covering Danish IT and tech companies. Today, we're fortunate enough to have Penneo with us. Penneo is a Danish SaaS company providing solutions or digital solutions for signatures and onboarding of customers through its two solutions, Penneo Sign and Penneo KYC. And today we have the CEO, Christian Stendevad, and the CFO, Casper Christiansen, with us. As you likely already know, the company will have 15 to 20 minutes to present their company, and then we'll proceed to do a 5-minute Q&A session. So, guys, if you're ready, then the floor is yours.
Thank you very much, Mikkel, and good morning to everyone. So I'm the CEO, Christian Stendevad, and I will first give a short introduction to Penneo and what we do, and then Casper will take you into some of the numbers, and then I will take an outlook for 2022, so the remaining of the year. So if we take the next slide, then that's an introduction, and the next again, an introduction to Penneo. So as Mikkel just said, we are software as a service company for business to business, and we have more than 2,400 customers with the focus on digital signing, document workflow, and know your customer. And we have customers in Denmark, Sweden, Norway, and then also Finland, Belgium, and Germany, but mainly in the Nordics. And we have the aim of become the preferred platform for auditors and accounting across Europe. We were founded in 2014, headquartered here in Copenhagen. And our mission and vision is to make it easy and beneficial for companies to be compliant in a world where being accountable for the way we do business is a matter of course. If you take the next slide, then this is our Penneo Sign. I can see that the presentation might be cut. So this is our Penneo Sign product that we are maybe most known for, because that was how it all started up, killing the pen back from 14. And with this product, we are basically all the manual processes around signing, but also approval of documents. That's how we digitalize. And what we are known for that is how we can have the industry and custom signing flows. So complex signing flows, and how we can deliver that very efficient. And if you look, for example, from a Danish market point of view, more than 2/3 of all our annual reports here in Denmark are signed with Penneo. And we have more than 740,000 end users that have signed with Penneo. So that's just as an example for Denmark. If you take the next slide, that is our KYC. So back in 2020, we bought a company, and the asset of a company with Know Your Customers, or KYC, under the anti-money laundering regulation. And similar to the signing process, also these processes are very manual, but also from a regulatory point of view, they are mandatory to be done. And we simply digitalize these processes to make it much more easy, and at the same time also being compliant, because what you need to do is, for every customer you get on board, if you're under this regulation, you need to onboard them by making a risk assessment of who they are, check them up against PEP and EU sanction list, and then secure that you can document it afterwards, but also continuously follow up that is still the case. For example, if you have a senior management in a company and owners, so who are they? And if suddenly the owner changes, then you need to follow up on it. So that's the process that very often is manual today, that we make much more efficient. So these are the two product offerings that we have and that we go out to the market with. If you take the next slide, then both the whole digital signature market and also this electronic KYC market are in high growth. So these are some of the estimated 31% over the coming years for the digital signatures, and 22%. And we basically are experiencing the same here in Europe, where we have our main focus. If you take the next slide, then the way we go to market is that we start with tier 1. So auditors and accounting is our main segment, and we have more than 800 customers. That's where we start. When we enter a market, we start with the auditor and accounting. We basically also start with the Big Four and then the Big 10, and then we go to the remaining audit and accounting. When we have many of these customers, what we have experienced over time is that there's a network effect from them, because the ones that are signing, for example, annual reports, these are the senior executive at companies. And when they see how easy it is, and at the same time how efficient it is to do it, then they also say, okay, we can take advantage of that into our own industries and our own company. And there we see a lot of branding out of it by itself, but also lead generation. So that is especially for what we call the tier 3, where we see this network effect. And then in the tier 2 that we have here, these are AML regulated company. So those that both need to have an advanced signing solution, but on top of that also would need our KYC. And here, as an example, financial institutes and property management, legal and law firms, and then real estate, just as example. So as you can see, also from a number of customer point of view, we have grown year over year by adding more and more customer to it. And that will basically continue. And the way we have to go to market is when we enter a new country, it is through the auditors. And then with the tier 1, then we take the tier 2, and then we see the network effect to tier 3. So that's how we see it. If you take the next slide. And going forward, and also what we have recently here in the springtime, we raised additional growth capital in March. Then we have 2 focus areas. We have growth in existing markets with the existing that we saw before. And then on top of that, we have a strategy to have a geographic expansion into new markets. So it's both areas that we invest in. And from existing markets, it's very much about upsell our Penneo KYC product to auditors. That has a very high focus, and we have also prioritized a lot of our sales resources to do the KYC product and upsell that. Then we have also seen that there's an increased need in the AML governance industries, both for our KYC, but also for our sign product. And last but not least is the whole European expansion, which is done through the auditing and accounting. So these are our primary investment streams. And this year, it's very much about taking advantage of this increased demand of the KYC. It's a regulatory, the customer, they are forced to do it, and they also see increased pressure on them because they are getting audited, and also the regulation get even more strict in the fight for money laundering. So we have focused on taking advantage of that with our product. If you then take the next one. Then we have also recently, and that was in our H1 report, we came out with one of the investment areas that we have been into, and that is to offer soon here in H2, offer qualified electronic signatures. There are 3 signatures level. There are the simple and standard electronic signatures. There's basically you can put it where you put in a picture or something else. And then we have the advanced. That's what we are offering today, and which is enough in Scandinavia, where you can use, it's a much more secure way of doing it, and often you use the electronic EID to authenticate with, and then there is the highest level, that's the qualified electronic signature. And that has the equivalent legal effect as handwriting signatures in all countries. So it's based on EU law, and this is the highest level. And we see, especially when you go south of Scandinavia, where that is needed for more documents. And we are about to become qualified on the trust list. So in the European Union, we have done all the work for it, and then we are now applying and expect to be on this list in H2, which will help us in our growth and expansion in Europe. So that was my last about our business. Then let's go into the next one.
So next slide. Next again. Yep. This is, as Christian said, we are founded in 2014, and this is the historical view of how we have developed our portfolio. This chart shows all the customers, the AR from the customers divided into the year they became customers in Penneo. And what you can see here in the dark blue column at the bottom is the ARR, annual recurring revenue, from the customers coming in 14. What is pretty unique for Penneo, we guess, is that all our cohort is growing year over year, meaning that when we onboard a cohort of customers, some of them will churn, but the remaining customers will uplift more than the customer who have churned. So that's a kind of the reason why we think it's positive for us to invest heavily into getting more and more clients in, and also why to support this development, we also acquired the company back in 2020, and now offering the Know Your Customer solution, as Christian just told about. Next slide. This is a 12-month historical view of how we have developed our portfolio. We are growing 33% from approx 48 million to 63 million Danish crown. And this chart shows that half of it approximately is coming from the current customer base, meaning we have a pretty low churn on 3%. We are satisfied as long as it's below 5%. When we're reporting, it's 3, 4, 2%. Uplift 17% divided to the original Penneo Sign product and also the new Know Your Customer product. So a net retention rate on 140%, 14%. Next slide. A part of when we became listed back in 2020, we raised 50 million to start out our internationalization. By internationalization, we here mean the revenue is coming outside of Denmark. In Q2, 60%, above 60% of our new biz AR came from foreign markets. And in Q1 it was about 50%, and Q2 last year was below 40%. So it's going in the right direction when it comes to getting new AR from outside of Denmark. And this is just a chart shows how much of our AR is coming from outside of Denmark. Next. This is our SaaS unit numbers, and I normally focus on the last 12 months since it gives an idea of how is it in average. We have seasonality, why one quarter can divide from the other quarters, but by looking over the 4 quarters period, you have an estimate of how it is. What you can see here is that we got 411 customers in the last year. It was AR the first year on 22 Danish crowns, sorry, and it cost approximately 32,000 Danish crown to get this new customers in on average. And as I told before, we have a net retention rate on 114. And since we see that we are having customers, which is from Q1 to Q2 is growing, we also see new customer is growing AR first year, and we have an uplift on our current portfolio of customers who's also growing. We see that we are growing our annual revenue per account. So that's what I want to highlight about this next slide. And then I'll hand over.
And then in the outlook for 2022, if you take the next one, then this shows both what we realized last year. We ended up with 55.5, and then we have guided here a growth between 40 and 49 on percent year on year compared to the 55, so 77 to 82. That's from a revenue point of view. And if you take the next slide, that's the EBITDA. So in here we originally guided for 22 -5 to -10 in our annual report, and then we made an adjustment here in our Q1 from -15 to -20, and that is a result of that we raised additional growth capital in March, and that's what we are deploying right now. So with the numbers that we saw that Kasper presented on the customer acquisition cost up against the average what we are selling to it, then we believe it's a good idea to invest in customers that with the very little churn that we have, that they will benefit from the years afterwards. So that's what we raised the capital for, and what we are right now are deploying. And by deploying, we mean invest in people, in sales and marketing, and in product to support our 3 investment streams that I showed earlier. So this is basically our guidance both for ARR and for the EBITDA. So then that was the last slide from our side. Then we are open for questions.
Yeah, thank you very much, Kasper and Christian. So let's proceed to the Q&A session. My first question is, so you're currently in your second investment round after successfully completing the first one. So given that you can continue these very strong SaaS metrics, how long will you continue to invest in growth, and at what point in time will you perhaps seek profitability, or would that come as a result of the growth? Is that what you're thinking, or?
So when we both in 2020 when we went IPO on First North, and also here when we raised money, then the plan was that we invest them to accelerate the growth. But when we are planning it, it always end up, and here when it was in 2020, then it was basically around now that we had the expectation to be cash positive and then go. And with the second round, we basically make the same curve. So we overinvest at the beginning, but then it end up that we will become cash positive in some years. And we will never run out of cash. So we can decide if we are now, okay, now it's on a good growth path, yeah, then we will not raise additional, but we can also evaluate and see, okay, we are doing great. The key figures are good. It makes sense to continue to invest. So with the existing one, everything is planned around that we never run out of cash. But of course, we take advantage of the capital we have raised.
Yeah, makes sense. So we've generally seen that the CAC, so the customer acquisition cost, has increased over the years. How do you make sure that new ARR from new customers increase at the same time?
Yeah, so when we look at it, we always evaluate, the average ARR per new customers up against the customer acquisition cost or the CAC. We expect them, they both. It's okay that they both are increasing, because what we are chasing right now is we are chasing bigger customers, especially in the foreign market, and that might have a higher cost, but that is fine as long as also the annual revenue per customer follow the same, proportionally the same size. So therefore we are fine with it that it would increase, and we also expect that our average over the time will increase.
And just to elaborate a bit, I think as an investor you need to understand that from quarter to quarter it can deviate from the path, but we are focusing on doing the right thing, meaning longer selling cycle, meaning higher CAC, but also meaning higher AR from first year.
So I think we have time for one last question. With respect to your application to become a qualified trust service provider in the EU, how will this add to your competitive advantage? I mean, how important is it to get approved, and when do you expect to be approved?
So to answer the last first, we expect to be approved here in the second half. So now it's up to the authorities to decide, and we expect it to be a formality. That's the reason why we went out with it, because we have done all the work. When we are on this EU trust list, then basically we are on the highest level that you can be on electronic signature. And that is a help, because not in Scandinavia. In Scandinavia is allowed to sign, so you can buy a house by signing with Penneo or annual reports. But in other countries like Belgium, for example, you need to have a qualified e-signature to sign an employee contract, which means in practice had to be handwritten if you're not able to do it. There are few vendors are on the list. So if you look it up, you will see, and it's a public list. Only a few vendors are on that list. So it gives us a competitive advantage. And we also believe, because we are basing our brand is that we are on the highest level of security and as a trusted provider. So it adds also to our brand that we are able to do it. So extend the number of use cases and add to our brand.
Perfect. So that's all we had time for. I'm sorry, but please remember that we do have company-sponsored research on coverage on Penneo, so you can all access our research. And if you have any more questions, please feel free to contact me or your ABG sales contact, and then we'll get in touch. So thank you guys very much for your presentation. I think it was very interesting, and for the rest of you, enjoy the rest of ABG's Investor Day. Thank you very much.
Thank you.
Bye.
Good morning and welcome to ABG Sundal Collier Investor Days, where we have plenty of companies that will present during the day in different sectors and branches. But starting off, we have Ovzon and its CEO Per Norén, who will go through the company, its recent development, market trends, etc. And then we will follow up with a smaller Q&A session by me. And my name is Simon Granat. I'm the lead analyst at ABG covering Ovzon. And with that said, Per, please go ahead and present.
Thank you, Simon. It's very pleasant to be here this morning, and I'm excited to talk about Ovzon for all of you today. So without further ado, I think I'll jump into it. Who's Ovzon? Most of you might know about us, and if you don't, you should know after this session, obviously. It's a very exciting company. I would say one of the most exciting companies on the Swedish stock exchange today. If you look at Ovzon as a glance, we were founded in 2006. We're listed on Nasdaq Mid Cap in Stockholm, Sweden. We have our main operations. That means both people, customers, and where we deploy our technology and services in the United States, in Sweden, in Italy, and in the United Kingdom. What do? We offer world-class satellite communication solutions for which we call Satcom as a service for companies that have mission-critical operations. We'll come back to that in just a minute. Our sales if you look at upper right corner, our sales, as you can see it in million SEK, have been basically hovering around 200 million SEK in average over the years. But we now are on a path towards a drive and a step change in growth, basically, which I'll talk about a little bit in a minute, and why that is happening, and in what markets we're actually focusing our efforts. But you can see that that is actually a trend that is changing, which I'll be happy to talk about in a minute. You can see on the rolling 12-month perspective, we have 298 million in revenue. And yes, we are doing heavy investments in our own satellite, which we called Ovzon 3, to the magnitude of $1.34 billion. Our vision is really to revolutionize mobile broadband by satellite, by having global coverage, and we will have the highest throughput to the smallest terminals. It will make sense in just a minute why that is essential. We have a very, very unique solution. So in comparison to all other competitors in this marketplace, we are really targeted and focused on companies and organizations and markets that have mission-critical needs when they are in areas where there's no infrastructure or limited infrastructure, or they need a guaranteed uptime and communication and mobility. Our solution includes 4 distinct aspects. One is our mobile satellite terminals. We designed them ourselves. We own the intellectual property and the patents for all of that. We designed them, we developed them, and we produce them through a partner. But that is a very important component. Most of our competition does not have their own mobile satellite terminals. And ours are unique. They're the smallest in the industry, they're the lightest in the industry, and they have the highest performance in the industry. And performance is very critical. We talk about uplink of 120 megabits and downlink of 70 megabits per second. So that's very, very critical for anyone that is in a remote area with a mission-critical assignment. Number 2 is we manage a network of satellite antennas globally. Today, we buy that capacity. We buy that capacity from world-leading satellite operators, and we bring that together in an integrated network that we then manage through our network operations center and our service support center, which is number 4 here. And number 3 is we buy the connectivity service through teleports and gateways that connects to fiber and backhaul through the world-leading organizations that we have worked with for a long period of time. It's an essential piece of our solution, but we have decided to be asset light in that perspective and really focus on the technologies and the solutions in number 1, number 2, and number 4, where we're the only ones in the world that actually have all of those aspects of the business, and we control that. And we can thereby control the performance and the technical aspects of actually delivering service and guaranteed uptime for our SATCOM as a service. To whom do we then sell? And I think this is extremely important to understand. With mission critical operations, it could be a broadcasting company, obviously. It could be a commercial organization that has a task somewhere in the world. But foremost, it's government and defense businesses that have mission critical assignment. You can think about the recent crisis and the war between Russia and Ukraine. That is, in essence, where all the infrastructure was struck out very, very early in that encounter that they had, which meant they have basically they could be without both electricity and communication infrastructure. That's where our solutions come into play. It's not for the common commercial organization, it's more for the mission critical defense organization, help organizations, rescue organizations, non-government organizations, United Nations, etc., etc. So those are the target markets we have. You could look at the key customer list. They are United States Department of Defense. They are the United Kingdom's Ministry of Defense, to mention two of them. We recently, at the end of last year, signed the Italian Fire and Rescue Service, who today have a dedicated service with one steerable antenna from a satellite and our mobile satellite terminal solutions, which they use for both rescue missions and proactive and predictive rescue education and so on and so forth. They're also the #1 in the world when it comes to those kind of very critical, mission-critical operations. We work with the United Nations and also with the Colombian government. We recently helped with the presidential election, meaning we helped register with our communication solutions votes in the outskirts of Colombia, where there was no infrastructure, etc. And we got more, the Colombian government got more voters than they've ever had. And then, of course, we have worked actually with a number of different organizations when it comes to broadcasting and other commercial organizations. But in essence, the core customer base today is government and defense, rescue, and help organizations today. We work with a direct sales organization, so we've built up our sales organizations, but we work through channel partners. Those are pretty known brand names like Airbus, which we are a partner with. They are our distribution channel. They help us go into customers and markets. They have global reach with what they do. And we work with the Defense and Space Agency. And then in each of the countries we operate, we have Bandsat, for example, in Colombia, Gomedia in Italy. And then Intelsat is a satellite operator that we both buy capacity from and steerable antennas and steerable beams from, as well as we work with as a partner with the US Department of Defense as a reseller for us. So it's a very close collaboration between these parties to actually achieve what the customers need. Let me talk a little bit about the financials and what we've done that have changed the curve of high growth and drive for profitability for the company. So in Q2 and year to date, we delivered our SATCOM as a service to the Italian Fire and Rescue Services. We had a very strong sales during the second half year of 2021 that we now deliver on. The Italian Fire and Rescue Service was turned on April 1st. We did a renewal, which is very critical here. We have a number of contracts, and most of them in the government sector are on 1 year each, 1 year terms. So it's very important to have high quality of delivery and then renew those contracts. That's the base of it. And then you add new contracts and customers on top of that. So we renewed one. We've had extreme interest in our solutions given the situation in Russia and Ukraine from all of the markets that we're in, and we're in deep conversations. Sales cycles are long, so we have to be upfront and early when we're out in the market talking to all the constituents that need it. And we're also going through as a company an industrialization effort. So we're a fairly small organization with about 35 people, most of them in technology and engineering and go-to-market and service delivery. But we do much more than that because we outsource production of mobile satellite terminals, production of our satellites, Ovzon 3, production of a number of things, and we buy capacity from satellite operators. So we actually punch well above the size of the workforce that we have because of the outsourced model that we have. And industrialization and professionalization of how you manage that is very critical to us. And one significant order we took after the year is another renewal, which is very critical, with the UK Ministry of Defence of $1.1 million. Now, let's go over to Ovzon 3. Ovzon 3 is our first own satellite that we will own. We have designed a lot of the technology on that satellite, but also Maxar, who's our production partner, has designed some of that. They're one of the most advanced and world-renowned satellite producers in the world. It is true that we are somewhat delayed with the launch of that satellite, mainly due to, or all due to actually, a delay of components during the COVID period. Those components are now delivered, and they are now in Maxar's production facility, including something we have developed, an onboard processor, which is basically a supercomputer that is going to be based on the satellite, put on the main payload of the satellite, and you can think of it as a switchboard that you can control from the ground via software. And basically, if the big teleport, the gateway on the ground, is struck out, which happened in the Russia-Ukraine situation, you can use the onboard processor and make one of our mobile satellite terminals a hasty teleport and use that for a closed-loop communication for that mission that the organization that is using it has. You can think of that as very unique for cybersecurity threats or protecting it for defense organizations and others. But it also sets up yourself as an organization, a user of this, very uniquely for continuation of the guaranteed communication of SATCOM as a service. We're entering the final stage of integration and final assembly. We believe that, and we're going to go into what's called terminal vacuum testing here in a couple of weeks, and then finalize the satellite, then ship that to the launch sites. The launch is planned to happen between December and February. There are other launches in between, so you have to work with your launch provider, Arianespace in our case, to actually gear the exact date of that. But all vectors look at December to February launch of our first satellite, which we're very excited about, and I believe our customers are equally, if not more, excited about the capability that we will deliver with this. I think I've already mentioned this, long sales cycle, but it's very important to look at order intake. And order intake was very strong in the second half of the year. And then if you quickly can turn that into delivery, which we did in the first half year of 2022, it turns directly into revenue and growth. And which also then, if you continue to manage your cost base well, which we do, it drives your profitability to the right level. So it's important for us. This is a key performance indicator we have. When do we sell? What's the order intake? What's the order book? And how fast can we turn an order into delivery? And we're very, very strong at this. We have a discipline around this, which makes me feel very confident about the future and the step change in growth. The financial performance for the first half of this year and for Q2 was very, very strong. You could see that Q2 was 77.9 million SEK, but I would say more importantly, the first half of the year is significant growth with 53% really. And it all comes down to what we sold and how we delivered and how we took renewals of new orders that had continuation. And this would of course continue to roll. But our main focus right now on the financial performance is to make sure we continue to have the order intake, as I talked about, and then turn that into delivery. And that will drive revenue up, and it will bring the profitability levels to a new level, I would say. On the balance sheet, there are a few things maybe to comment. I've mentioned this figure before. Yes, we have invested 1.34 billion in Ovzon 3 in our satellite. It's financed. We did do a drawdown of $10 million from our credit facility in the second quarter, which gave us a 390 million Swedish kronor in cash position, which is good. And with the continued service we have from the installed base, we're also driving towards positive cash flow, which means we're in a good cash position and our operating cash flow is solid. We would, of course, want to continue to drive new deals that turns into service that drives that cash flow towards us as well. But I think we're in a solid position. We've invested heavily in our satellite. It's getting towards finalization, and then we can turn that into financial results as well. So that's the game, basically, we're in from a balance sheet perspective. And going forward, I think in summarizing things, I would claim that our drive and strive is continued step change in profitable growth. Our go-to-market organization has been invested in during the last year and a half to make sure that we really focus our efforts on those markets where we now see that our solutions are something that the market looks after, et cetera, et cetera. Sales cycles are long, so you have to play the long game, and you have to be in there, and you have to be close to your customers. You have to have the right partners. But what we know is that our Satcom as a service is second to none. No one else controls all the aspects, as I spoke about, the mobile satellite terminals, a managed network, the gateway that we buy the service from, but foremost our service delivery and support 24/7, which keeps the uptime and our customers at a guaranteed level of high performance and communication. There is a consolidation going on in the industry. We believe that's good. You might all have seen that the likes of Starlink, which is owned and managed by Elon Musk and so on, are making great strides. We think this is extraordinarily good. They are in the low Earth orbit satellite market, satellite communications market. That's more for consumers. It doesn't have the preciseness and the performance and mobility that we can provide. So we're a niche provider with our geostationary satellite towards more mission-critical operations and organizations. So it's complementary, basically. And I see a path in the future where those two actually merge together, and you can have a low Earth orbit connectivity network and a geostationary network. And depending on who you are in the value chain in society and government defense and emergency and so on, you pick and choose. If you're a consumer, you're likely on low Earth orbit satellite network. And if you're an operation critical organization, you're likely on the Ovzon Satcom as a service network. And then you can combine those in the future where technology evolves as well. So we see it as a great thing that so many investments are going into the industry. And we can actually ride on that wave as well in a very positive way. And last but not least, we're looking forward to launching our own satellite and making that come through to fruition at the end of this year or early in 2023. And then it'll take 4 months for the satellite to be in orbit, but then it can be used for the kind of services that we offer the market and that the market asks us to do. So I think a very positive trajectory for Ovzon, very strong company performance by our team. I want to thank all our employees and our other stakeholders, suppliers, customers, and shareholders for their continued trust in us, and we will not let you down. And we're very excited about the second half of this year, 2022, and the first half of 2023. And with that, I think I'll end and hand the word back to Simon.
Thank you so much, Per. I believe that was a great presentation, so thank you for enlightening us on recent trends. Starting off, you've been with the company for now 1.5 years, approximately.
Yes.
And during your tenure, sales have improved quite well. Can you talk a little bit about what you have accomplished as CEO? What have you focused on? I know that I asked a similar question about 1 year ago and what you are focusing on, but what do you believe that you have accomplished?
I think it's a very good question. It's a very personal question in many, many ways too. I think, as a leader, you come in and you look at the organization, and what I saw was an extraordinary technical brilliance in the company. I think number one thing we have done, not only me, but we have done, is we've honed that technical brilliance into more focused efforts around the satellite terminals, the managing of the network, and the service delivery. And I think that then leads to a result. The result is that you deliver quicker and you have a very high degree of customer satisfaction. So I think that's the number one that we have accomplished. The number two thing is a focus on which market should you go to? Who are your core customers? So really focusing in and understanding the in-depth of your customers. And I think we've done that and reorganized the commercial and sales and marketing organization towards those markets. Because I think you have to be like nomads, where the market is, you have to be. So we've now deployed kind of our sales and marketing efforts both in geographical markets and in market segments of those markets. And that's a continued evolution, but I think we've seen the result of that with the Italian fire and rescue service deal, etc. And we work very closely with our partners, but I don't think we'll ever win unless we actually are much closer to the end user, because I think that's what we're all about. So I think that's the number two. And I would say the number three thing is the engagement of all stakeholders. We have long-term investors and shareholders, from smaller investors, private investors and shareholders, to somewhat larger institutions that are long-term. They have been with the company for a while. They will stay with the company, which gives a focus and a stability. But I think part of my job is to make sure that all of those are informed and that they continue to believe in the company and so on. And the fourth aspect is industrialization, really picking partners that you can work with and that can go with you through hailstorms and rain and sunshine and blue skies. But I think those are the four things. But in the end, it comes down to people. So you have to be engaged with your constituents.
And would it be fair that, given your comments during the presentation about the long lead times that we're seeing in the industry, that most sales progress that you've been seeing year to date have stemmed from previous efforts? So it's not really the recent geopolitical events; it's rather that they might turn out in render improved sales going forward. Or how should we think about these lead times and recent sales development?
Yeah, I think that's another very good question, and I think that's something we grapple with ourselves all the time. And I would say that the second half of 2021 was very important to us because we did conclude some of the conversations we'd had in the first half of 2021, but they were lingering, so they weren't really leading to anything. So I think we got a little edgy on how to actually close deals, which is a very important aspect. You can have a lot of good conversations and a lot of good meetings, but if you don't close deals, it won't lead to anything, right? So I think you should look upon it that way, that I think we sharpened our ways of getting to closure. Secondly, I think we broadened our outreach. I think we were fairly narrow in our outreach, and we broadened our outreach in 2021. And that has now led to the conversations. I think my comment around lead times refers back to a little bit to, but now with the war, I often get the question, now with the situation in Ukraine and Russia, why haven't you sold anything? And it's not that, my point here is it's not that easy, because the need is there. We've been in the area, by the way, with partners and with ourselves. And the need is there. Where does the funding come from? And the funding often comes from central NATO sources or the countries within NATO. And before the funding of things and the need, they need to meet at some point. So you need to work both ends of the spectrum, the need and the solution, and the funding sources, which is more of an administrative and bureaucratic process. And I think that's what I mean with that it has lead times, right? Because there might be a disconnect between the actual need and where the funding comes from it, and government budgets and so on. So I think you should look upon it as we're actively pursuing. It won't happen like you sell an ice cream on a hot summer day. It will happen when you've actually moved the funding sources and the need together. And I think that's our job, and that's what takes time. So I think you should see us as very active in the market, and that it takes 6 to 18 months for anything to actually come to fruition in this world.
It's very interesting. I believe that we are running a little bit short on time at the moment.
Yeah.
But it was a great pleasure having you here, presenting the company and also giving good answer to my questions.
Well, thank you so much, Simon, and thank you to ABG Sundal Collier for hosting us here today. I think these meetings are very, very good. It's always a pleasure to be here. So thank you so much to you and the entire ABG team.
Thank you so much again, Per.
Thank you.
Good morning and welcome to the next presentation at ABG Investor Days. My name is Simon Granat. I'm an equity analyst at ABG covering IT and technology companies. And one of the companies that I cover is Formpipe. And with that, we are super excited to have, again, its CEO, Christian Sundin here, who will present the company, talk a little bit about recent trends, and then we will also follow up the presentation with a smaller Q&A session. So with that said, Christian, please go ahead and present.
Thank you, Simon. Super excited. That's nice to hear. Welcome, everyone. I am Christian Sundin. I'm the CEO of Formpipe Software. We're a company that's listed on Nasdaq Stockholm. I will have planned to go through 3 sections today on today's agenda. I will start with describing Formpipe and our business and our customers and what sort of value we provide to our customer base. I will take a detour through reminding people that have heard me speak before of our initiative of accelerated growth. And for some of you, it's the first time you hear that, so I think that makes sense to understand where we come from and where we're heading. And then I will round it off with some financial highlights from the Q2 report, but also a progress reporting on the initiative and investment that we're currently pursuing in finding and executing on a growth journey. So, having said that, Formpipe, we're a software company within content services. What is content services then? It's a matter of bringing structure and order and efficiency into digital information. You can compare it to being what finance systems do for numbers, we do for words and documents, and cases and processes. So helping organizations to be handling their digital information in a more efficient way. We also have a software for customer communication management that helps these finance or ERP system to be better in communicating towards their customer, making sure that the data that is stored within an ERP system or similar bank system is presented in a good format and possible to send onwards to their customers and make that efficient in digital formats or in any format actually. So that is our 2 core offerings in terms of software. We're very strong in the public sector market in Sweden and Denmark, where we're market leading. But we're also addressing the private sector internationally through a partner network. And our revenue last year was 470 million, whereof a lot of it is recurring revenue. And our ambition is always to drive recurring revenue. And have focus on that's the growth we want to pursue, and had an ARR when we left 2021 of 315 million Swedish kronor. We're today currently 287 actually at the end of Q2, but we're growing, so approximately 290 employees mainly situated in Denmark, Sweden, UK, and US and Germany. But we're pursuing to help partner also in other geographies, so we most likely will add on people in different geographies the coming years. So what do we do? What are our software offerings? To the public sector, we're very much the core vendor for the digital heart in public sector. For Swedes, we call it the diarieföring or case management or the registry in English. There's no real, from the international perspective, a lot of other countries do not have a diary the way we have in Sweden and Denmark. But that's the heart of information management within public sector. It involves every case that a citizen or another authority or anything that's worthwhile tracking, and make sure that it's traceability in decisions, in what has happened in a case. For it could be the tax authority, it could be a municipality, it could be any public sector customer. They need this, and they need to make sure that it's traceable and understandable, the decision they've taken. And we are providing the core platform for that, and that's what we call case and document management. And I'm listing a few of our customers here. The Swedish Tax Authority, the Försvarets materielverk, the Defense, Stockholm City, Region Syddanmark in Denmark, and Helsingør Kommune. So both municipality, local government, and central government customers to these platforms that we do have a very strong position with our customers with. Then we also have grants management. It's all about grants. That's a specific product offering that is very niched for the grants market, where regular case and document management system doesn't really do the job for them. It's a matter of paying out. It could be EU grants to farmers, but it could also be unemployment grants or whatever. So we have a very, very strong presence in this market as well, helping also public sector customers with that. And then at the end of the life cycle of every document that is produced within both case and document management and grants management, there comes a digital preservation. Many of these cases and decisions and documents needs to be stored for 50 years from now, and thereby a digital preservation system is necessary. And you can't just keep them in the everyday business system, because then the system is dragged down in performance. It's also not in accordance with laws how you should preserve very important information over a long time. And what we are offering here is a vendor independent system. So actually, if buying our digital preservation system, which is really we're on the a front runner in how to do this, because we have a very close relationship with our customers. Denmark and Sweden are front runners in public sector in general, making sure that actually Adobe, Microsoft, Oracle, or even Formpipe can vanish from the face of the earth, but you will still, in 50 years from now, be able to retract and put your documents and digital information that you've stored in our archive in a way that you can also put it together and understand in which context all of those documents and decisions belong. So that's a strong offering, and that's a growing market, because with the ever-increasing volume of digital information, preservation becomes more and more important for our customer base. So those are the software offerings. Then we have add-ons on top of that. It's everything from secure digital signatures that follows the regulation of public sector and so forth. So we're a full service and software vendor and provider to the public sector of Sweden and Denmark. That's our go-to game here on the public sector. When it comes to the private sector, we're primarily targeting the market with our product Lasernet and the complementing product Autoform DM. And that is a customer communication management product. It's a product that makes it possible to use the valuable data in ERP system and communicate that to existing and potential customers. And it's a wide range of use cases that you can use this product to. But what we can make sure that what we know is that almost no ERP system is very strong out of the box on customer communication management. So the market is really big, and we are really strong on the Microsoft ERP systems and the Temenos Bank system to help those platforms that are really, really good on what they should be focusing on doing, making sure that the digital information in those systems is handled in correct and good way and efficient way for those customers. But then taking that information out from those systems, that is normally ERP systems and such are not as strong in that. So having an add-on product, which Lasernet is, really helps both the system integrator that should implement the ERP platform, but also makes the end customer really looking better towards the outside and towards their customer by having a Lasernet add-on to a ERP platform. So that's what we're doing in that area in the private sector. And since we have such different product offering, we of course also have different strategies on how to go to market with this. In the public sector space, which is a fenced market, we know every potential customer by name already. We are pursuing a growth journey on approaching our current customers, but of course also win market share within our public sector domain in Sweden and Denmark. But our biggest growth potential is to help our customer base with more things. So what we're doing is to get closer to our end customer by co-create add-ons to the current platform. A great example, I mentioned digital signature. During the pandemic here, our customers were in public sector were also working from home, and then they realized the need for a digital signature product, very much like the ones that are in the markets. There are several really competent ones described, the DocuSign and so forth. However, in terms of the needs for the public sector and the laws or regulation in terms of archiving of those signatures does not really comply with how public sector wants to do this, meaning that people that work from home, a lot of cases it was not possible to make decision because no one could come in and actually sign it with a pen and paper. So together with the customer, we built a product that lives up to the regulation and the laws of public sector, and that also integrates to our case and document management platforms, making sure that it's much more smoothly for our customer to work with that. Being out at the customer, working with them, with the delivery, with their administration and the e-government and their digital journey, we get those innovation ideas, then we build add-ons, and then we address that to our entire customer base and get great scalability of those add-on sales, taking a larger portion of what in the journey of the digitalization of the public sector. And that's a strong growth journey that we're pursuing right now. We are looking into add additional markets outside of Sweden and Denmark. That will not be a greenfielding exercise because there are alikes to Formpipe in more or less every North European country, and there are different laws and regulation in those countries, meaning that we will pursue that path with through acquisition, and then all of those add-ons that I mentioned, the digital signature, for example, would be applicable to address to bigger markets. So that's an interesting M&A journey that we're also looking into. And in public sector, yeah, we will combine the growth with profitability, and growth is stable, and we will we're coming from the Sweden public sector business to have a partner model. We're now aligning with how we do it in Denmark and see similarities and going for becoming a full service provider, one-stop shop for the entire public sector space. When it comes to the private sector, that's super exciting, as you would have mentioned it, as said it, Simon. It's an even stronger growth potential. We're still a small player, and even if the market might not be unlimited, it's definitely not a fenced market where we know every customer. We are seeing great potential in our partnership with Microsoft and Temenos. Over time, we will be a system or software agnostic, making sure that we can help every ERP system with their customer communication management. But at the time being, the potential in Microsoft and Temenos alone is so huge for us that we're focusing on that in this era of the Formpipe journey. So we're investing heavily to support and grow the partner network. We're not in the private sector. We're very, very true to the partner channel sales, and we need that bandwidth to reach out to all potential customers on Lasernet around the globe. And here we also see that it's only SaaS revenue that will push this very firm. It's SaaS, and the growth of SaaS and subscription is really strong here, and the potential is great on Lasernet. So that's what we're pursuing, and we see great traction in these channels at the moment. So that was the Formpipe at a glance. Perhaps took a few minutes longer than I planned, but I will then go into growth. I mentioned that we come from a history where we, from up to 2019 to 2020, we came from pursuing a balanced approach to growth. We were only putting focus on growth of recurring revenue, and we were actually pushing deliveries out of our way, even though there was potential in that. We were cleaning up and making it a true software company. And that was a several-year journey where we continuously improved our margin with modest growth combined with that. When we entered into almost two years ago, we said, okay, we can do this. We know how to increase our margins. We know how to pursue a stable growth. What about trying to grow a little bit faster? Where can we invest to make that growth happen? And in line with that, we also published financial targets saying that, we will increase the speed of growth to 10% in average per year up to 2025. When coming in 2025, we will have 70% of our revenue in recurring revenue. So still very much focus on growing the recurring revenue. And we will have an EBIT about 20% margin coming 2025. And since this is a very scalable business model with a large portion of recurring revenue, we will also be able to pay dividends to our shareholders meanwhile. So 2021, or actually late 2020, saw a start of a growth journey focused on accelerating growth, mainly in the US and Europe. Doing that by investing in the, as I said, in the partner network, providing more support to more capacity to support and grow the partner network around the globe. But also have more people employed to help our customers in the public sector space, making the business transformation from being partner-driven or partner delivery in Sweden public to be a full service provider, as we already are in Denmark. Also an added investment in this. High share of recurring revenue, that's a given for us, and then complement the organic growth with strategic acquisitions. And what does this mean then? All of the things that I mentioned on the previous slide are front-heavy investments to feed the growth. To invest the capabilities that cost money right now, immediately, while the growth of recurring revenue recognition and that comes over time. So we openly said we will invest in this. We'll focus on Microsoft and Temenos, as already said, and increase capacity and resources in our organization. All of this will have a short-term impact on the EBIT, and that is what we're living through right now. We have pushed our margins downwards significantly since we initiated this. And let's look on how that has turned out in terms of financials. Starting with, though, the ramp up what we said. We were going to build capacity to make sure that this will happen. And we've gone from a little bit about 210 FTEs to 290 or 287 Q2, but we'll continue to grow that in sort of the same pace as we did the last year. And we added an acquisition of Alchemit early this year. Could be seen as a bundled recruitment because it was a partner of ours that had strong competence and experience in delivering our products to the public sector of Sweden. So it was sort of fast-forwarding on our strategy. Instead of recruiting, we took a gigantic leap in the future by acquiring Alchemit and making sure that we adopt the the experience and the structure and the processes that Alcomet already had in place in order to fast forward our strategy of becoming the one-stop shop to the public sector of Sweden, as we already are in Denmark. The integration made us take a hit on the productivity in Q1, making sure that we aligned all the resources and how to work. But we already in Q2 saw a great improvement in efficiency again, and we have great comfort in that we will see that continue going forward with both better productivity and margins and so forth. So a very, very strong message in that, and that a great acquisition towards the journey of becoming the one-stop shop provider in public sector. So what I've said is that a lot of investment right now. Yeah, and of course these investments, they are hurting the cost line immediately when adding resources. So number of employees, if we compare quarter by quarter in Q2, now we get a little bit detail. I think Q2 is relevant to share since it's the latest. Could have worked with annual numbers as well, but they tell the same story. But Q2 to Q2, we see that we are 16 people up and that the staff costs are up 12%. We see that sales expenses are up. That's not a bad thing, actually. That indicates what I will come to on the next slide, that the revenue is also up. But then we're also comparing to a pandemic world where traveling, marketing, and so forth were on the very low side. So we see that those sort of costs are also up, which also is a sign of increased activity in the market, which will drive more sales for us coming forward, and we come back to that. But we also had some significant one-off cost in Q2 where we, for example, recruited new board members, and we had a project of evaluating our way forward as a company. So some one-off costs in Q2. But all in all, the costs are up quite significantly since last year's Q2. However, we also can clearly see that this pays off in the strong growth. We have a total growth for the quarter that sums up to 17% compared to last year. We see that this is driven to a large extent of the business transformation of public sector Sweden, where we have increased deliveries, which is really good thing, and that will support accelerated growth of the recurring revenue and the software sales, as well as I mentioned, that the getting close to the customer, building those add-on and selling that to larger customer base as a subscription or software as a service. We see also that the recurring revenue are up 15%, and that is primarily driven by SaaS, that is up 44%. And then this could look like a negative thing, that the traditional license goes down to historical low level of 2.4 million in the quarter. That's actually a good thing, because that means that we are shifting to more and more, and we're more or less through the entire shift of the business model of the software, selling our software entirely as recurring revenue, subscription or SaaS. So it can't be lower than 0, and 2.4 is almost 0. So we're almost there. So that's a good thing. And another good thing is that we see that the private sector has been the front runner in the SaaS transformation, but we now see more and more of our deals towards the public sector also coming through as subscription or SaaS. So that's a great thing. And with this subscription and SaaS, the revenue recognition, that comes later. So we haven't seen that in the margins now, but from what I interpreted of this, that is that we are right now on the lowest end of our margins, and now we quarter by quarter will start to bring back the margins with the growth of recurring revenue that will bring our margins back. So we feel great comfort in our financial targets that we will break the 20% margin barrier in 2025. And to underline that, we came from, as I said, a history of being very focused on balanced growth of recurring revenue and having solid margins. We initiated somewhere here in 2020, we started to to prepare for growth. And when you can see what happened in 2021 when we increased capacity, the ACV build-up went through a paradigm shift. And what we can see now when we continue to increase capacity, we see now in Q2 another stepping stone of ACV. I wouldn't say that 12 million, that's an extremely strong quarter, of course, and also supported very much by the public sector ACV. That was not a spectacular private sector ACV that made that number. It's actually the entire business that provides the ACV here. So we are looking to coming quarters with even stronger ACV build-up. And we're now on looking, this is SaaS alone, but we're now looking on an ARR of 105 in SaaS, coming from 11 million in 2017. And we had quite slow growth here a number of years, and now we're on this trajectory. The investment is really paying off. That's what we can see, but you need to look on other things than only the P&L. The ACV comes with 1 year delay in terms of margins and profits. So that was that. Thanks for me.
Thank you so much, Christian. Unfortunately, I believe that our time is up, but it was very exciting having you here. And I believe that you also addressed several of my questions. Yeah. So without further ado, I'd like to send again a big thank you for attending here today.
Thank you, Simon. Sorry for not leaving room for questions to you. Sorry for that.
We'll take that next time. Thank you.
Yeah, thanks everyone for listening. Bye.
Hi everyone, and welcome to ABG Investor Day. My name is Nikola Kalanowski, and I'm an equity research analyst here at ABG. With us today we have Patrik Höijer, CEO of Precise Biometrics. Patrik will present to us for about 20 minutes, and then we will have a brief Q&A to finish it off. And with that said, Patrik, please take it away.
Thank you, Nikola. Thank you so much. I'm super excited to be here today. I'm Precise newly appointed CEO. I started on the 1st of June. And I'm really thankful and grateful that I have the chance now to give you a little bit walkthrough of Precise today. I think before going into the business itself, I think it's good to look at some of the underlying trends that is favorably helping the Precise business. And specifically, there are 3 trends that I want to mention. I think there's one trend that we all can see, which is about increasing fraud when it comes to identification and authentication frauds. In this area, there's clear demand of increased security. The other trend we can see is that there is an even bigger importance when it comes to remote identification and KYC. We can see that we have during the pandemic, increased the amount of remote logins driven by e-commerce, driven by governmental demands, and so on. And thirdly, is that biometrics is entering into new verticals. We can see that in automotives, we see new user cases where biometrics are used. We can see that in laptops, for example, Windows are now applying new biometric standards to log into your computer. All the devices that you have formerly that you're holding, the mobile, the laptops, and so on, are now enabling a lot more functionalities. I mean, you can do payment, you can do EID, and all of these increases the demand for security. And biometrics is a really good way to handle that kind of increased security demand. And I believe that Precise is really well positioned in this space, as we believe that biometric data is things you can carry with you, right? And that's why you are the key. So wherever you go, whatever you do, the biometric data goes with you. So no matter who you are, where you are, and what you do, you are the key. That's the philosophy, and that's the vision of the Precise business. And if we then go in and look at the Precise business, many of you might know about Precise historically due to the fact that we go back to 1997. We were listed a few years later, so we've been here for quite some time, and we, with that, had a strong knowledge and expertise in the biometric space. We are today 50 employees, but if we look at sort of on-site consultants and everyone working there, maybe we're more up to 70 people in total. We're a quite global organization. The reason for that is because we have customers on a global scale. I mean, we're following our customers to US, to Asia, and that's why we have this sort of strong global presence as well. Today, we have 2 distinct business areas, the Algo business and the digital identity business. And of course, that's something I will really talk more about and explain more in the coming presentation here. The market cap today is around 250 million SEK. If we then look at the 2 business segments we have the Algo business, which is our fingerprint business, the foundation of the company, where we have over many years shown stable revenue and also strong margins. And then we have the sort of newly founded area, which is our digital identity area, which is where we look at identification access. Today, we are focusing on physical access in the YOUNiQ space, which I will come back to, and also visitor management in the East Coast product solution. And I would start by talking about the digital identity area. Looking at digital identity, it's all about finding convenient and secure way of doing digital identification. And the way we do that is by using biometric data. There is, of course, a large number of applications in the market today when it comes to where you can use biometric data as your access, as your key. We have chosen to start with physical access, meaning that with your facial recognition, you can be granted access to a site. And we also started with the visitor management space in line with the acquisition we did on East Coast in December last year. The East Coast acquisition has given us a large customer base and also recurring revenue. And I think that's worth mentioning, that the DI business is about building up what we call service as a solution, recurring revenue. So building up a customer base that over time creates stability and good margins. And if we go back looking at the history of this business area, it goes back to 2018. The first couple of years was a lot about building technical development, building technical integration to secure that we had a strong proposition in the market. Now, the R&D resources are mostly spent on building stability, scalability, simplification to get this out in the market in a stronger way. So the focus here is on commercialization of the proposition we have. And maybe just to make it a little bit more tangible to you, if we look at what kind of service we're providing here, it is, as stated right, it's a physical access that access with focus on simplification and security. So we are catering for customer needs such as secure entrance, right? You use biometrics data, your face, to get into site. It's seamless entry if you want to. I mean, the door can open just by showing your face without showing any other tags or anything to get in. It's also, I mean, it should also be added that in the security side, this could also be a two-step authentication, meaning that you can use a combination of face and a tag, really securing that it's the right person holding the tag or the card when they're getting in. And we also, I mean, if you want to, also taking away a lot of administration. I mean, you don't have to have keys and other things to figure out. I mean, that's all digitally handled, and access and so on, and authorization is done through the cloud to secure if you get an entrance or not. So the other part in this is also kind of important, is that we have a very easy way to onboard end users. The idea is that if you want to invite someone as an end user to your site, you just send out an email with a link. You press that link on your mobile as a receiver. In that, you can take a selfie. That selfie is then used when you come to the facility and you see enter a new camera, and that camera is then comparing the new image with the selfie that you uploaded. And if there is a match, you're granted access to the facility. So it's a fairly easy way to onboard new users, which can be used in both for visitor, employees, but also members, like in the gym vertical or wherever you might see the applicable user case. I also want to say a few words of the sort of market potential. I mean, this is a quite big market, and as stated before, I mean, we can see an increasing demand on security in the markets. We see that the overall sort of Nordic market holds 2.9 billion SEK, Sweden 1.2 billion alone, and today, very much also dependent on the acquisition of East Coast, we have a recurring revenue around 13 million kronor in this space. So there is a big potential in the market. It should also be good to mention that East Coast by itself is a profitable company with a positive cash flow, which is also then contributing to the company. If we then look at what is then sort of the way ahead, what's the growth strategy for the digital identity part? As stated before, on the organical side, we believe that we're now in a commercial phase. We need to now, as we have put all the technical requirements in place with partners, ecosystem, and the development, we're now working on the commercial side to work with the right incentives, work with the right partners to secure progress in our go-to-market with these services. The other part is the strength we have in the East Coast acquisition. We are focusing on, we have in the first step focused on technology integration with the R&D teams, but we can also see big possibilities in cross-selling on the customer bases we have on the East Coast side. The other part we look at is that we, of course, try to expand our business with strategic partnerships. We are looking especially in countries where we already have organizational footprint to see if we can launch this product over time in other countries, in other markets. The other part in the DI space, which I think is also very important to state, is that we believe that this is a growing market, and the needs around digital identity is an increasing one, and where the physical identity and the digital identity is merging over time. It means that we have an ambition also over time to enter to new verticals. Now we have decided in step one to focus on the physical access, but we are exploratively also then looking into how to move to the next step. With that comes also beyond strategic partnership also a openness for opportunistic M&A activities in these markets. Going from the digital identity area over to the algo space, our fingerprint area. In the fingerprint area, we have a strong software platform that provides end-to-end fingerprint recognition in various user cases. It means that we have a multiple algorithm that includes a matcher, match your fingerprints, image processing, and anti-spoof. So we have the deep knowledge on how to do fingerprint recognition. And in this space, I would say that we're really world leading with our algorithms. Today, we have a very strong position in the mobile segment. That position has built up together, with the close collaboration with strategic partners such as Egis Technology and Qualcomm, for example. But we also believe that due to the fact that we have this strong position and technological expertise in this mobile segment, we have a good possibility to move our business into new segments, into new verticals, as the mobile business is the most complex technically wise. This area is a profitable area for Precise. We are seeing revenues in the form of license fees, royalty fees, and also some support and maintenance fees. If we then look at the direction for the algo business, we see that it is important to have strong focus on the strategic partnerships. Especially on the mobile side, we see that the market is consolidating, so it's getting fewer sensor manufacturers. And Precise has a very good position there with the strong partnership we have. And we will continue to work close to these customers to win more projects, to win new mobile models in the future. The other part is that we believe that we have good possibilities to expand our business over time into new sensor types, into capacitive sensors, into ultrasound sensors, as our algorithms are applicable on these kind of sensors as well. We also believe that there is a good potential in further strengthening our product development, our mutual offering together with partners, if we work closer together with them on the product development side. And that's something also we are actively doing now together with these partners. Then beyond that part, we also stated clearly that we want to win over time in new verticals. We want to strengthen the relationship we built up in new verticals already, such as in the automotive space, which we presented last year in December, where we won some nice deals in the automotive area. But we also want to further strengthen our focus into other verticals beyond that automotive space as well, as we see there are good use cases where we can support. With that, I think there is also good to mention that there is something, in my mind, very positive ongoing as well right now for Precise. It is the fact that Egis Technology has and Precise has agreed upon them investing into Precise. Egis Technology is a Taiwanese company with headquarters in, we founded in 2007. They are a global leading sensor manufacturer. They have big customers today, such as Samsung, Lenovo, Vivo, Hyundai, and so on, just to mention a few here. And with Egis as an owner, I think that, well, I believe that Precise is getting a long-term industrial player on the owner side, which is helping us in the sense that we are creating stability in our mutual business together, which is good and important. But it's also a good, strong partner for us in the Asian market, where many of our customers are, where many of the products that we send to end users are manufactured. It also helps us to strengthen our cash position, which of course in the end also helps us to deliver on our growth agenda. And thirdly, I think this creates also good new joint commercial capabilities and opportunities. It is clear that we can improve our product offering if we together join forces. This benefits not only Egis, it benefits other customers as well, as our understanding of the sensor side, the hardware side increases, and with that we can increase our quality. I also believe that we have a good chance together with Egis to explore other verticals over time, as they also have ambitions to expand their business into new verticals. And then finally, I think the hardware component, the hardware understanding expertise that Egis has is something we can benefit from also into the Algo and as well as the digital identity business, as that could be simplified, more cost efficient. So if we look at it, what is technically happening here right now is that the board has used this mandate from the shareholders, from the annual general meeting, to do a direct issue to Egis, giving them a 10% stake in Precise. I'm also glad that the extra general meeting approved that present shareholders are also have the right to participate in a rights issue on the same terms and conditions as Egis. This rights issue is guaranteed 25% by Egis, and then we have an additional 2 to 3%, which is guaranteed by the management and by the board. So in total, after these transactions, Egis will have approximately 12% of ownership in Precise. Good. If we then try to summarize, looking at the key takeaways, I think the first one to remember on Precise is that we are building up our digital identity business in a commercial in an area where there's a huge market potential. We're also building up a model where recurring revenue is the main way of doing business, which is very attractive long term. On the Algo business side, we have an ambition to over time expand into new verticals and new technologies, new sensors and so on, which we are actively working on now. I also believe that the Egis investments is giving us a good possibility to develop our business together with them. All the capabilities, the commercial possibilities that I expressed earlier in the presentation, I think is very helpful for Precise. We are also, as stated, focusing in our strategic partnerships in the fingerprint space to secure that we continuously win the projects going forward, especially in the mobile space. So that's a continuous, clear focus for us. And then on the last note, we have an ambition, as stated, in the digital identity space to move into new verticals. So beyond the physical access area, explore how we can play a more bigger role also in other segments, verticals beyond the physical area when it comes to digital identity, as we believe that we are very well positioned with the Algo and the digital identity offering. I think with that, I will stop and hand over to you, Nicola, again.
Excellent. Well, thank you very much for the great presentation. And now let's wrap it up with a brief Q&A.
Yeah.
So the first question I have is if you could walk us through a little bit of the unit economics of the different segments in Precise.
Yeah, yeah. So as stated, we are operating in 2 business segments, looking at the foundation of the company, where we're coming from, the algo fingerprint area. We've shown stable margins over the last couple of years. In our latest quarterly report, we showed 88% gross margins. If we look at our DI business, we believe that over time, as volume growth, we will also see improved margins as well. In the last quarterly report, we showed 43-44% gross margins in that area.
Yeah, excellent. So, say going forward, 3, 4, 5 years from now, what industry or sector do you believe will be a key driver of growth for Precise?
I think that's a really good question, because I think there's something, I mean, if we look back at it, and it's of course also for me, coming in new to the business, it's kind of interesting to reflect on the business. I think if you look back a few years, some of the stuff that we saw came in as convenience, I mean, using biometrics to log into your phone and so on. That's natural today for you, right? That's a standard features in phones and devices today. In combination with that, you start to put in more personal and very important stuff into your device. Your payment credentials, your EID, your bank ID, or whatever it might be. This is also driving a clear demand for increased security. And I believe that Precise with the algo business and with the DI business is really well positioned when these physical and digital identity is merging over time. Then our propositions in the market is really well positioned, and I think there's a huge possibilities, I mean, to expand into new sensors, new technologies, and so on for us in that space.
Excellent. And you mentioned exploring a growth avenue such as a buy and build strategy for M&A. What sort of key criteria are you looking for in potential acquisition candidates?
Yeah. So what we have said is that we believe that the DI space, the digital identity space, is really important and growing. And we then strategic-wise said that let's start focusing in on the physical access side. With that said, we believe that there are great opportunities for us to grow beyond that. And we also work on different use cases in that sense. What we said is that we will opportunistically look into strategic partnership or acquiring competence around, for example, the digital EID area and so on, to build competence, to build scale in this area.
Excellent. And one of your, I guess, key markets, perhaps going forward, would be the automotive industry through your partnerships that you've entered into. Could you tell us a little bit about what sort of features we could be seeing, and is this implementing this feature, would that imply a rather large cost for the car manufacturer, or rather small cost for the manufacturer?
I think that's also a super interesting question, and also something that I also had a chance to reflect upon when I was in my former industry. I was working for a payment company before. I think we're seeing a little bit the same development as we're seeing with the mobile phones, that many capabilities are moving into the cars, payments and so on, and also car theft. I mean, higher security, and that calls for new ways of solving that. And biometrics is one natural way of doing it. I believe that we will see many different use cases, and you can probably look at mobile development and see that where the development is heading.
Yeah, and let's just wrap up with one quick question. You mentioned that you've gained some exposure to Swedish gyms through some of your solutions, such as Friskis or Svettis.
Yeah.
Could you tell us a little bit about that solution and what sort of value add you bring to the client?
Absolutely. I think that's a really good one. I think what we're doing very much now is when we're looking at our DI business, we're really working towards some specific segments where we see strong use cases. And I think fitness centers or gyms are a very good example of that. What we can do is we can supporting them in digitally onboarding their members. I walked through you before how easy it was to onboard someone with a selfie. That could be easily done with members as well to get them, grant them access to the different facilities where they have the fitness center. We also, with the facial recognition part, you can decrease the time you have people actually present in the reception. So instead of having people actively there, you can use facial recognition to allow people to enter the facilities. And thirdly, you also know who is there, right? And many gyms has problem with people sharing their cards, right? The membership cards. And with this, we secure that all the members that are there has also paid for their membership. Just as some examples.
Perfect. So our time is up, but I want to say thank you, Patrik, for attending and presenting.
Thank you very much. Thank you, Nicola. Thank you, everyone.
Okay, welcome back to our next presentation. My name is Jacob Lemke, Healthcare Research Analyst here at ABG. Next up, I have the pleasure to welcome Biovica and their CEO, Anders Rylander.
Thank you very much, Jacob, and hello, everyone. My name, as Jacob said, is Anders Rylander. I am the CEO of Biovica, and just a few words about myself before I go into the presentation about the company. I have a background within management consulting, spent many years within Accenture before starting my entrepreneur journey as the co-founder of Axholmen. And during that time we went into investment. I met the innovator of and founder for Biovica, I got very attracted by the great potential of the company, both for the opportunity to improve the lives of cancer patients as well as the commercial potential. So I made an investment, and further down the road, I was offered the opportunity to become the CEO of the company. So I've been the CEO for more than 10 years now and are still one of the major shareholders of the company. So today I'm going to go through the company and the product, the market potential, the go-to-market plan for our most important market, which is the US market, the team behind it, and also to summarize with some milestones going forward. So Biovica is based on research, or the innovation behind it is based on research from Uppsala University that spans several decades back. We are still based with our headquarters in Uppsala, where we have our R&D and our production facility, although we now have established ourselves in US, in San Diego, where we also are building a lab. We are traded on the first Nasdaq Premier since 2017. And when it comes to regulatory approval, we are approved CE-marked for Europe. And since July, we are also 510 cleared by the FDA for the US market, which I'll come back to. And the product's called DiviTum, stands for dividing tumor. So what we do is, with DiviTum, we can measure cell proliferation from a simple blood test. And as you all know, cancer is defined as uncontrolled cell proliferation. So with our product DiviTum, we can provide very important information both before and during the treatment. It's shown in many clinical trials that the value is prognostic for how the disease will develop. And that is, of course, very important information for the treating physician. Currently, these patients are being monitored by using imaging. Sorry. And currently these patients are being monitored by using imaging, which requires that you take a snapshot both before and a couple of months into treatment. With DiviTum, we can provide several advantages, such as a more convenient way of monitor with a simple blood test, but also quicker feedback. We've shown already 2 weeks into treatment that we can provide feedback if the treatment is efficient or not, which is, of course, very important for both the patient and the treating physician and the healthcare provider, both from treatment outcome, but also for health economic reasons, as these treatments are priced at more than $10,000 per patient. It's, of course, important to spend those money where it's most effective. And also, there are many treatment options, especially within the metastatic breast cancer area, which is the first area we're looking to enter. And if you can discover progression early, you can, of course, switch to an effective treatment. So in July, we received our 510K clearance, which is a really important milestone for us. That allows us to market the product on the US market, being the biggest market for Biovica. And we got a new product code, which we think is really a strength. It allows us to differentiate the product on the US market as a new way and more effective way of monitoring these patients. We had really strong data acknowledged by the FDA, especially for the so-called negative predictive value. That means a patient with a low value under the cutoff has a very, very high likelihood, 96.7%, that they will not progress, which means that they're responding well to this treatment within the coming 30 days. And 30 days is also the treatment cycle. Every 30 days you get a dose of the therapy. And of course, it's important to make sure that you're responding well to that therapy before entering the next cycle. And the intended use also covers the target group that we are looking to address, which is patients with hormone-positive metastatic breast cancer. We also have data showing that the patient that has elevated values measured with our assay will likely progress, and we also can discover progression earlier than with imaging. In this trial that was published in a Nature publication done in collaboration with Washington University, in median, the progression was discovered 83 days ahead of imaging that's being used currently. So having clinical data supporting or proving the value of the product is, of course, key for the coming commercialization activities in order to generate demand for the product and clinical uptake, and also for the regulatory approval and inclusion in reimbursement. And this is an area we've been active now for quite some time and has generated very strong results. To date, we have 24 publications, peer-reviewed and publishing in scientific journals, showing the value of DiviTum. The majority is within breast cancer, and if you should summarize the results, you could say it's prognostic in the local stages for recurrence, and in metastatic cancer for progression and overall survival. And when we have had access to multiple samples being able to follow the patient over time, we've shown that we can provide feedback quickly on treatment efficiency, which is the application we are commercializing. On top of that, we also have done health economic publications showing the value of the product, as well as oncologists have created editorial articles summarizing the value within the breast cancer area, where we come out very positive. These collaborations has been done with some of the leading academic institutes in the world who has performed the actual study and is the author of the publication, which is important for us because that's an opportunity for us to get the message out in this important target group of oncologists. Could mention Washington University and the Mayo Clinic in the US, for instance. Both have done several trials, as well as Dana-Farber and Johns Hopkins, all very well known in this area. And in Europe, we worked with Karolinska for several trials. Same thing with the Protein Institute in Italy and the Big and IBCSG, two breast cancer groups in Europe, covering entire Europe. So very happy for these collaborations, and it makes us the ability to get the word out in our key stakeholder group, you could say. And behind these academic institutes, you have the actual key opinion leaders that sits in the organizations that we would like to impact. Dan Hayes is one good example as the ex-president of ASCO, ASCO being the #1 cancer organization with the biggest yearly meeting that gathers up to 40,000 oncologists. And he was significant in the trial that led to our 510(k) clearance. So we have great collaborations with him. And same thing with Matthew Götz, Mayo Clinic, that also sits in the guidelines committees, both for NCCN and ASCO, which is also important to have the impact to get the inclusion in the guidelines. And of course, having the key opinion leaders that others listen to is essential for us. Market potential. We've broken the market down into 3 tiers initially. First, the #1 launch will be on the US market, followed by Europe, and then in Japan. If you look at US, we have estimated the market size based on the market research we've done that indicates a price level about $400 per test after we have had several advisory boards with the payers. And also, when it comes to the usage, which is now covered by our intended use with the serial testing up to about monthly initially and quarterly after the first 6 months, times the number of patients living with this disease. In Europe, we're focusing on the top 5 and the Nordics. Significant potential there as well, although slightly lower than US due to lower price levels. And the third market is the Japanese market, where the price levels is somewhere in between US and Europe, according to our market research. So this boils down to about $500 million per year in market potential for this first application, metastatic breast cancer. But we have the ambition to widen the use outside of the metastatic breast cancer, and the first step then would be locally advanced. as the same clinical unmet need exists there when patients need to be monitored, and the treatments that we have such great results with are moving into earlier phases of breast cancer. And outside of breast cancer, we believe we have some great opportunity in metastatic melanoma, for instance, where the treatments are, patients are being treated with immunotherapies, and we have, together with Karolinska, shown great results in that area as well. Outside of another area we are also looking into and are active within are pharma collaborations, which we are looking to expand. Currently, we're doing collaborations with pharma when they're developing new therapies within cancer. We've been strong also here in the CDK area, where the type of treatments that are being used within breast cancer. We have now currently 9 agreements on different levels of commitments, the highest level being master services agreement, where we do several projects together with pharma in order to support them developing new therapies. This is a great way for us to reach out to patients and develop new products quickly and with support, financial support from pharma. So we're looking to expand this, and we also have people with great experience within this area within the organization. So if you look at the US specifically and the plan to enter the US market, we have established ourselves in San Diego, and a key part of that strategy is to offer the product from our own Biovica operated lab. There are several advantages, and there are also several success stories of companies within diagnostics who has followed this path, and it's an opportunity that exists in the US that we would like to take advantage of. That allows us to have a direct contact with some of the most important key stakeholders, such as the patients and the physician and the hospitals, but also the payers and the reimbursement system, so we can navigate our way through to that. This also allows us to cover the entire country with a smart logistics solution. We can serve the entire US from our San Diego lab. More long term, this will also give us a lot of important data, both commercial, and that means that we can improve our targeting and sales process, but also patient information that in combination with the sample biobank that we will build up with the informed consent that could be used to more quickly develop new product to meet new unmet clinical needs that we can define. So this strategy has a lot of advantages, and the status right now is that we have established the lab. We have the staff in place, including the medical director, which is essential for being able to serve the market. And the equipment and the quality system is in place, and we are now validating the product. We'll be submitting our application soon, and within 4 to 6 weeks, we expect an approval for CLIA certification. We will also build up our sales team. We will start small with a number of sales rep of 5, but with smart targeting especially the ones that prescribes the largest volumes of these treatments that we are looking to monitor. We can, with a small team of 5, cover 10% of the oncologists, but 50% of the prescriptions of these CDK4/6 inhibitors. And we also believe that way we'll reach the most patients that will have benefits of our product. We'll also utilize the fact that we have a strong network with NCI and NCCN designated cancer centers. There's 71 of them in the US, and you could say that's the top tier of cancer centers that others follow. And those are the ones that we have been collaborating with in our clinical study program. And of course, that will be the first customers to target going forward as well. Reimbursement strategy is, of course, a key success factor on the US market. We are also, here's where we really will benefit from the investments we've done in our clinical documentation. Initially, we will do, as you have to do, there's a defined price for that as well. When you're not included in the reimbursement system yet, you start with a miscellaneous code, and then you submit claims with a medical necessity support. That's basically a summary of the clinical data supporting the value of the product. So here's where that data is important. In parallel with that, we will also start working with getting coverage, coding and coverage into the system. And the most important area for us there is the 50% that is covered by Medicare. In our patient population, quite a lot of them are covered by Medicare due to the age of these patients that get metastatic breast cancer. In parallel, we'll also work with the private system, and we will initially, as I told you, also focus on the relationships that we already have in order to establish agreements so we can do direct bill and use them as third-party references, which is the middle sector. We expect that to be about 25% of the sales or of the market. And then the last one is the private insurance company that we will get coverage over time. And one important milestone in order to achieve that is to get guideline inclusions, which we also will submit and work as soon as we're on the market. In order to do this, you need to have a strong team, and we have put that in place. If you start with the US organization, we have Warren Cresswell that has experience both from Dako, where he was responsible for commercial areas with US and other territories. Dako was active in biomarker testing and oncology, so it fits very well with what we're about to do here. He also has experience from Prometheus, a Nestlé-owned company that was active both in diagnostics and therapies, and were able to develop that successfully and divested. I was in the GI field, and they operated a CLIA lab, so also very relevant and similar experience. He has recruited Kenan Richards, who has a background as sales director and managing a successful sales teams, and he has the same role here at Biovica. Henrik Winter could also be mentioned. He's the one that is behind our pharma collaboration, and he has had similar roles at both Immunovia and Dako, where he successfully developed their companion diagnostics area. Same thing goes with the board of directors. Lars Holmqvist, the chairman, active in diagnostics since many years. Quite a few success stories, including Dako, that was acquired by Agilent. He also is part of the board of directors for Tecan, the big instrument manufacturer within diagnostics, for instance. Could also mention Marie-Louise, an oncologist from within the breast cancer area that also now is in the pharma industry and was part of the Novartis team that developed the CDK4/6 within the metastatic breast cancer area. So she has very relevant experience. So to sum it up, we have a very, very unique and interesting product that can meet a clinical unmet need, a very important one for both patients and healthcare providers. This is something that also has been acknowledged by some of the leading key opinion leaders within this field, and together with them, we performed several collaboration and clinical trials that has generated data, evidence of the value of the product, and publications proving the value. That will be the foundation for the commercialization activities and to generate demand and clinical uptake and inclusion in the reimbursement system. Our first application is within metastatic breast cancer on the US market. We already have the 510(k), and we're now continuing with our preparations. The CLIA lab will be an important milestone before the launch of the product on the US market before end of this year. And milestone coming the years to come is the application for PLA code as the first step to get into Medicare coverage, which we expect during 2024. And by 25, 3 years after the launch of the product, we expect to have realized 15% of that market potential of the product in terms of revenue. And when it comes to Europe, we will launch in the first country starting early next year through a partner. So we're in preparations for that as well. Yeah, to sum it up, we have a really important product that meets an important need for patients and for healthcare providers. And I'm convinced that that will also generate value for our shareholders. Thank you.
Okay, thanks for the presentation. Let's move on to the questions. And I mean, if we start on the 510(k) clearance and the process to move on to get the test commercially available, you mentioned the certification of the lab. Is there anything else that you're working on, or any other milestones that you'll have to achieve before you can start to sell the test?
Yeah, that's the recruitment of the sales team. We have been put that on hold. We have a strong network within that area from the past, but now with the 510(k) clearance, that because we don't have salespeople if you're not allowed to sell.
Yeah.
Yeah. So putting that team in place, that's an important milestone to look out for as well. Yeah. That's and then we will also recruit the billing market access function. So we'll have distributed sales organization and a central billing and reimbursement organization.
Okay, and I think you mentioned the CLIA lab where you expect to get the certification in 4 to 6 weeks. Can you just tell us about that process?
Yeah. So we're actually we're in the end of the preparing the application. So what you need to have several things in place. You need to have the facility. You need to have the instrument, including the serial numbers, because that's part of the application. You need to have the staff with the right experience documented, and you need to have the quality system, and you need to have perform tests with the test showing the data. Similar to the performance part of a 510(k) application, but yeah, it's less. The 510(k) is a lot more effort, so it's more straightforward and less work. And also, the review process is a lot less. So we're about to finish the last performance studies and put the application. Finalize that and submit it by end of this month is our ambition.
Okay, and during your presentation here, you mentioned the market potential, and just based on the approval or the clearance you got from the FDA, are you now able to address the entire?
Yeah, that's a really good question. So when we did the market potential research, you do a lot of assumptions, and two key assumptions was the patient population, and that was verified, hormone-positive metastatic breast cancer. And the other key assumption was the testing schedule, that serial testing with the same type of frequency that we have assumed. And that was also part of the intended use. So we're very happy for that. But it's also, it makes sense because we had data supporting that.
Okay, and I think we have time for one last question, and that was just on the European market, where I heard you mention that you were going to launch with a partner. Can you just tell us about what kind of partner and where you are in that process?
So we've been looking for partner. We have different strategy per market in Europe because it's the same regulatory approval, but it's different reimbursement system and go-to-market processes. So we won't invest in building our own organization in all those markets like we do in US. So in the first market will be with a partner, and there are some key parameters that we look into when selecting a partner, that they have the network and the history within the oncology area, being able to address the oncologists, and to be able to provide lab services to provide the analysis. Those are two.
Okay, I think we'll stop here. So I'd like to thank you for participating.
Thank you.
Okay, welcome back to our next presentation. My name is Jacob Lemke, healthcare analyst here at ABG. And next up, I have the pleasure to welcome Boule Diagnostics and their CEO, Jesper Söderqvist. Please go ahead.
Thank you very much, Jacob. Very nice to be here. So I'm the CEO of Boule Diagnostics since a little bit more than 2 years. So Boule is a supplier that provide hematology diagnostics to the decentralized segment, both in the human and the veterinary market. We have a very nice business model where we place instruments that use consumables for the lifetime of the instruments. And thanks to that and a large installed base, we have a large portion of recurring revenue. And today I will talk about how we develop the business currently, and also, of course, very importantly, the investments we're doing in the new product platform to secure the long-term growth and profitability of Boule. So Boule is a key player in the niche of decentralized hematology. If you look at the overall hematology market, it has a market value of around 80 billion Swedish crowns. And about a tenth of that is the decentralized market. And in the decentralized market, the physician office lab and laboratories using benchtop analyzers. And the benefit of that is that you can get an immediate test result, so the clinician can consult the patients at the point of visit of the patient. The reported growth in the decentralized segment is quite moderate, but our experience is that in the markets where we are active, we actually see a higher growth. And if you look at Boule historically, we have managed like a 10% year-on-year growth before the pandemic. And during the pandemic, of course, we had a significant loss in revenue. I'll come back to that. But also after the pandemic, we have now seen that we have that we are growing faster than the market. And the last reported quarter, we had a 14% organic growth. So we are focused on the decentralized market. Another way to look at the market is to divide the instruments in 5-part and 3-part instruments. Boule is active in both segments, but the core of our business is in 3-part analyzers. And if you look at the number of analyzers that was sold last year in the overall hematology market, about 20% of the analyzers was 3-part and 75% was 5-part. So with the new product platform that we are developing, we will be able to better penetrate the 5-part market, which will fuel our growth in the future. Last year, about 10% of our business was also in the veterinary segment, and that's a market that has grown faster than the human market, in particularly during the pandemic, where a lot of families during the lockdowns acquired the companion animals. So Boule is unique in the sense that we are covering the entire value chain, and we provide quality through every step of the chain. We both develop and manufacture instruments as well as all of the consumables to do a hematology test. We have a product portfolio of both 5-part and 3-part instruments, and also a product for the veterinary segment. The 5-part instruments that we have today are entry-level instruments that is used for kind of lower volume testing, whereas our flagship products are in the 3-part segment, where we have unique features such as the very compact autoloader, which gives a walk-away solutions for mid-size labs and mid-size hospitals, as well as we have many different ways to aspire blood. And a unique feature is the MPA, so micropipette adapter, where you from a single drop of blood from a blood stick can do a complete blood count. The consumables that is used with our instruments are tied to our instrument through an RFID security system. So that secures the quality of the diagnosis, but it's also a way to secure that the revenue we get from the installed base is really using just the Boule proprietary reagents. Thanks to our quality perception and also our manufacturing capabilities, we also have a business that we refer to as OEM business, where we provide white label consumables to other hematology providers. So if you look at our business model, this is a razor blade business model, it creates a global reach thanks to a that we're using an indirect sales model where we sell through distributors. The distributors do both marketing, sales, installation, and service. In order to make sure that we work closely with these distributors, we also have local staff around the world in key geographies to ensure that we work closely with the distributors, we understand the markets, we understand the business dynamics, we understand the regulatory requirements and reimbursement. And also our local staff also work with our distributors, for larger tenders. We also have a unique multi-brand strategy where we sell the instruments to several different product brands. So we have 3 very strong product brands, 2 for the human segment, Medonic and Swelab, and Exigo for the veterinary market. Thanks to that, we can better penetrate the market, and we can work with several distributors and parallel sales channels in key geographies. That has proven to be very successful for us. If you look at a large installed base and the consumables that is used with our instruments, about 140 million tests are done. And if you combine that with also our white label sales to other hematology providers, the total value of sales of recurring revenue is about 60%. So I think that's a very great stability in our business. And I think that is best illustrated if you look at this graph, where you can see quarter by quarter, the blue bars are the number of instruments placed in the market. The green line is the rolling 12-month revenue from instrument sales. And you can see that is varying, and you can see a rapid drop there in the second quarter of 2020 when the pandemic hit the world. And then we have recovered the last 6 quarters. But if you look at the red line, that's the rolling 12-month revenue from consumable sales. And you can see that even if we have fluctuations in the number of instruments we install in the market, we have a steady growth of recurring revenue. I think that's a key strength of Boule. And we have shown now that we can grow faster than the market, both before the pandemic, but also post-pandemic. We have now seen that we recover in the markets over the last 6 quarters. And also the last quarter, this second quarter of this year, which is the last one we reported, we also hit a record revenue. So you can see here that now we are back at the pre-pandemic levels. And that's also reflected in if you look at our financials, you can see that we have now, in particular in last year, seen a recovery of the demand. And we can see that all our product lines are growing. And also during this year, we have seen a growth in all geographies except for Eastern Europe, where we're impacted by the war in Ukraine. However, you can see that our profitability has been pressured and impacted by supply chain issues, and I'll come back to that. So during the last 18 months or so, we have spent significant amount of money also buying more expensive components on the spot market to maintain production, which is more of a temporary nature. But let's look at how we are developing our business. So as a quality supplier as we are aiming to go from being a system provider to be a solution provider. And we're doing that in several ways. So when the pandemic hit in the beginning of 2020, we couldn't travel, we couldn't see customers, we couldn't visit exhibitions. So we felt that we need to start interacting in other ways with the customers. And we need to do it at big scale and very well organized. So for that purpose, we created Boule Academy, which is an initiative to share and grow knowledge among all our stakeholders. And that has proven to be very well received and appreciated by the various stakeholders that we have met in this way. So we have a lot of seminars, both for our distributors but also for end users. Last year we held 17 educational webinars, and actually today we have a webinar for veterinarians how they should interpret the testing results that our instruments provide. And later this month we have a seminar on tender management for the distributors. So various ways to help create value for our distributors so they can make it easy and to sell our product and sell more of our products. Another important initiative, and that is part of the development of our new product platform, is to have connected instruments. So we're developing a cloud-based infrastructure to enhance the value for Boule users. And that could be distributors, it could be lab technicians, it could be lab managers. Today our instruments are connected with the laboratory information system, interchanging patient data. But with this new cloud infrastructure, we will be able to connect the instrument and look at the instrument data. And that we will provide, initially service and remote service and those type of services. But as this is a cloud solution, it will be very easy to add on additional functionality and more value-added services. This is part of our new platform development, and we will launch this to select distributors early next year, so that we can learn and gain experience of this type of products well ahead of time when we launch the new instruments the year after that. So let's look at our new platform and how we're developing the next generation hematology solutions. Of course, we will bring a lot of experience from application, but also technology and production and service experience into this development to make sure that we can develop the best system on the market. We have 4 themes for our new development. Clinical value, which is about providing the right parameters. But it's also how we optimize and present the data, so to make it easy for the clinicians to interpret the data. We talked about that there multi-parameter testing, that more and more of the testing, they want to see more data on the white blood cell population. But we'll also add measurements of immature red blood cells, so-called retics or reticulocytes. The other theme is related to versatile use, and that alludes to both where the instruments are used. So the decentralized segment covers everything from a fancy physician office lab on the east coast of the US to a vårdcentral in Östergötland, or to a very busy clinic at the rural area of India, putting a lot of different types of stress on the instruments. The other way we look at the versatile use is having different methods for aspiration of blood, using open, closed vials, but also that we provide this autoloader, the walk-away solution, so that we can target the higher volume testing segment. And also taking our unique feature that we now have on our 3-part system of the MPA, where you from a single drop of blood from a finger stick can do a full CBC, also to the 5-part instruments. Then Boule is built on a brand of quality. So the instrument uptime is, of course, of essence for our development. Make sure that we continue to provide these very robust and reliable instruments that can work in very harsh environments for many years. So selecting the right technology, selecting the right type of components, but also with a connected system, we can also ensure our uptime and provide proactive maintenance, etc. And the 4th theme is, of course, the connectivity, where we see that all of our instruments will be connected in the future. So on this new product platform, our first release will be an advanced 5-part system with an autoloader, targeting the high volume testing segment in decentralized testing. So that's going from the smallest clinic, but also up to mid-size hospitals and laboratories. That will help our growth, since that is a bigger portion of the market today, and it's a market that grows faster. Following the 5-part instrument, we plan to also release a 3-part system based on this platform. With that, we will have an entirely new product portfolio, and that will really help grow our business going forward. And of course, we will also develop a veterinary system, but that's a bit later. So if you look at where are we now with this development, it's been going on for a few years now. So this spring, we placed our first instrument at the clinic, collecting clinical data. This data will be used to fine-tune the algorithms that classify the blood cells during the fall. And then in the beginning of next year, we will start the clinical validation and clinical testing. That will generate the data that we will use in the technical files that we use for the regulatory submissions that we are targeting towards in the second half of 2023. After that, after we file, then the review time with the notified bodies in Europe and the FDA for the 510K in the US could be anything between 9 and 14 months or so, was the estimates this summer, which means that we will have a time from we file the regulatory submissions until we actually can start selling. So we'll use 2024 to prepare market access, and we hope to start to sell instruments end of 2024, and we will see sales volumes of significant nature in 2025. During the clinical validation and testing that we will do next year, we will also use that to collect testimonials, user stories, etc. That will be used when we launch the instrument going forward. So with this new development, I think we will take a significant step towards growing the business. We have set an aspirational target of reaching 500 million tests from the 140 million tests that is done on our instruments today. We are on that journey. The last 2 years has been tough, and particularly even if the market demand has come back, we have had some headwinds, particularly related to the supply chain issues with the component shortages and logistics. And that's something that we managed quite well in terms of business continuity, but it has pressured our gross margins. We've also been impacted by geopolitical instability, in particular the war in Ukraine, as we had significant growth ambition for our Russian subsidiaries. Our products nor our customers are under any sanctions, but it's very, very difficult to do business in Russia today. So, I mean, we don't have high hopes for that business going forward. And then, of course, we see that there's a shift in regulatory landscape, which I think will be beneficial for a quality provider as us long term. But in May of this year, the new European regulatory framework, IVDR, came into effect. And we have spent the last 2 years investing a lot in our quality management system and in updating the technical files of our existing products. We have that behind us now. And then I don't know if you know, there was a press release last week. We also had an FDA inspection in the US, and they found some deficiencies. So we now need to shift some of our regulatory efforts towards kind of improving our quality management system in the US. So if you look at our operational priorities to manage the situation, the industrialization and getting to the first regulatory submission on a new platform is, of course, of essence. We're also looking at different ways to improve our profitability. And of course, managing the supply chain is one thing. And it looks slightly better now going into the second half of this year compared to what it was in the beginning of the year. We have also raised prices towards our customers in a few steps, and we did a larger price increase mid this year, which should have a positive effect on our financials in the second half of this year. And then, of course, we have a number of initiatives, looking at our working capital, trying to optimize inventories, which is, of course, very challenging now when there's component shortages. So you need to kind of balance that. All in all, I would say that in this kind of quite volatile market that we now operate, it's very important to be agile and flexible and have a team that is very, have a customer-centric mindset. It's really required to both manage the current business and, of course, also to bring, completely new platform to the market. So we're working also with our, increasing our capabilities internally. But I feel, that we are in a good way to bring new products to market and secure the long-term growth and profitability of Boule. To make sure that this happens, we have an experienced team that have done this before in various healthcare companies. All of them experienced professionals with a passion for our business, but also guided by a very seasoned board, I think, with the right experience in the phase we are in now, and very relevant experience. So with that, I would like to conclude that we are looking forward to develop our business. It's been 2 tough years, and we have some headwinds that we're currently managing. But I'm very optimistic that we are now taking the right step to build a stronger Boule and have a very competitive portfolio going forward. Thank you very much for your attention. And with that, I open up for questions.
Okay, thank you very much for the presentation, Jesper. And moving on to the questions, and I think we'll start on the new product portfolio and the launches you have ahead. And if we start on the cloud solution, just can you talk a bit about sort of what sort of opportunity you see in that to further capitalize on your already very large installed base?
So the cloud infrastructure is very much future-oriented, and our current installed base is not, per se connected. But the first release will actually you can upload data, through USB or other ways up to the cloud, and you can get some services in terms of managing performance of the instruments, checking calibration, etc. So it is very much future or towards the future and having everything connected. But there will be some benefits also for the installed base. But I think that is it's really a future-oriented product.
Okay, and on the instrument side, obviously a big move to get your own 5-part system that's going to unlock a new part of the market. But what is the sort of readiness of your current sales partners to accommodate that and sell that?
I think we already have a 5-part product in our portfolio. It's entry level. I think what is really missing is this autoloader, that walk-away solution for the higher end market segment. So our partners, are in general, they have a wide portfolio of instruments, to the laboratory. So I think they are very well equipped, and they really want us to come out with this product. So I think the maturity and the readiness is very high, I would say.
Okay, and as you mentioned, the sales has recovered quite strong now following the pandemic. But as you say, operating profit has been held back by complexities in the supply chain and higher component prices. How has this situation developed now over the last months? And I also heard you mention that you have done price increases recently, for example.
Well, these are external factors, and I don't really have a crystal ball. I thought at the end of last year that things would, improve going into this year, and then we saw that, the spring actually looked, it actually became worse for us. Right now, I think it looks promising, and I think it's all of these, disturbing factors in the supply chain. I mean, at some point, there are disturbances that will go away. I mean, every crisis go away, right? So I think it will improve, and it's of temporary nature. And if we have weekly meetings looking at the availability of components, and right now it looks quite promising for the fall. But you never know. It's very short notice, and that you get the information. But I'm optimistic.
Okay, sounds a bit promising at least. And then just on the inspectional observations that you have gotten from the FDA that you mentioned also. Could you just tell us what this means and what sort of implications there are currently?
So, we had the routine inspection by FDA this summer, and they review our quality management system and our processes and products. And they had some observations related to not the products, but the processes. So they issued what they call an 483 form after the inspection. And we have responded that we are correcting those observations. And if we manage to do that, nothing will happen. It already now it's not limiting us in any way. And if we can correct that in a satisfactory manner, nothing will happen more than that the FDA will do a reinspection next year. If they're not satisfied with our corrections, that could lead to a warning letter. But I mean, we are working towards making sure that we correct for this.
Okay.
And I would say, there was nothing about, it was not related to any kind of, patient safety or product quality claims. It was just related to our internal processes and how we work with CAPAs and complaints, and very much not so much how we work with it, but also that we actually document how we work.
Okay, understood. And just a final question. You mentioned here the goal towards achieving 500 million tests. I mean, that's a quite substantial increase, but can you tell us about what sort of time frame and how achievable that is?
I mean, I definitely think it is achievable, but it's an aspiration, and we haven't put a date towards it. But I think we want to make a difference. We want to have an impact, and the purpose of is really kind of helping people with diagnostics. With the new platform, with better penetration of the 5-part market, it will take us, could likely double the business. And then on top of that, we need to have some other initiatives, which I will talk about later.
Okay, I think that is a good point to end this presentation. Thank you very much, Jesper.
Thank you all for listening.
Hi and welcome everyone to today's presentation of Eurocon. My name is Stefan Knutsson. I'm an equity analyst here at ABG covering the company. And with me today I have the CEO of Eurocon, Peter Johansson. Welcome, Peter.
Thank you. Okay, thank you for coming here, and I suppose you can set questions afterwards, yeah?
Yeah.
Okay. I will present Eurocon then. Eurocon, it's a company which have a couple of daughter companies, as you can see here, but everybody are owned by us. And we can see the spread and the locations for all of the companies here. We have spread out over the years in Sweden now, so we are around almost 300 persons today, and we have at least 100 in the south part of Sweden as well now, which is very important for us. So we are looking to expand. Even if we are looking at the northern part of Sweden, we also look very hard at the south part of Sweden. Our vision is to create a company that we will be increasing our turnover year by year in 10%. And we also like to see that we have a good quality, and we will continue with our work with have a high quality and a high competence out at our customers. That's a bigger part of it. But also to increase our profit with 10% every year. That's also very important for us. Our assignments. We are very keen on having our services to the customers, as we start often in projects where we help the customer to make calculation before they start the project, also when they start the project, and after when the project is over. So we will go the whole way during some projects, which is very important for us. And that's explained why we have tools and such things, which I will come to a little bit later. I will also show you what the industry we're working in. Of course, the pulp and paper industry and the forest industry is very important for us. That's the biggest one today. We have approximately 55% of our turnover comes from that kind of customers. Then we have we have the mining industry, which is growing. We had a push down a couple of years ago up in the mine fields, and which is covering back at the moment, so we are very happy about that. Energy is also something we work with, and chemistry, so we are in the whole area here. We also have a product which I will come back to a little bit later. But we are focused very hard on the industry, and we have a very high competence on the industry with all our 280, I will say 290 more or less today. And we have a flexible organization which can work together with very tested tools and everything, which we have tested for a couple of years now, and it's working great for bigger projects where we can have people joining us from the whole Sweden when we do projects in Kiruna, for instance. And of course, the same way if we do projects in the south part of Sweden. We have a long list of business and sustainability here. New tools. We have created one new tool, and we have an old one called SiteBase, which is very important for us, that depending on that we are working with that one and create a more flexible and more profitable projects for our customers, which is also very important for us. We also have another tool now that we can support and project manage and make sure that the customer's project is working as planned. We have a database which are taking care of all the administration for the project, and the customer can consider who's going to see things and what we're going to take out of that one, and make sure that everything is in order in the project. But we also have a lot of more things, but that's the main issue for the moment, I think. Our business is spread around Sweden, as I told you a little bit earlier here. And that's also very important for us, because we need to be close to customers, and then we can work, as I told you, more with people coming in the project from anywhere in Sweden, which is very important. We also have some companies that we work very closely, which is also important. And we can also see that our products are very important, that our competitors are also recommending them to our customers, which is working very good for us. We have a long history and profitability and growth with high dividends of the share. It's very important for us as well, of course. We had a push down during the pandemic, but it's over now, and we are working very hard, and we can see great figures coming up again. And we see no reason to take down the prognosis and such things that we have today. So we still will keep our mindset to growth as our goals are. So we like to have the 10% revenue every year, and then we would like to have 10% even in the margin, which is also very important for us. If we look at quarter number 2 for this year, we have had a little bit pushed down, depending on that we have had much cost depending on the personnel, depending on that they needed physical meetings and such things, and education and other things that we would take care of during the period. And that was very important for us as well. But that's over now, and we don't need to take any more cost of that one for the rest of the year, I think. So that's very nice. So you can see that we are still having an increased net sales. EBITDA is also a little bit higher, but that should be a little bit even higher if you haven't had that much cost during the period. I will take the next slide. Here I have put some, you can see what we are doing. We have a revenue growth of 21%, which is not coming from any purchase of company or such things. That's just original growth. We have an EBIT margin, 12.7, which we are also happy with. And we have a result, an EBITDA of 21, which we are also very happy with. And if you look at the full year, last year was 27. And it's quite close to when we have it now in the half of the year. If you look at the earnings per share, you can see that we have 0.4 almost now, and we had for the whole year last year we had 0.46 SEK, which is quite nice as well as we see it. So it's working quite good for the moment. We see no customers complaining about the situation depending on the war or depending on changing governments now. Depending on everything is going to get more expensive, and the delivery times are much higher now than it was before. But we can see here, if you look at that, I should have that one, that the growth is still, of the revenue is still in there, and we hope that it's going to stay there for a couple of quarters. Here you can see what I was talking about during 2001 and 2002 and 2019. We are up again. We have the growth of the personnel and the net sales. So we are very happy with this one. We are back on track where we were for a couple of years ago, which is very convenient for the moment also. This is most fun. I showed this last time I was up here and talked about the company. It's a tremendous big investments going on up in the northern part of Sweden. And here are some of them. And this is not figures from our point. This is taken from the EKN here in Sweden, which is different. They have nothing to do with us or LKAB or something. They're just putting up projects which they have defined during the period. And it's big companies. But the next picture, I think it's more important for us. These are the customers of ours, and these are the projects which you can see marked here, where we are working today. So we are working with Hybrid, we are working with Remap in LKAB, we are working with SCA and ST1, and we are working with Metsä and SSAB, Senius Fertilizer, and RISE. RISE have a quite good reputation now in Norway. They are in northern part of Sweden. They have started to build their facilities of having a new starts company coming in there and starting up. And we have also achieved that order to make sure that we can build that thing up in Örnsköldsvik, which is also very important for us to make sure that we keep our knowledge and keep our process knowledge on a high level. So I would say that this looks very nice for us for the moment, and we are very happy to see that we haven't been hurting anything from the energy or the war that Russia started.
Yeah, okay. Perfect. Thank you very much, Peter, for the presentation. I can start with a question on this previous slide here with the green investment wave in the northern part of Sweden that you describe. I suspect that it will benefit for you for a number of years. But how, if you like to forecast a bit how it will develop, when do you see them reaching peak investments and how far are you from there now?
Yeah, I will say that some of them are still going. I mean, SCA have started a very nice projects that we are finishing up during this end of this year and beginning next year. We know that they are planning a lot more. LKAB have started. They have got the all permits to make sure that they can start the remap project in Luleå. And they are searching for everything up in Kiruna, Gällivare as well. So I think they will have a new message from LKAB during the investments up in the minefields during the end of this year. But they have started it. They have a prognosis now how much it will cost and such things. And we have been involved with that. And then if you look at Arise, I've already told you, we are working there. Metsä, Arvin, I'm working with today. They are finalizing the project during this year, hopefully. But it seems they have some small delays in that project. And Northvolt we are not working with. But that's more or less the only one we are not working with. Senius Fertilizer, they are waiting for the government to make sure that they got all the permits to make sure that they can start building. And we are having offers there, and we are having 2 or 3 persons in there. Roberts is in charge of that. And they are continuing in a hopefully good way. So the only one on these pictures we are not working with is H2 Green Steel in Boden and Northvolt in Skellefteå. Northvolt in Skellefteå will be ready almost soon, hopefully.
Yeah, perfect. And you mentioned permits. We currently are in the middle of an election in Sweden. It seems that we will have a right-sided government, although it's not 100% guaranteed. Will it affect you in any way? And is there something that you wish that the next government will do better than what we have seen the last couple of years?
Yeah, we hopefully, because of course we will benefit if they get the permits earlier, and it will not take 1.5 years to have all the permits that you're going to have. So that's of course very important. And in all those big projects they have up there now, it's very important that they do. Of course, they should do a good job. And but I'm not worried about that. They are doing a good job, but they have to be more. It have to be faster, because it takes too long time today. So I hope very much that they can have all the permits which they need a little bit faster.
Yeah. So shorter admin.
Yeah, sure.
And if we look, you mentioned that you have a good traction on profitability with increasing margins. On the other hand, we do still have a high inflation rate in Sweden, and I suspect that employees will ask for a wage increase next year. And although the northern part of Sweden have not seen electricity prices rise so much, how confident are you that you can maintain a good balance between the price you offer to your customers and the increase in
Yeah, I think that the customer will know about our problems, and of course if we have problem, our customers going to have problems as well. But I'm quite sure that we can handle that. It's going to be tough negotiation both with the customers and with the personnel, but we had that areas before, so I'm not so worried about that. But we would like to see the prices on the electricity and all things coming down a little bit. So I hope they will stop the war to start with. So that will be good, but it doesn't solve everything, I think. But I hope it's going to be in a good way.
Have you seen any indication on like wage demands for 2023 yet?
No, not yet. I haven't heard anything in the projects we are working in today.
Perfect. And then I would like to discuss, you have a software offering in Sitebase.
Yes.
That you have gained some traction. Currently it stands for 5% of total sales of the group.
Yeah.
But you have turned around that business. It's profitable now. It's accretive to group margins. Can you just share some more information on it and the size of customers that you sign now, and what is the potential if we look 3-5 years ahead?
I think the potential is quite big for Sitebase for the moment. We had a tough period, and we have done a very good job to make sure that it's coming up as a normally IT company again. That slipped for a couple of years, but it's back on track, and I'm very happy with the result of that. And I can see also we have taken in Symmetry, for instance, to help us out a little bit on the sales, which they are working with now, and the result is coming small in today, but I think that it's going to be more in the future. So we are very hopeful for that project now. I can say for a couple of years ago, we were prepared to sell the company, but today we are not prepared to sell it.
That's good.
Yeah. And also, as I told you a little bit, we have taken out another software, which is more a software structure in the database to handle big projects, which we are quite happy with now. And also our customers are very happy with it. So we have good references, we have made very good progress, and we are very, very happy to have that in projects.
Do you have any reference project in mind where you can, for example, say that how much efficiency gains that the customers see?
We don't have the figures on that one, but we can see that the ordering and the customers talking to each other, and our customers, we have not done any sales in that area until now, but they are asking for it. And I mean, we have created this together with SCA. And they are using it in every project. And now we have 2 or 3 more customers in phase to make sure that this is happening. And we are administrating the full project all the time.
And if you are successful with the sales of licenses, for example, for Sitebase, where do you see, I mean, if you see a typical consultancy margin between 8 or 10% EBITDA margin, where can a business like this generate?
I think we should be around 20%, depending on that. We need to do more and more in the project as well. We have to upgrade it, and we need to make services, and we have to have a lot of turnover of people and education and such things. So we need to be around, as an IT company. They are around 20% margin, and it should be there if it's a good working business.
Perfect.
So hopefully we're going to end up there also.
Perfect. And lastly, in the Q2 report that you released a month ago, you were quite positive that you could maintain a high utilization rate. Now we have seen a bit more time going here in the start of the autumn. Are you still optimistic? And I mean, we have seen some KPIs of suggesting a slower economy into next year. But what is your feeling on your clients?
No, I'm still positive about this. I think we haven't seen any situations that are handling our projects bad. Of course, it's a longer delivery times on material, but so far they have managed to settle those in the projects. And also in the projects which is coming in, of course, they take height for longer delivery times. So we don't have seen anything which will take this out. And I mean, we are more or less fully booked for this year. So I don't see any problem for this year. Hopefully we're going to see even more coming in here in the less in Q4 and such things.
Perfect. Then I would like to thank you, Peter, for coming and presenting with us here today.
Thank you.
Hi and welcome to the next presentation. And now we have Maha Energy and the IR manager, Victoria Berg. My name is Christer Linde. I'm working as an analyst for ABG Sundal Collier. Welcome, Victoria, and please present Maha, and then we take Q&A afterwards.
Thank you. Hi, everyone, and welcome to my presentation of Maha Energy. So, as Christer mentioned, I am the Investor Relations Manager for Maha since back in August 2019. And it's been the least, to say the least, 3 very interesting years. We've had both a pandemic and we've seen oil prices both non-existing and very high. And yeah, I'm glad to be here today, and hopefully we will be back to normal again very soon. So today, for those of you that haven't heard of us before, I will present a bit of who we are, what we do, and our assets. And if you feel that after the presentation that you have any questions, please don't hesitate to reach out to me. So the disclaimer, I guess that all of you want to read this in detail, but I'm gonna just tell you that these are forward-looking statements and are subject to change at any time. So, Maha Energy. We are an oil and gas company. We produce, process and sell oil and gas. We are not an exploration company, but an exploitation company. So we look for fields with already existing oil and where we use our expertise and knowledge to enhance oil recovery. So we have a few key strategies in the company. One of them is that we are a value-driven company. So we do not only chase barrels, but we chase value and dollars. So it's always better to produce 200 BOPD at a profit than 2,000 BOPD at a loss. Another key strategy is our three-legged stool, which means that we want to spread risks, both geographical, political, and economic, within at least 3 different jurisdictions. So by the end of 2020, we accomplished that when we added our Block 70 in Oman. We are also a very conservative company, which means that we want to spread our risk across the asset base. So 50% is stable production, which is very low risk, reliable production and predictable cash flow. And 40% is developing assets for turning resources into reserves and stable production. And 10% is near-field exploration. So this may be deeper reservoirs or just near-field exploration. So a little bit more about who we are. We were founded back in 2013 as a private company. We were first listed at Nasdaq First North in 2016, and we were uplisted to Nasdaq Main Market in 2020. So we're currently listed on Nasdaq Stockholm in the small mid-cap category. A few of our main shareholders is Qualitena, which is a real estate company with about 18%. We have a bank in Brazil, Banco BTG Pactual, with about 6%, and our CEO and founder, Jonas Lindwall, with about 4%. So we have a market cap of roughly 1.8 billion Swedish kronor, and our first half of 2022 revenue landed at $54.8 million USD. Today we have about 86 employees around the world, and we have 5 producing assets in 3 different countries. We have 2 assets in Brazil, T and Tartaruga. We have Mafraq Block 70 in Oman, and we have Lake Ranch and Illinois Basin in the United States. We have a 2P reserves by the end of last year at about 37 million barrels and certified contingent resources in Oman of roughly 33 million barrels. So this means we have an organic reserve and resource base of about 70 million barrels. This is pretty good for a junior oil and gas company. And the race now is to convert 33 million contingent resources that we hold in Oman to reserves, which we're about to do as we just started drilling in Oman. Here you can see some of the company's key metrics. You can see on the left upper hand side that we started out with about 1,000 barrels back in 2017 and ended at about 4,000 barrels at the beginning of 2022. We have quadrupled the production and we aim to do that again. And this is primarily through the addition of production from the Mafraq field in Oman. So we've been profitable now for 19 quarters in a row, if you exclude the write-down of LAK at the end of 2020, which was the result of low oil prices seen during that year. And netbacks is what is left after costs and royalties have been paid. And as you can see here, we have a very healthy netback that is today reinvested into our operations. So by the end of 2021, the government royalties in Brazil were reduced from 10% to 7.5% for both of the fields in Brazil. And the new royalties will remain at this level as long as the company is seen as a mid-size company, which means not producing more than 10,000 BOPD on a global basis. So with this high oil prices, the company has a very healthy cash flow. So nevertheless, as an oil and gas company today, we are obliged to make the best effort in doing whatever we can to decrease the operational impact we have on our environment. So in 2020, the company kicked off its ESG initiatives, and our first sustainability report for 2020 was released in 2021. So you can see this, read more details and our reports up on our website. But a few examples here is that we recycle and re-inject all our water except on Tartaruga, where this is not possible. So at Tartaruga, all our produced water is trucked to a licensed and environmentally certified disposal plant in Bahia. All our gas is utilized and we have tight flaring restrictions. So in fact, we hardly flare any gas at all. Gas is a resource and should be treated as such. So in Brazil, we convert and sell about 85% of our gas into electricity and to local ceramic factories. Brazil has developed into a very nice gas market with time, and we are enjoying a significant demand for our gas. So our fields, the T field. T field is located in just near Salvador in Brazil. This is really our cash cow. We have 6 producing wells here today, and we're planning to drill another 3 new wells for 2023. This was acquired back in 2017, and on our 5th production well, T4, which has been on production since spring this year, tested 4,695 BOPD, which was a record well from Maha and ranks as the 3rd best well ever onshore Brazil. So we also drilled T5, which tested 766 BOPD in July. And these 2 wells should help us give that extra capacity to maintain a balanced and strong production at the field. So the Tartaruga field. This is located just north of the T field. We have 75% working interest here, and Petrobras has the remaining 25%. So the 25% that Petrobras have is undergoing a sales process this year, and Maha continues to be interested in the remaining percents. This is a completely different basin than the T field. We have tested the north block of the field with TTG-3 well, and we will now focusing on the south, which the production has historically came from, and where we produce stably from 2 wells. We are in the process of planning for another well at this field, and all our equipment has been purchased already. We're just waiting for a rig so we can start drilling another well there. So Mafraq oil field, our latest asset. This field is located in Oman. We won the bidding of acquire and operate Block 70 Mafraq oil field at the end of 2020. Mafraq is a heavy oil field and was first discovered in 1988 by Shell. This is a very shallow field at only around 500 meters depth, which makes development costs very low here, and drilling wells here only take about 2 weeks. So this field has already tested significant amount of oil. So this is just a classic example of us as a company where we seek out delineated fields and apply state-of-the-art technology to improve development economics. We did contract the drilling rig Gulf 109 to do the drilling on this field. We actually just started drilling on September 6, which was 5 weeks ahead of schedule. We will start by drilling an initial 6 wells to fully appraise the structure and to put the field on an extended well test. So we can figure out how the oil behaves and flows in the reservoir. So the field has 4 prior wells on it already. This is very exciting for the company. The field could contain as much as 500 million barrels of oil in place. And the fact that we do not know today how big this field may be. In August, the company announced it would farm out 35% of the field to Mafraq Energy. Maha will continue to be the operator of the block, but Mafraq Energy will share all past costs and all future ones for this block. And the format agreement is subject to government approval, and this normally takes about 2 to 4 months. Illinois Basin. So this asset straddles the Illinois and Indiana border in the United States. And the acquisition of Illinois Basin was made in the middle of the pandemic and represents our agility to move quickly. We had a strong cash balance at the time, and this was a financially distressed asset with very low risk. So as a company, we're always keeping our eyes open to different opportunities and openings. And this was just like that. We paid a very low price for a very stable and healthy asset. Operating cost in Illinois Basin is higher than in Brazil, but at these high oil prices, we are generating good cash flows. So in 2021, we drilled and stimulated 12 new wells at this field, and the result from this program was a bit mixed. Some turned out very positive, and some turned out a bit surprising. So we're still evaluating today the production from 2021 to see how we can best further and invest in 2023. So a well here takes about 4 weeks to drill, stimulate, and complete. So LAK Ranch. This is located in Wyoming in the United States. The field has been a challenging asset for the company, and due to very low oil prices seen during the pandemic, we decided to shut down this field. It has remained shut in since then. But just recently, we started very low production here to meet requirements in Wyoming. And today we are evaluating different options for this field, including might be a sell of this field. So this is a few highlights over the last 2 years. T4, as I mentioned, tested 4,695 BOPD. We are Nasdaq listed, we're fully financed, and we're fully diversified. As I mentioned as well, we added Oman Block 70 by the end of 2020. And this is very exciting because we have been very dependent on the Brazil production. So by adding Oman and starting the production there will really help us grow and get a more secured production. And that was, I think, more or less everything that I wanted to say today. And thank you. And as I mentioned, that if you have any question at the end of this, please don't hesitate to reach out to me.
Should we take the Q&A?
Bara en liten...
Ja, vi tar paus.
Ja.
Thank you, Victoria, for the presentation of Maha Energy. So we have some interesting Q&A hopefully now.
Yes, thank you.
So if you don't know Maha that well, I think the core seems to be, first of all, Brazil and also Oman. And maybe we should start with Brazil for a moment. You were out recently and talked about that there are some challenges to find service companies helping out with the production. Could you talk a little bit about that?
Yes, of course. I mean, as I did mention, Brazil is really the core production for the company at this time. From about April this year, we had only about 2 wells producing at the T field, which mostly handles all of our production today, where most of the production comes from. So out of 6 wells, only 2 wells were producing from about April due to a few damages on the other wells. So we have a rig contracted till the end of this year to help repair as many and a lot of the as many and as much as possible on the wells that are damaged. So we had a very strong Q1, and we are hopeful that as soon as the other wells are coming back on production, we will see the production rates as we saw at the beginning of this year.
Thank you. Yeah, that is the core to get the production up. If we maybe continue a bit looking at Oman, which is the big new.
Yes.
There you in the latest press release actually said that you were a bit ahead of schedule, if I got it right.
Yes.
Why is that? Why do you have a good progress currently?
Well, Oman, we were a bit disappointed earlier this year with the rig being not the rig that we had on that was supposed to help us on place before was no longer available, and we had to find another rig. So that was meant to be in October, but we managed to get that rig on place early. So we have just started drilling, and we're very happy to be 5 weeks ahead of schedule, and are very excited about the upcoming test results.
And on that, can you maybe guide us a bit on what we will get forward regarding announcement on the results? In the latest press release, you said that now we have done starting our first drilling, but is it more in later this year? It will get more information about that, or when can we expect?
I don't have an exact answer to that just yet, but if the test results will be at a positive outcome, we have all the materials needed, so we will start drilling directly after the initial six wells, and continue drilling more wells after these ones. You recently did this farm down agreement on the Mafraq field, so you stepped down from 100% to 65%. Maybe you can explain a little bit why you did that, and what kind of contributions you see when you do this kind of partnership. Quite early in this process, the board saw a subsurface risk on the Mafraq field, and we decided that we should have a partner that could help us. And Mafraq Energy is an Omani company, and they have lots of experience in the near field. And I think this is also a sign of other companies wanting to team up, that this is a very promising field. So we see this only as a positive thing to help grow this field going forward.
Okay, and you also, it's hard to not talk about oil prices for a moment here. We have had a very high volatility in oil prices if we go back 2 years, and now they're up and they're coming down a bit recently. If you put the oil price into your company, what kind of impact does the high oil price have on your opportunities currently, you think, from a big perspective?
At this time being, we're not seeing the oil prices as a way to either expand or not. We are focusing on the fields we already have at this time. It's very important for us to get Oman started, and but I mean, yeah, it's been both high and low oil prices, and of course it has impacted the company's results, nevertheless. But as today, we're generating good cash flows and are focusing on the growth we do have in the fields.
Final comment here is Jonas.
Yes.
Yes, has been with the company for many years as a CEO. Will leave at some point, and but he is still active as a CEO right now. Nothing has changed there currently.
No, Jonas Lindwall is still our CEO, and Jonas, he founded the company many years ago, and he's very motivated in getting the company in secure hands. So he's not going to leave until we have a new CEO on place, and yeah, he's still in the position that he had before.
Yeah, we will look forward to see who will be the new CEO.
Yes.
Thank you, Victoria, for the presentation today. Looking forward to all the news that will come.
Thank you.
Thank you.
Hello and welcome back to ABG Investor Day. My name is Victor Kruger. I'm an equity analyst. I'm covering Bergs Timber, and today we have Bergs with us and their CFO, Anders Marklund. With that, I leave the word over to you, Anders.
Thank you, Victor, and most welcome to this presentation of Bergs Timber. Bergs is a company with traditions. This year we celebrate 103 years as a company, which is quite respectful. And for most of you, Bergs Timber is a sawmilling company with a base in southern east of Sweden. But since the last 4 years, we have developed the group quite a lot. And we have broadened the product range and going into more further processed products. And I will show you during the presentation what I mean by that. Looking at Bergs Timber, we have an owner company, and we own companies within the wood processing sector. We have a very decentralized business model with independent subsidiaries. We have operations in 3 product areas and also reporting segments, and that is wood protection, joinery, and sawn wood. In addition to that, we also have smaller operations in energy and logistics. We have a growth agenda, and we will go that route by investments in our existing businesses, but also with acquisitions and innovations. Today we have 9 independent companies. We have 10 production sites in the Baltics, Estonia and Latvia. We have in Poland, Sweden and the UK. So we're a very international company currently. We have about 1,000 employees, and our net sales the last 12 months up to June this year was 3.5 billion, with a good profitability with a 15% EBITDA margin. The group has a very low leverage with a strong balance sheet. Our net debt to EBITDA ratios was 0.5. So we have a very strong balance sheet to develop the company in the strategic direction that I will point out today. Today we are addressing a broad spectrum of products. As I mentioned, Bergs is originally a sawmilling company, but today we have products within sawn wood still, but also with doors, windows, cladding, decking, pellets, heating logs, garden products, furnitures, and also house production. And connected with these products, we also have aftermarket services. As I pointed out, we have 3 product areas and also reporting segments. And the biggest one from sales is wood protection. And wood protection means different kind of products that are treated in some way. Typical products are decking, which most of you know what it is and have used yourselves. It's also claddings, and it could be also different kind of construction wood, for example, studs, reglar in Swedish, and also roof trusses, which is takläkt. One interesting area is also fire protection, and you know that the building activity within wood is increasing, and that will also require more fire treatment, and we are one of the actors in Sweden for that currently. Joinery is a segment containing of 3 different product groups. The biggest one is windows and doors, and that's custom-made premium window and doors produced by ourselves and sold mainly in the UK, but also Iceland and Sweden. Lastly, we have sawn wood, which contains our 2 sawmills, one in Latvia and one in Estonia. And we have two smaller operations, as I said, also energy, which consists of pellet production in Sweden and Latvia. And we have logistics, which is the port that we are operating in the UK, just outside London. We heard many years that wood is gaining market share of the construction of houses. And that we finally also can see in the statistics that the house building is more and more made of wood. Smaller houses has historically mostly been built with wood, but now we also see that high-story multi-buildings are also with a wooden frame. And we can see a very high interest from designers, architects, and constructors to use wood as a material. And with new technologies also the last year, that has also allowed to build at least taller houses in wood. So I think it's a great future for wood as a construction, a building material. Not least with the angle of renewable sustainability. This is a quite interesting graph. You can see that the price development of different construction materials, where it's very obvious that the costs or the price for wood has not been that very good and has not been paid to the producers. Lastly, we can see a sharp increase in the sawnwood price, even though it has fallen back from the big highs at the moment. But we see a great potential to gain market share and get better paid also for wood going forward. Looking into our strategic direction, and if you start with the wood protection area, as I said, we would like to increase the capacity. And we are also currently also looking over the product range. We would like to be more into well-paid products, where we see a great interest and definitely higher margin than the more commodity ones like we have for decking at the moment. We also would like to participate in the area also with acquisitions, and not least work a lot more with marketing and digital development. And we are reviewing our business model. How do we sell products, in what markets, what kind of products, and how do we market those? So I think that's a big area for us to improve and also to develop. And we have spent quite a lot of money the last year in trying to find the right tools for the development. Looking into the joinery segment, we have a very interesting concept called timber windows. That's a concept we have in the UK, and that is sales of premium windows and doors to end consumers by a network of showrooms. And that is a very good business model to expand with quite small investments and a favorable cash flow pattern also. To support that expansion, we also look into building capacity and secure supply. And in light of that, we made an acquisition in Poland in July this year. And that was to support the expansion of timber windows and secure the supply. Here we also look into more design and digitalization and the marketing efforts as well. Sawnwood is not a growth area for us, not least that expand the production in sawnwood is quite expensive, as you need a long-term log supply, and if you buy more, you tend to pay more, so the calculation is not that very favorable. Here we concentrate to keep our mills very efficient, to be a low-cost producer, and by that have a good profitability. It might be also possibilities to have further processing in the sawnwood area. For example, going into glulam beams, limträ in Swedish, or CLT, which is a cross-laminated timber, which is an alternative to building blocks in concrete, for example. And not leastly, we also look into innovations. And one example of that we today have invested, not today, but last year invested in a wood tube, which have invented a paper stud, pappersregel in Swedish. And that should be used then in competition and also in complement to existing materials like steel and solid wood. So that has made a great interest in the building sector, construction sector. So we are really looking forward to take that into a commercial phase. I mentioned the timber windows concept that we have in the UK. As I said, it is custom-made premium windows and doors, which you can see some examples on in this picture. Very nice looking. Today we have 44 showrooms around the UK. Out of those, we own 8 by ourselves, and the other parts are a kind of franchise concept. We have a plan to start at least 3 more this year in the UK. And we have just started 2 in Sweden as well, with the same concept, 1 in Saltsjöbaden and 1 in Hovås. So if you have the time and possibility, please visit them. I can really recommend that. As I said, this is a very scalable business model with low investment costs and a favorable cash flow pattern as well. And we are currently looking into taking this from the UK to other markets. We have started in Sweden, but we see the possibility also to engage in other European countries as well. So we are doing that market research at the moment. Looking at our financial targets, we have a target to have a growth about 10% over a business cycle with an EBITDA margin of 9%. And those 2 has been increased compared to the previous targets. We should have a low net debt, and we have a dividend policy also to distribute about 25 to 40% of net profit for the year. And looking at the development the last years, see we have a positive growth, even though it mainly through price increases. And looking at the profitability, that has been very, very good the last 2 years, with a favorable impact also from the COVID situation, with a lot of home improvements that has gained our businesses in general. We have distributed profits according to our policy. And we have, as I said initially, a very low leverage in the company at the moment. We have muscles to handle this economic environment that we are facing at the moment, but also to develop the company in the strategic direction. Maybe a few words about the recent trading. We can see the Q2 that we issued late July this year. It was a very strong quarter. It was the second best ever in Berg's history. We had a very strong performance from sawn wood area, mainly related to high sales prices. We had a strong performance from joinery, and especially the timber windows concept that I mentioned to you, with very high volumes, and that has also been supported by still very good order books. And we have a very good contribution from the pellet business, finally. Last year was very, very tough with a warm winter and a lot of pellets in the market. But this year, with the energy crisis in Europe, many consumers are looking to alternative heating solutions, where pellets is one of them, in combination with the supply also to Europe from Russia, which has ended in accordance with the sanctions. Our wood protection segment has not delivered that very good during the quarter. That was mainly due to higher raw material prices and lower sales volumes directed to the DIY sector. That has been definitely slower. And if you follow the DIY chains or builders, merchants, you have noticed that during the second quarter also, that it's the lower volumes than it has been at least the last year. Sales increased by 22% to just over 1 billion, with a good profitability of an EBITDA of 173 million. And we have a very strong financial position with low leverage. And looking at the different product groups, we can see the sales bridge from Q2 last year to Q2 this year, We can note that we have higher sales pricing for oral products, but we have a negative contribution in the wood protection sector due to the DIY market that has been weaker. And we have a strong contribution also from the joinery segment due to the acquisition last year and a very strong market for that kind of product. Looking at the profitability, we have a strong performance from the joinery and sawn wood sector and the pellet sector, but we have negative contribution from the wood protection sector due to higher raw material prices and low volumes. So that might end up also how do we look at the current situation. This is the outlook we made in our Q2 report, which is still valid. We all know that we have high uncertainty in the world economy. And we can expect that the slower activity will hurt us especially in the volumes for the wood protection sector. But we also see price decreases for sawn wood. Having said that, we have a very strong market for windows and doors still. And we have a very good order book for at least a couple of months ahead. We have a very strong pellet market at the moment, benefiting from the high energy prices that I mentioned. So those two will definitely, to some extent, mitigate the performance in the sawn wood and the wood protection segments. One thing also regarding the supply of wood, we all know that the wood is sanctioned by the European Union. So it's not longer allowed to import Russian or Belarus timber to the European market. And that stands for about 10% of the consumption in Europe. And this might be one thing that could, to some extent, also mitigate the price decreases that we see in the wood protection and the sawn wood sector. As we also know that Central European and Canadian and also Swedish sawmilling companies are curtailing or they are cutting their production at the moment. So this will definitely help the market balance. And what it will be in the end is very difficult to say, but at least there are some factors that could improve the situation regarding the sales prices. So finally, just a message in our strategic direction that we would like to build capacity in order to have organic growth with also a broader product range with good margins, and we can complement that with acquisitions. We would like to accelerate the digital journey, meaning that we are looking over our business models, how we sell things, in what market, what kind of products, and using new developed tools also to market those. And also strengthen the product development, broader product range, and also introducing aftermarket services connected with those products. So by that, I thank you for listening.
Thank you, thank you. Let's go on. For the main theme of the presentation is how you're going from a sawn wood company to a company focusing more on further processed wood products. And the current management and board has a lot of great experience within the former sawn wood products. Do you consider that the capacity is there right now for the further process segment as well, in order for Bergs to expand there, or are you seeing any recruitments in the near future to further strengthen that ability?
Yeah, as I said, typically in these areas you are very lot production oriented, but now we are taking steps to be market oriented and start with the market rather than start with the production. And that were made for the last 4 years, but I think we have the last year at least intensified the efforts to take further steps in the market or in the value chain. So that we definitely need new skills and new resources, not necessarily from this industry, but we can learn from other industries, because I think this industry is quite conservative in many respects. So definitely more resources with other skills.
That's clear. And then could you sort of explain how increasing and decreasing wood prices impact your further process business? It might be easy to understand the sawnwood business because that's the product you're selling, but in wood products it might not be as.
No, you could say, like, if you further process wood products, you often start to buy sawn wood. And reducing prices, which we see in the market now, will benefit the wood processing business as we get lower purchase prices for our in material. And we can keep the margin to the end market that has been proven over the years that is like that. So that will definitely help us. That will impact the sawn wood market negative prices, will help us in the wood protection side. So it's a kind of an internal hedge we also have in that.
And what are the latest indications you're receiving on wood prices?
It's more or less a daily quote, I would say. We definitely see decreasing prices on the sawn wood, mainly due to lower demand and very high stocks at the producers. It's a little bit difficult to estimate what the market balance is in the end. What is the real demand and what is still in stocks in different actors.
And is there a specific price or time point during a quarter that when you set your prices with your suppliers?
You can say in general the prices are committed on a quarterly basis. But I think many actors now would like to have a more flexible model, so you can both buy on a more shorter period and sell on a shorter period. I'm quite convinced that will come, but historically it has been quarterly prices that are agreed.
And is that the price on the end of the quarter then?
It's during the quarter.
Sometime during the quarter. Okay. Could you specify each segment's profitability in terms of EBITDA margins? Maybe both where they stand now and what type of capacity you're seeing in the different segments.
As I said, we have a target that we should have an EBITDA margin about 9%.
For the group?
For the group. And I would say that in the wood protection side, we can see that in general, 9%. But it differs quite a lot between the more valued product and the more commodity product. And that's why we would like to go more into the value-added product. But that's well in line with the target. The junior sector is, I would say, a little bit higher than the target for the group. Especially when we come into more consumer sales and the consumer phase of it.
We're talking double or?
Not double.
No.
But between 1 and 2 digits, if I express it that way. And then we have the sawn wood, which is a very volatile business, but I think in general is in line with the group target.
That's clear. And is this what you have right now, or is this the potential you're seeing in these segments?
No, the potential, I would say, if we would like to go more into the value-added products, of course, we are aiming for higher margins. And maybe lower volumes, but higher margins. But that's still to be seen. I think we have some job to do, especially in the wood protection area, to look over the product range. But definitely we have higher ambitions than it has been over the average times.
Yep. And just for England, because you're talking about how Timber Woods is, has started there and how it's expanding from there to potentially other countries, and Sweden has already begun with 2 showrooms. How large is direct market potential for Bergs in England specifically? Like how much could you expand just in that country?
then you need to look at the different segments that we are into, if you especially look into the timber windows segment. I think we, as I said today, we have 44 aiming for 3 more showrooms this year. There is no reason to believe that we should be less than 100 in 5 years, maybe. So to double our sales in the UK is not that far away, even though we have not set the target yet, but we are discussing that at the moment. So it's definitely a market for us.
And in terms of that, do you have any more specific timelines for these different targets? Maybe not that you've penciled out on the board here today, but that you can navigate us a little bit to get some more clarity.
Yeah, I think regarding the wood protection side, the sector, we will come back to you after the year sometime to talk a little bit more about the product range and the direction we are going. Not any big news, but I think we are looking into that at the moment. We are into the growth of the timber windows sector at the moment, and that will be at least for the next 5 years. We will take big steps in that direction. And as I said, in the sawmilling industry, it's more to keep high productivity and efficiency to be a competitive, low-cost producer.
And for example, timber windows, you haven't set out like a percentual target yet or anything like that?
We are having those discussions at the moment, so it's a little bit too early.
Okay. How is the transaction market right now? Are there, or if we start this way, your share is, I mean, it's trading at SEK 40 to 41 at the moment, and your book value per share is 51. So how are you reasoning concerning share buybacks? Just to buy your share when it's such?
We have no mandate to make any share buybacks. I think in general answer to that is that we would like to use the balance sheet for expanding our business, to find acquisitions and also do investments. But of course, share buybacks is one thing that has been discussed, but we have no decision or AGM decision on that.
And are there transactions out there that you're currently seeing, I mean, that are interesting? Or how would you explain the transaction market right now if we put it in those types of terms?
We can notice that we get a lot of offers or questions if we are interested. I think the expectations of values are still high. But we have a very strong balance sheet, as I said many times, and we are really ready to take part of this. And I think we should let the dust settle a bit and see what it comes out with the economic environment, but also multiples and valuations.
Okay. Thank you for your time here, Anders, and thank you for everyone to listen in. That was it from Bergs Timber for today.
Thank you.
Welcome back to ABG Investor Day. My name is Simon Jönsson. I'm an equity analyst here at ABG, covering IT and gaming. Next up, we have the CFO, Fredrik from EG7, who will host a presentation. With that said, I'll leave the floor to you.
Thank you. So my name is Fredrik Rydén. I'm Deputy CEO and CFO in EG7 since December. I'm located in Stockholm. I've had several leading positions in mainly high-tech-driven listed companies in Sweden, such as LeoVegas, Betsson, and Kinnevik, and many more. To the left here, we have Ji Ham. He's the acting CEO in EG7. He has a long experience within gaming and finance and has been heading the largest business unit, Daybreak, over the past 7 years. We also have a new board, and the chairman is Jason. He's a serial private equity investor and entrepreneur, and he has been doing that since 25 years. He's located in New York. Looking at EG7, we're an emerging gaming company with proven expertise within game as a service, game development, and it's referring to live service and premium products, publishing both digital and physical, AAA game visual art and marketing campaigns. We have a solid foundation of recurring revenues that comes from the 10 live games that we operate across the group. They stand for sustainable and predictable net revenues and cash flows. In the second quarter, they amounted for 54% of the net revenues in the group. They also have very long life cycles. The oldest game is EverQuest, which celebrates 23 years. We have Lord of the Rings celebrating 15 years this year. And also My Singing Monster, who is about to celebrate its 10th anniversary. We have a diversified portfolio of assets, providing an attractive risk-reward balance. And we have stable and reliable performance from the live games and also from the service segment. And the service segment is built on a diversified third-party client list. We are at a good position right now, but we see an upside on our own titles that we will launch. New indie game publishing, which is a capability that we built over past 2021 and 2022. In existing live game upgrades, such as Lord of the Rings, which is quite attractive at the moment, looking at this new series that had premiere a couple of weeks back. And also continued cash flow optimize the group. And this is referring to that we are about to launch some games that we have invested in over several years. We'll get paid for that, and those resources and developers, they can be utilized in other ways, such as work for hire, for example. So we are driving the growth through M&A and have had a strong organic growth throughout the past 3 quarters. Looking at the second quarter, we generated 463 million in net revenue, corresponding to a growth of 49%, organic growth of 41%, and excluding FX effect, that organic growth was 24%. We had a EBITDA of 84 million, corresponding to an 18% EBITDA margin. We have communicated that we will divest our Russian operations through an MBO, and we have communicated that we will close that deal in the third quarter, and there is no change to that. This is a picture that shows a little bit that we have diversified portfolio of assets throughout the growing gaming industry. So we have game developers, publishers, and AAA visual arts and marketing campaigns. We have mobile and we have desktop. So we are all across the gaming industry, and the gaming industry is growing over 5% in the next coming years. So it's a good spot to be at. Having all these assets also mean that we can balance out one single business unit's risk to another, which we proved throughout the pandemic situation, for example. We have close to 700 employees, mainly across North America, UK, and the Nordic. Looking at the service segment, they generated 192 million in net revenues in the second quarter, corresponding to 103% organic growth. So this is a very solid performance. 26 million in EBITDA and a 14% margin, meaning that if the service segment becomes a larger part of the business, then our average margin will go down. Fireshine is one part of this. They have invested then in digital capabilities in 2021, something that paid off in 2022 with the launch of Core Keeper, which has since the end of Q1 been sold over 1 million times. And meanwhile, established themselves as an independent digital publisher. They also defend their position as a physical distributor with Sniper Elite 5, which topped the UK chart for physically distributed games in the second quarter. So we are all thrilled to see what Fireshine can do with a strong momentum and a strong pipeline going forward. Looking at Petrol, they have a world-leading track record in AAA game visual art and marketing. And in the first quarter, they launched maybe one of the most successful campaigns with Elden Ring, which proved to be very successful. And in the second quarter, they showcased the leading creative visual art within a project for Call of Duty, and they have been doing the Call of Duty campaigns since start. So they become even stronger in the world of with clients like Activision, Blizzard, and Bandai Namco, for example. So they should just continue doing what they are doing. Looking at the game segment, they generated 270 million net revenue and 72 million in EBITDA, a 27% margin, meaning that the larger game segment become, the higher margin will we get on average. We have Big Blue Bubble in this, which have never been stronger. They did a very successful Eastern campaign, where they increased the daily active users with 2,000% in the second quarter, which give an attractive position prior to this 10th anniversary, which is just about to be launched already. We have Daybreak, that stands for this recurring revenue. They operate 8 of our 10 live games. They celebrate the 15 years anniversary, which was a success, looking at the highest player count since 2016, and well positioned for this new Amazon Lord of the Rings series. Piranha has been profitable since Q4, and they are profitable due to that they launched downloadable content to the MechWarrior 5 title that they launched in last year. We generated 1.7 billion in net revenue LTM by end of Q2, which is a growth of 93% from comparable figure last year. We are trading without Innova on an EBITDA margin LTM-wise from 19% to 22%. This is the new normalized level of the divestment of Innova, which is not closed yet then. This further highlight the diversification, where we can see that both segments grow LTM-wise from one consecutive quarter to the other, where game segment came up to 1 billion in net revenue, which is a growth of 118%, mainly driven by M&A, but also strong performance. And the service segment, 708 million LTM-wise, which is a growth of 65%, mainly organic growth. We also see that the recurring revenue base, looking here to the right, the chart further down, has established itself around 47 to 53%. To manage expectations, we have delivered organic growth of 28, 25, and 41% over the past 3 quarters. We have also stated that we will deliver 1.6 to 1.7 billion for the full year 2022. And looking at the LTM by end of Q2, that's 1.7, which means that we will not be trading at the high organic growth that we have seen for the first half of the year, for the second half of the year. So looking at the business as is, we have more attractive risk-reward profile than a year back. And it's mainly 2 things here. It's one, that we are boxing away the Russian risk, and the second is that we closed down the Marvel project with a very high budget in relation to the size of the company. So to create a new game is a higher risk than to invest in our other IPs. We have a strong record with regards to net revenue and the guidance there. A strong balance sheet with the net debt to EBITDA of 0.3, which means that we can borrow more money if we would like to do that. Strong IP portfolio, stable and recurring revenue, we're 54%, as mentioned. Diversified pipeline of new games and content updates, and an attractive cash generation potential, as I started with regards to the 250 plus developers that we have in the independent studios. That's what I was supposed to say.
Great. Thank you, Fredrik. Thank you. We have some time for questions as well. So I want to start off with the capacity from the independent studios you say you will get once you have released the current pipeline. Could you elaborate a bit about what your alternatives are?
Yeah. So we have engaged approximately 250 to 270 employees within Toadman Studios, Antimatter Games, and Piranha. They have launched with regards to Piranha and will launch with regards to the other 2 studios games within the next coming year. And when we do that, we get paid for that. And we also have then those resources to be utilized for example, work for hire contract. But we could also evaluate other alternatives. So we do have a strong potential in increasing the stability and also the cash flow and net flow revenues going forward.
And can you say anything about the current cash burn from those studios?
Yeah, I mean, today Piranha is profitable since Q4, mainly due to that they have been launching quite successful downloadable content to MechWarrior 5. And they also have one of the MMOs that they operate, which is MechWarrior Online. But the other 2 studios is financed from the other part of the business, so to say, mainly the MMOs and the service segment. So the burn rate there, I mean, it's close to 198 employees that we're talking about.
Right. And why not continue with the internal development?
We will do that with regards to the MMOs that we have. And we could potentially evaluate new games, but it's a higher risk with a new game because you're hit-driven. And looking at the total portfolio that we have, we would like to reduce the risk. And we think that we have an attractive risk-reward profile now that we would like to keep. So to start to invest in a new game, for example, is a higher risk. And we're a bit concerned about that. It's more looking at EverQuest, for example, that has been profitable for 23 years. To continue investing that is much lower risk and a higher risk, reward. So that is the focus that we will be having going forward.
And you are part of the new management team in the company, and you have some skin in the game as well. How do you think you could improve or restore the confidence among investors?
That's a good question, and I'm also one of those investors that have lost money in this. So I think what we need to do is to focus on the organic growth, looking at the fundamentals, the profitability and the cash flow generation going forward, and also to guide in accordance to what we expect in a way that we can deliver upon that. You may say that we are conservative in the way that we guide in one way or the other, but we have the goal to kind of over-deliver on what we say. So continue doing that and to focus on the organic in the business, both growth but also optimize what we're doing. And I think we have a good potential of focusing on that going forward.
All right. And turning to the profit margin in games, you said that you expect this current level to persist. But what could happen if you, let's say, started with work for hire in the independent studios? What would happen to the margin?
If that become a larger part of the organization, then the margins will increase because the margins there is higher than our average margin at this point in time. It's nothing that we see on the table at the moment, but we see that we have a potential of going down that road. So that is what we expect.
All right. And one more question on the independent studios and work for hire. Would that be smaller projects, or would you try to put those developers on one or a few bigger projects?
Obviously, a larger stability if we can engage them in larger projects. So I guess that would be preferable, but then they will also be locked in. But I think we probably have a potential of taking on larger projects after launch of the big games that we expect in Q4, for example, for Toad Studios.
All right. Turning to Daybreak, maybe you went through it a bit, but how big a share is Daybreak of sales and EBITDA?
They are the lion part of the game segment, and they constitute 8 of our 10 live games. And the live games stood for 54% of our total revenue, so you could say half of the business, and a larger part of that with regards to margins. It's quite clear in the second quarter report, the exact figure.
Great. And what is the CapEx requirement for Daybreak, you would say?
We haven't communicated that isolated. We had a CapEx of 100 million last year. We have said that we will have a higher level this year. And looking at that, we are discontinuing the Marvel project. It will not be as high as we maybe thought when we started the year, but something in total, maybe somewhere in between 100 and 200 million. But with regards to Daybreak, they have a great part of that, but not all.
All right. Thank you. And what is the outlook for the service segment in terms of pipeline, for example?
Yeah, I mean, that's very interesting because when Fireshine, for example, launched Core Keeper, which was a great success, that's the best marketing for them. And they have also launched Silt since then and have a pipeline in the next coming 2 years, which is looking stable. So I think they will increase that, but still defending the physical part because that will be a little bit left over for them to capture. And that's the history of the company. So I think that is what they will continue doing. With regards to Petrol, they have also, in a similar way, since they launched the Elden Ring campaign, which is maybe the most successful campaign over the past 10 years in this industry. That's a good marketing for them as well, meaning that they have strengthened the Petrol brand, and we're looking forward to see what they can do in the future. The Petrol business in itself is not scalable to the same level as Fireshine and the game segment. So we don't expect the margins to go up from their normalized margins, so to say. But they have a good potential of taking on new AAA clients, which is very interesting.
All right. And what is the net debt, and how much do you have in earnouts?
The earnouts, we paid a remaining earnout in the second quarter. And after that, the remaining earnout that we have in the books account for close to 80 million. And with regards to the net debt, if you include the net debt to EBITDA is 0.3. So it's if you include the remaining purchase consideration in cash, then it's a little kind of liability that we have, but it's quite similar to the cash situation in the company.
All right. And the last question, what do you look forward to the most in the coming months or quarters?
I mean, we have some very interesting projects. The strong momentum in Fireshine, what they can do with that, what they can do with the indie publishing or digital publishing, that will be very interesting to follow. Continue to follow what Big Blue Bubble is doing, being stronger than ever, celebrating now the 10th anniversary. They generated 53% EBITDA margin in the second quarter. Very interesting. It's very interesting to follow what Daybreak can do with Lord of the Rings. The Lord of the Rings series has the highest budget ever for similar productions. I think it was $470 million, something like that. It was 25 million viewers the first weekend. And if we can build the awareness around our game in conjunction to that, I think it will slowly increase the awareness, which will be very interesting to follow.
Indeed. Thank you, Fredrik, and thank you, the audience, for tuning in. Have a nice day.
Thank you.
Hello and welcome back to ABG Investor Day. I'm Victor Kruger, equity analyst at ABG. Our next presenting company is Stendörren, and we have Erik Ranje, CEO, with us in the room, and CFO Per-Henrik Karlsson with us on link. Over to you guys.
Thank you very much, and thank you for having us here, giving us the opportunity to present Stendörren to all of you. My name is Erik Ranje, and I'm the CEO of Stendörren since some 2.5 years. And I think I have with me Per-Henrik Karlsson. Would you like to introduce yourself, Pelle?
Yes, hi, Per-Henrik Karlsson, CFO at Stendörren, and I've worked with Stendörren since early 2019.
Right, so let's dig into the presentation then. We are a listed real estate growth company. Listed on the Stockholm Stock Exchange, focusing on light industrial, warehouse and logistics properties. We are geographically focused to basically the greater Stockholm region. For those of you who speak Swedish, we also use the name Mälardalen, but it's basically the greater Stockholm region. We also, in addition to logistics, light industrial and warehouse, focus on residential development, which may seem odd, but there's an industrial logic, and that is location. Many of our logistics and light industrial properties in particular are in very urban areas with quite strong residential potential over time. So that is an opportunity that we pursue. The investment case when it comes to Stendörren is very much driven by some global or macro trends, if you want. One thing is urbanization and the sort of population and economic growth that we have in the greater Stockholm region. That's obviously where we have our properties, but also e-commerce. Excuse me, e-commerce. We do see quite strong demand from e-commerce companies when it comes to urban logistics, as you may all be aware. We also, we have also entered into some new markets quite recently. We have bought properties in Oslo, Copenhagen, and Finland, and that is basically location where we have about the same commercial dynamics. So more of the same in more areas, if you want. Some of you may know Stendörren from before, and some of you do not. But for those of you who do, I just want to first kick off with some highlights of our achievements during the last couple of quarters. So operational highlights, we have seen a number of quarters now with very strong net lettings, around 15 million SEK per quarter, which has pushed down vacancy quite a lot. Stendörren has historically had fairly high vacancy, but we are now well below 10%, in particular if we look at a forward-looking measure where we include sort of contractual tenants moving in and also moving out. Over the next 12 months, we are actually at a vacancy of 7%. We have also had very strong renegotiations of leases with an average increase of 22%. It's a very strong figure, but that is really a underlying and sustainable sort of trend when it comes to this asset class in these kinds of locations. The surplus ratio has increased a lot. If you look at the graph at the bottom right, from around 65% more than, let's say, 3 years ago. And then we have increased with more, well, 10% is units up to above 75%, which I'm very proud of. Obviously, result of better top line, but also cost control and decreasing unit consumption when it comes to what have you, energy, for example. Within project development, we have now 25,000 square meters under construction. We have a pipeline with projects where we have achieved building permits, both within light industrial, but also residential, actually. We have, as I said earlier, expanded into the rest of Nordics. Same kind of locations and assets, however, in the other Nordic capitals, save for Iceland, of course. And then we have presented a new sustainability strategy in our annual report in April this year, which I will come back to a little bit. Perhaps you, Petter, would like to continue on the financial highlights.
Yes. Our financial key figures are well above target, return on equity at 22% and NAV growth 25%. We also accomplished the refinancings of secured bank debt during the quarter, substantially strengthened our liquidity. We have about 1 billion in available liquidity and substantially extended average remaining tenor on interest-bearing debt. It amounts to 3.2 years at Q2. We also increased our interest rate hedging late 2021, corresponding to about 80% of interest-bearing debt, and the average interest fixing is 2.9 years. And we also increased energy price hedging early 2022, which gives us about 80% of forecasted consumption 22 to 23 and around 50% for 2024. And we have green and sustainability linked loans. About 5% are green loans and 37% are sustainability linked loans. And over to you, Erik.
Yep, thank you. Just some data points on Stendalen then. We have a property portfolio of 12.4 billion SEK in a high-yielding segment. The yield of the standing assets, i.e. excluding the building rights portfolio, is 5.5%, and fairly long average lease duration remaining of the remaining leases, so to say. So high-yielding, strong visibility thanks to long lease durations, and fairly low LTV. We have a lettable area of 800,000 square meters, and if you look at the bottom right, approximately 650,000 square meters of building rights. And that is, of course, a tremendous potential to actually being able to new construct up to approximately 80% more in relation to the standing assets. Where we come from, Stendalen was originated from 2014, following a carve-out of a greater Stockholm region light industrial portfolio from a company called Kvalitena. Put under separate management and listed on First North, and since then that portfolio was worth some 2 billion SEK. And since then the portfolio has grown mainly through acquisition, I would say almost exclusively through acquisitions. And that is a sort of something that we continue to do. Obviously, I think we have bought roughly one property per month over the last 12 to 18 months. But in addition to that, we accelerate the development activities in the company by sort of using the potential in the building rights portfolio. We have also gained building permit in our first residential project and enter into new markets. One key event, obviously, in the history of the company is when EQT became the main shareholder in early 2019. And one more note on that, EQT has approximately 40% of the capital and 60% of the votes. The investment case in Stendalen, well, fundamentally we have very strong and stable cash flow. We have, as I said earlier, high-yielding assets with long duration in a diversified tenant base. I will get back to that. We have excuse me, sustainable growth potential as a result of the location. We are located in the greater Stockholm region, the growth engine in Sweden, I would dare to say. We are also sort of exposed to the high demand in the logistics sector. And then I mentioned the 22% rent increase. There's a very particular dynamic when it comes to this asset class in these kinds of locations. That is the conversions that we do from light industrial into residential. That is obviously a potential that also our competitors do, which means that there over time is if not a reduction, at least stable or reduced number of square meters in this asset class in urban areas, whereas demand increases. And that is the reason why we can see such a fantastic figure of 22% of rent increases. So this is a sustainable, embedded growth factors sort of in the company. And then we have the building rights portfolio. Now I'm repeating myself, but we can add up to 80% more square meters of lettable area if we explore the potential fully in our building rights portfolio. And some then also converted for other use, i.e. light industrial to residential. Little bit more granulated data on our portfolio. Around 2/3 is light industrial, logistics and warehouse. We have some office space as well, very often then related to office space in, for example, logistics assets. But we do, out of legacy or as a result of legacy, have some office properties pure. Location, 1/3 of our properties is roughly in the Stockholm municipality, 1/3 in the greater Stockholm area, and 1/3 in the greater Stockholm area, i.e. Mälardalen. Then we have bought obviously some properties also in Copenhagen, Helsinki, and in Oslo. The source of the leases is diversified, i.e. the tenants. We have some 800 tenants representing different industries where we have Coop, which most of you know about, that is daily goods. We have Alfa Laval engineering. We have, for example, Fuchs Lubricant we used to have, so let's skip that. We have Bactiguard, which is life science, Stockholm Vatten and Nacka Vatten, which is municipality risk ultimately. Leases fairly evenly distributed over time. Average remaining lease duration 3.8 years. So to that extent, it's a defensive portfolio, but with quite a lot of upside potential. One growth driver is obviously, the fact that we're located in the Stockholm region. We see population growth, we see economic growth in the Stockholm region, we see e-commerce grow in general. I will not spend too much time on that slide. If we talk about our building rights portfolio, we see that now on the screen. Mostly located in Stockholm. It's already zoned land in almost all cases, i.e. we do not have to rezone. But when we convert from industrial use into residential use, then obviously we need to rezone. And so the lead time is a little bit longer there. For example, if you see fourth from the bottom, we see Sollentuna. There we are in the phase of rezoning. But otherwise, it's within current zoning in good locations, Greater Stockholm region. If we look at the projects that were... nu får du hjälpa mig här, för nu tryckte jag på fel knapp. Ctrl L. So this is what we are working on right now, or we have in execution phase, you could say. We have the fourth at the very top is under construction and planned to be completed end of this year. We did our first letting in one of the properties, VB 1966, that is in Brunna. And the fourth at the top, they sum to I think it's 23,000 square meters to be exactly. We also have some of them. If you look at Almnäs 424, we have two properties where we have building permits, so we're just taking them to the market and in discussions with future tenant before we start building. And again, Tegelbruket at the very bottom, that is residential, where we have a building permit for some 300 apartments already. But due to the market sort of conditions right now, we have not started the execution and the erection of those buildings. This is a quite good example of what I mean when we talk about the conversions for a particular use to residential. The big building, quite low building, in the middle of the page with bluish facade and black roof, that is an existing building. And the residential, which we own obviously, and the residential buildings that you see in the picture, that's just renderings or illustrations. Right now, it's just empty land. And this is located in Botkyrka, obviously, just let's say 10-15 minutes from the inner city. And here is where we have rezoned and now have building permit for 300 plus apartments, and in total 800 apartments. So this is a good example where we can infill, i.e. more properties on the land plot where there is already an existing property, but low percentage of use when it comes to the land area. If we talk a little bit about sustainability, we had a sustainability strategy covering the period 2017 to 2020. We have achieved things that we are proud of. We have reduced CO2 emission with 41% per square meter and energy consumption per square meter with 17%, and also have been migrating over to purely renewable energy sources. But that's history, and we developed a new sustainability strategy presented in the annual report with, I'm not going to go through all these items, it takes too long time, but we had basically the same kind of things that we want to achieve, but with higher ambitions, but a little bit extended also what we want to do, in particular within social responsibility, since we're entering into residential projects as well, residential development. Do you, Per, want to go through the financials?
Yes, some more highlights from our Q2 report. We have increased net letting since 2021, and as you can see, our economic occupancy is improving, and it's 91% at Q2. And down to the left, surplus ratios also increasing, as Erik mentioned earlier. And as I mentioned earlier, we accomplished substantial refinancings during the quarter that substantially strengthened our liquidity and also extended average maturity on our interest-bearing debt. The next slide. We have 4 financial targets. Return on equity shall exceed 12%, NAV annual growth shall exceed 15%, ICR shall exceed 2.0 times, and equity should be at 35% and never below, equity ratio, should be at 35% and never below 20%. We have a good position regarding our financial targets, and as mentioned, we have increasing occupancy, hedged interest costs, and energy prices going forward. And next slide. Don't skip that one. Yes, our debt funding. Total financing, including our hybrid bond, amounts to 7.2 billion and consists of 71% secured bank debt, 18% senior unsecured bonds, and 11% hybrid bond. Our LTV is 47%, and if we include the hybrid, it's 53%. We use several of the leading Nordic banks and approximately 60% bank financing on acquisitions. And again, we have at Q2 a total interest hedging corresponding to 80% of our interest-bearing debt. Next slide. This graph shows equity, long-term NAV, and share price, so I'll not go in further into that one. And this first table to the left shows the development of our share price and turnover, and to the right, our 10 largest shareholders as of Q2. You can change slide. And our assessed earnings capacity as of Q2 on a rolling 12-month basis gives us an NOI of 559 million. And that's all from finance.
Well, thank you very much, and I think we are done with the presentation. So
let's go into some Q&A.
Yes.
Awesome. You sort of mentioned it, Per-Henrik, but I was just going to bring it up that the timing of certain certain operational steps were quite good. In the beginning of 22, you hedged 80% of your forecasted energy consumption for 22 and 23, and 50% of the consumption for 24 at levels seen in 2020 and 21, mitigating, you know, some margin declines in your operating surplus going forward. And you also refinanced by the end of 2021 a large share of your portfolio, and now have hedged 80% of outstanding debt.
We didn't do a refinancing. We were just increasing our amount of interest caps.
Yeah, but
a substantial increase.
Right, but your interest maturity was prolonged, and it sort of hedges towards the current interest environment. And then now, just last week, you were included in the EPRA index as well. So there are a few good timings operational-wise, and also external factors. Eric, any comments on any of these I just mentioned?
I think we can. We will be happy to comment on all of them. But I think the first thing that we did, obviously, was the increase of interest rate hedging, which we did November, December. And I think that is when there were starting to be a lot of sort of talk about the inflation and the risk of interest going up. And I think that for sure the market consensus at that point in time was that this is temporary. And I'm a little bit cynical, so I thought this is not temporary, but who knows? It may be or maybe not. But we bought interest rate caps, which at that point in time were surprisingly cheap. And a cap is an insurance; it's not a swap, so to say. Therefore, it didn't cost anything to buy, or a very low amount of money to buy this insurance. And I guess if we were wrong then doing it, then we would have spent a low amount of money and benefit from a continued low interest rate environment. If we were right, then we are very happy that we bought that insurance. So not sort of very sophisticated way of arguing, but it made sense. And then if we go to the next event, i.e. hedging of energy, well, if we thought that, I mean, you know, if we see a risk of interests going up as a result of inflation, and inflation is driven by partly energy or the risk of increased energy, well, consequently, we should then also hedge energy. So therefore, we hedge the energy prices for basically the same argument. So that's my comments to that. And then we did refinancings because of the senior debt in mid of the spring, because we thought that we had created quite a lot of value by our strong net lettings and rent increase, and we wanted to have more money to be prepared for a bumpy road ahead potentially, or obviously to fuel our expansion. So that's the rationale behind it. And obviously on the defensive side, I mean, it's obviously good to have money and liquidity, and the refinancing also led to longer remaining tenor of the loans on average. So.
And could you specify with that liquidity how you sort of plan to use it? You're talking about the acquisitions one a month maybe, and then your investment in projects or existing.
No, we haven't. I mean, we of course each and every day monitor what is happening out there when it comes to the geopolitical, whatever you want to call it, or why not call it what it is, an invasion in Ukraine. I think that's better. And the effect that will have on construction prices and on interest and inflation. But we nonetheless intend to continue around what as we have done over the last, let's say, 6 quarters then. We continue doing selectively off-market deals, single asset deals on the acquisition side, and capitalize on the potential of the building rights portfolio. The projects that we have here are equity financed. It's first upon letting that we can debt finance those. So and we see quite good sort of appetite for what we are now have under construction. which means that we can go to the banks and ask for more money, for example, in relation to those. So no sort of change of direction. We are not being super aggressive on the acquisition side. I mean, it's not in relation to the balance sheet that we have been any huge amounts. So I think we have had a reasonably balanced and cautious approach, which works also in this environment.
That's clear. Do you see any material effect from price inflation in your project side?
The projects that we now have under construction, we entered into those before this happened, basically. And actually, no, they're reasonably small projects. And our counterpart, the construction companies, had procured enough fairly early and also sort of put them on the plot. So they were sourced earlier, which means that they were not really subject to this inflation effect. Going forward, of course, it may be a price effect, but we see a little bit of these prices actually being balanced off now.
Okay. We heard presentations earlier today talking about prices coming back as well, so it seems to be
okay. Trend. It was just almost a spot market.
Yeah. And transaction market, any notes about that right now for you?
Little bit more cautious, but I wouldn't say it's any dramatic change yet, at least.
Yeah. And just in terms of, planning processes, how are they proceeding for products where you haven't received zoning plans yet?
Come again, I didn't understand the question.
That's the. Oh, you said that you have zoning plans for all the projects.
Yeah, almost all. Yeah. It's just one that we have to rezone. Right. Solent 2 now. Right. Excuse me.
So, is there anything else you would like to highlight that you aim to do within the next 12 months?
No, I think we're
right there.
We're done.
Thank you, Eric.
Thank you.
Thank you.
Hello and welcome back to ABG Investor Day. My name is Victor Kruger. I'm an equity analyst, and our next company is Fastpartner. And today we have their Deputy CEO, Kristoffer Johansson. And with that, I will leave the word over to Kristoffer.
Thank you very much for that introduction. I will keep this presentation in Swedish. Hej allihopa, Kristoffer Johansson, som sagt vice vd på Fastpartner. På bilden här ser ni vår fastighet Hilton 2 i Solna, centrala Frösunda. Det är en fastighet på ungefär 25 000 kvadratmeter och den byggdes i början på 2000-talet. För lite mer än 2 år sedan så blev halva fastigheten tomställd. Då sa vi att vi ska göra det här till det finaste huset på gatan och arbetsplatserna i huset ska vara trevligare än hemma. Sagt och gjort, nu har vi gjort det och huset är i princip fullt uthyrt. Hyresgästerna i huset är företag som hyr en 2-3 000 kvadratmeter kontor. Vi tycker det här är liksom en väldigt intressant grupp av hyresgäster som hyr upp till 2-3 000 kvadratmeter kontor. För det är företag som verkligen använder sina kontorslokaler. Och vi tror ju verkligen det, för att kunna vara kreativ och få en hög produktivitet, att man behöver arbeta utifrån ett kontor. Och det kommer ju allt fler studier och artiklar som handlar om det, att arbetar man inte på kontoret utan arbetar helt och hållet hemifrån så sjunker produktiviteten. Ja, nu ska jag gå vidare och berätta om hur den här Hilton 2 förgyller våra räkenskaper och visa det i vår kvartalsrapport. Men först en liten presentation av Fastpartner. Vår aktie är noterad på Nasdaqs large cap-lista. Och vi har en investment grade rating från Moody's. Fastigheterna är värderade till strax över 37 miljarder. Uthyrningsbar yta på 1,6 miljoner kvadratmeter. Och vi har årliga hyresintäkter om nära nog 2 miljarder per år. Vi har valt att finnas i några av Sveriges största storstadsområden. Stockholm, Göteborg, Malmö, Uppsala, Norrköping och Gävle. Och på de här områdena så finns det ju alltid en efterfrågan på lokaler och man har en stigande hyresnivå. Vi har också valt att arbeta med alla typer av lokaler. Bostäder, butiker, lätt industri och så vidare. Dels ger det oss en möjlighet att ta intressanta affärsmöjligheter när de uppstår. Som till exempel ute på Lidingö, där har vi konverterat en kontorsfastighet till en samhällsfastighet med äldreboende och skola. Men det är också en del i vårt sociala hållbarhetsarbete. För genom att utveckla bostäder i kombination med butik och vårdinrättningar tillsammans med verksamhetslokaler för det lokala företagandet så skapar vi trygga och väl ekonomiskt fungerande platser. Och det här är ju bra för samhället, men det är också bra för oss i och med att det ger ökade hyresnivåer. I början av juli släppte vi vår senaste kvartalsrapport. Och glädjande nog så var det den bästa någonsin. Fastighetsvärdena på topp, som sagt strax över 37 miljarder. Hyresintäkterna steg med 6,4%. Driftnettot ökade med 7%. Överskottsgraden ökade till 70% blankt. Vi hade en räntetäckningsgrad på 4,5 och en hyresgästvakans som gick ner till 7,9%. Full fart i förvaltningen. Många fina uthyrningar gjorde vi under första halvåret. Här finns några av de större listade. Vi investerade 385 miljoner i våra befintliga fastigheter och lite nyproduktion. Så 19 miljoner i nyproduktion. 305 miljoner i våra befintliga fastigheter i form av hyresgästanpassningar. Det är projekt som typiskt ger en väldigt hög avkastning, 10% och mer. Så använder vi 62 miljoner till att investera i miljö- och energiprojekt samt detaljplaneutvecklingsprojekt. Utöver det så förvärvade vi 14 fastigheter för 523 miljoner. Det är mindre kompletteringsförvärv som kompletterar vårt befintliga förvaltningsbestånd på ett bra sätt. Och det är också förvärv som görs till en hög direktavkastning, vilket innebär att de blir lite mindre känsliga för förändringar i räntenivå. Men vad är då problemet när vi har släppt vår bästa kvartalsrapport någonsin? Här ser ni vår kursutveckling för året och det ser ju inte så kul ut. Idag handlas ju aktien kring 70 kronor. Det innebär att börsen, vi har en substansrabatt på dryga 40%. Räknar man baklänges så innebär det här att börsen tror att värdet på våra fastigheter ska gå ner med 20-25%. Det skulle innebära att värderingsgilden ändras med 1-1,5%. Men en sån kraftig värdejustering har vi i alla fall inte sett ännu i transaktionsmarknaden. Strax innan sommaren så såg vi noteringar i transaktionsmarknaden som var på all time high. Och det har kommit några transaktioner nu i början på hösten och det är fortfarande på väldigt höga nivåer. Glädjande nog. Så att här kan jag ju bara spekulera i vad som gör det här. Men det finns ju investerare som köper fastigheter utan belåning. Och då är det klart att vi ser ju hur vi kommer få en utveckling av hyrorna. Räkna upp dem i KPI här till början av nästa år med kanske 8%. Och det kan ju vara investerare som tycker att det ser intressant ut. Ja, som sagt... Att kursutvecklingen ser ut som den gör, det beror ju på ränteutvecklingen. Stigande räntor innebär sämre lönsamhet för ett fastighetsbolag och också sjunkande fastighetspriser. På grafen här ser ni utvecklingen av Riksbankens styrränta. Den i sin tur sätter ju agendan för Stibor-räntan, vilket i sin tur sätter prisnivån på våra lån. Och här ser man ju, det finns Riksbanken har gjort 2 prognoser här på hur styrräntan ska utvecklas. En innan sommaren och en nu under sommaren. Och man säger att Riksbanken tror att styrräntan ska upp på ungefär toppa ur på 2%. Tittar man på Swedbanks prognos här så tror ju Swedbank att styrräntan ska upp lite till 2,5%. Den ligger ungefär i linje med övriga storbankers prognoser. Medan tittar man på hur marknaden bedömer läget så tror ju marknaden att styrräntan ska upp närmare mot 3,5% innan den vänder neråt. Och vi har ju sett det här komma. Så vi har ju under lite längre tid, så de senaste 2 åren så har vi ju inte gjort så mycket förvärv utan konsoliderat oss. Och jämfört med några peers i marknaden så har vi ju en väldigt låg belåningsgrad. Och det är ju klart, när räntan stiger, har man mindre lån så är det ju lättare att hantera en sån ränteuppgång. Vi har också en väldigt defensiv låneportfölj. Vi har 16,5 miljarder i lån och vi har valt att ha hälften hos bank och den andra hälften i kapitalmarknaden, obligationslån. Kapitalmarknaden, när riskviljan finns där så kan man få väldigt bra villkor på kapitalmarknadslånen. Men när det blir lite finansiell oro så stiger ju priset på kapitalmarknadslånen och även tillgången på dem. Och då känns det väldigt tryggt att ha andra foten i bankfinansiering. Som är liksom en tryggare och säkrare finansiering. Och tittar vi då på hur kapitalmarknaden har bedömt oss då, så uppskattar de den här stabiliteten och tryggheten som vi står för. I grafen här så ser man räntemarginalen vi måste betala på våra kapitalmarknadslån. Så att den nedre klungan av kurvor här visar läget i början av året. Då betalade man Stibor plus en marginal på ungefär 100 punkter. Och den övre klungan av kurvor här visar läget för någon månad sedan. Och då har ju marginalen ökat till 250-300 punkter. Samtidigt som Stibor nu börjar närma sig 1,6%. Men glädjande för oss då, det är ju att vi får ju låna pengar på samma villkor som andra stora fastighetsbolag, i många fall lite större fastighetsbolag, vilket är ett gott betyg. Och även jämfört med de här större fastighetsbolagen så ligger vi i det nedre skiktet av kurvorna här. Så att vi har ett stort förtroende i kapitalmarknaden, vilket är kul och glädjande. Utöver att ha en bra finansiering på plats så jobbar vi mycket med vår förvaltning och speciellt digitaliseringen i förvaltningen. Det här gör vi dels för att leverera en bättre förvaltningstjänst till våra hyresgäster, men också för att öka effektiviteten i förvaltningen. Och digitalisering är också en nyckelfaktor i vårt miljöarbete där vi försöker sänka energiförbrukningen. Som sagt, hållbarhet är någonting som vi tycker är väldigt viktigt och som vi jobbar intensivt med. Så vi har ju som mål att sänka energiförbrukningen i hela förvaltningen med 2% per år. Utöver det så vill vi också minska utsläppen av koldioxidekvivalenter med 15% per år. Miljöcertifiera 10% av vårt bestånd varje år så vi kommer upp i 80% miljöcertifierade fastigheter. Och till 2030 så vill vi vara helt klimatneutrala i vår förvaltning. Och de här staplarna visar hur vi år från år minskar våra utsläpp av koldioxidekvivalenter. Så ni ser ju att vi gör ju betydande framsteg i det arbetet här. Och tittar vi då på var de flesta utsläppen i förvaltningen, var de härrör ifrån, så ser man ju den här svarta delen här som är våra indirekta utsläpp genom den fjärrvärmen vi köper för att värma upp våra fastigheter. Vi ser även den gröna delen där, de här utsläppen av läckagen av köldmedia från värmepumpar. Men det här jobbar vi ju på att sänka. Och i det lite större perspektivet så ser man ju att utsläppen för förvaltningen är kanske den lilla delen. De riktigt stora utsläppen kommer ju från vår byggverksamhet. Och det är ju väldigt mycket koldioxidsutsläpp som härrörs till liksom, betong och stål som man för in i stommarna. Så här har vi ju som affärsidé att kunna återanvända befintliga stommar och anpassa dem för ny användning. Till exempel som vi gjorde ute på Lidingö där man byter användandet från kontor till samhällsbruk. Avslutningsvis några intressanta projekt som vi har på gång. På bilden här ser ni en ny last mile logistikfastighet inritad i Västberga. Man kan ana sig till E4 i topp av bild. Och faktiskt precis till vänster om den här fastigheten så håller vi just nu på att bygga en ny fastighet på cirka 5 000 kvadrat. Vi har även ett spännande projekt i Bromma, Riksby, nära flygplatsen. Där ska vi bygga många nya bostäder och även en hel del kommersiell bebyggelse. Det här ligger lite längre fram i tiden till beräknad byggstart i 2025. Ja, i den här grafen så ser ni Fastpartner tillsammans med lite andra noterade och onoterade företag. De mörkblå staplarna är vår fastighetsvärdena i senaste rapporten här och de ljusblå är hur det såg ut 2015. Men det intressanta med den här grafen är att den visar på att Fastpartner, vi är ett av de små, stora bolagen och vi tycker det här är en väldigt intressant position. Så vi får ju låna pengar på samma villkor som andra stora bolag. Vi är tillräckligt stora för en effektiv förvaltning samtidigt som vi är lite mindre än många andra. Så det innebär att möjligheterna för oss att växa med 10% per år är ju de är ju bättre än om du är lite större. Är du större, då blir det väldigt stora med volymer, fastigheter du måste anförskaffa och även finansieringsbehoven växer ju då ordentligt. Så att inför framtiden tycker vi att det här är en intressant position och vi har ju som mål att öka vårt förvaltningsresultat till 1,5 miljard till utgången av 2025. Tack så mycket.
Tack Kristoffer. Jag tänkte börja höra, för att ni har gjort gällande under H1, alltså både Q1 och Q2, att efterfrågan har varit fortsatt god bland hyresgäster på era lokaler. Och till och med rekordhög. Så nettouthyrningen har varit väldigt bra. Hur har det utvecklats nu senast in i Q3? Vad är liksom senaste indikatorerna? Eller?
Ja, men det har varit en fortfarande bra marknad. Men man kan ana sig till en lite svagare marknad. Jag tycker antalet förfrågningar, man skönjer väl att det börjar minska något. Men fortfarande, jag skulle ändå säga, liksom ett bra humör hos företagen.
Ja, det är positivt. Ser ni någon risk för att det är starka uthyrningsgrad som ni har arbetat upp till ungefär 92% kan försämras här nu de närmsta kvartalen?
Nej, men absolut, det är ju någonting som vi får bevaka noggrant, för att det kommer ju vara tufft att vara företagare framöver. Hyresnivåer kommer ju öka med indexeringen på hyreskontrakten. Vi har energipriser som skenar. Men samtidigt, jag tror att störst påverkan kommer du nog få för lättindustri, där du kanske inte har så höga marginaler och du får väldigt stor påverkan från de ökande energipriserna. Hälften av vårt bestånd är kontor, och jag tror att de kommer att ha lättare att hantera den här prisuppgången. Men vi får se. Vi ligger väldigt nära våra hyresgäster. Vi förvaltar ju våra fastigheter med egna tekniker och egna förvaltare. Och det gör att vi kan ha en bra och nära dialog med hyresgästerna. Så att vi är lyhörda och ödmjuka inför framtiden.
Och hur ser du på de indexerade hyrorna nu till nästa år? Vad har ni för ungefärlig procentandel som är indexerad?
Ungefär 90% av hyresintäkterna är indexerad på något sätt.
Ja, och nu har vi senaste indikationer på en inflation om ungefär 8%. Ser du att det är genomförbart att höja hyrorna med den nivån? Eller är det liksom för mycket för att hyresgästerna ska kunna klara av det?
Nej, men jag tror de allra flesta bolagen kommer kunna klara av det. Men sen så kommer du säkert ha enstaka fall där liksom, det kraftigt försämrar lönsamheten för hyresgästerna. Men där är vi beredda på att ha en nära dialog med hyresgästerna kring det här.
Och om du ser framför just liksom investeringar och ni lägger i befintligt bestånd, ser du att det kommer avvika från de cirka 800 miljoner taktat de senaste kvartalen, eller tror du det kommer ligga kvar ungefär på samma nivå?
Ja, men förvärv och investeringar. Och absolut, under några års tid så har vi dragit ner lite på förvärvstakten. Investeringar har vi ju ofta en högre direktavkastning i. Men givetvis ökade byggkostnader med 20%, högre kapitalkostnader. Det påverkar ju hur vi ser på investeringar, och vi kommer ju välja att gå vidare med de mest lönsamma investeringarna. Det är ofta någonting som är bra med investeringar, att vi har lite mer rådighet över när vi ska göra dem.
Och när det kommer till ränteförändringarna, ni har rätt mycket, eller ni har inte så mycket i år som förfaller, utan det ser ut att vara mest i början på nästa år när det kommer till omförhandling av era lån. Vad i övrigt kan indikera ungefär vad vi har för snittränteupgång nu här? Är det liksom Stibor-förändringen från sista juni till sista september, eller är det lite mer komplext än så?
Ja, men, i huvudsak alla våra lån är ju kopplade till Stibor, och sen så beror det ju lite på exakt datumet då för fixingen. Så att från Q1 till Q2 så hade vi ju en lite större räntejustering där vi gick upp från 1,6 till 2,1. Och det är liksom lite otur i tajmingen där av Stibor-fixingen för lånen. Som du sa, vi har ett förfall i maj nästa år. Men vi arbetar ju redan nu med att se till att vi kan hantera det på ett bra sätt.
Lovande. Är det någon annan spaning ni vill lyfta fram kring marknaden gällande möjligheter i olika segment eller olika geografier?
Nej, men jag tycker vi är välpositionerade med en låg nettobelåningsgrad på 41,8%. Så att vi har ett bra utgångsläge här för att om möjligt då kunna ta tillvara på bra affärsmöjligheter när de ges.
Mycket bra. Tack för din tid idag och tack för er som har lyssnat in.
Hi everyone, and welcome to ABG Investor Day. My name is Nikola Kranovsky, and I'm an equity research analyst here at ABG. With us today we have Patrik Settlin, CEO of Litium. The idea is that Patrik will present for about 20 minutes, and then we will have a brief Q&A. With that said, Patrik, I'll hand it over to you.
Thank you, Nikola, and hi everyone out there. Like Nikola said, I'm Patrik. I'm the CEO of Litium since a couple of years back. I got a long background within e-commerce. I've been the CEO of CDON, which is a marketplace battling today with being the biggest one in the Nordics with Amazon. And also I've been the MD of Komplett, which is one of the largest e-com players in the Nordics within home electronics. I've been the MD of Sweden and Denmark at that company. So I got a long background within being a merchant within e-commerce. And prior to joining Litium, I was also a couple of years at Visma, one of the biggest subsidiaries in the Visma Group. And you might know that Visma is one of the largest SaaS companies in Europe today and very attacking in the marketplace. So I got a long background of e-commerce being a merchant and also from building in manager positions, building SaaS companies, which I now get to combine the two in Litium, helping others to be excellent at e-commerce and also building an excellent software SaaS company. So this is a perfect place for me. I really do love my job. But enough about me. Let's talk about Litium. I'm going to give you a short introduction to what we do, what the business is like, and what we see for ourselves going forward in the future. For those of you who know us, you know we're a tech company within e-commerce. What we bring to the market is an e-commerce platform or digital commerce platform, if you will. In essential, this is an advanced toolbox for clients wanting to up their game in digital commerce. So it's got all the bells and whistles and all the necessities needed to run really advanced digital commerce. It's delivered to the market through our network of solution partners. So it's a go-to partner model all the way and very scalable as such. Clients subscribe to the platform, so we got a SaaS business model, and then the solution itself is global. So we got, the emphasis on our market traction these days, the footprint is in the Nordics, but the solution itself is global, and many clients use it to sell all over the world, to US, China, and Europe, and such. And also I'm gonna come back to this. We just added an American client to our client list, so we also got clients in other countries now outside the Nordics. This is our mission statement. This is what Litium is all about. This goes through everything we do, from product development to how we conduct ourselves in the marketplace and how we run the business. We make our customers outperform their peers in digital commerce. That's what you get when you go with Litium. And we've been at it for a while. Today we got 200 plus customers. We're moving up to 300 at a decent speed. The client list itself is pretty much evenly distributed between business to consumer and business to business clients. But these days we see a larger influx of B2B customers to our customer list. We got 40 plus solution partners, the sharpest one within the e-commerce sphere in the Nordics, and some of them got footprints outside of the Nordics in Europe and North America as well. So we got a really thorough and a really great partner network. Sales through the platform in Q2 just passed over 2 billion euros. 20 billion SEK. So we've got quite a substantial amount of transactions and value running through the platform. So we got a fairly large chunk of the total e-commerce within the Nordics for sure. And this has created this financial footprint. We got an ARR, which is our main KPI, annual recurring revenue. Being a SaaS company, that's the king KPI for sure, of 67 million. Plus today, and this was a growth of about 20% in the second quarter. It's important to notice that pretty much all of our revenue is coming from the product. So unlike some peers in the market space, we do not package other stuff into our revenue, but product. So it's product revenues and ARR pretty much all the way. We got a high gross margin, about approximately around 70%. It's pretty stable around that level. So we got a lot. The underlying business is strong, and we got lots to work with. And we've been investing this in growth for a couple of years back now, but now we're moving more towards profitability because the time is right for that, to where we are in our scale-up phase. And we've been stacking, like you can see in the picture to the right, we've been stacking growth quarters on top of each other for quite some time. And the latest one addition to that was, of course, Q2, where ARR reached 67, where like I just said, the EBITDA was landed at just under the zero line, so at minus 0.8 million SEK. And this was I think it was the 6th quarter where we were equal or better on the EBITDA line versus the previous quarter or comparison quarter. And in the first half of the year, this was a growth of, or an improvement of 1.7 million. So we're definitely moving in the right direction when it comes to profitability. We saw a change in consumption patterns in Q2, and it's been even more evident in Q3 because of the market situation out there, which you're all very familiar with, and I guess we're going to come back to, Nicola, when we get into it, and I will talk more about it when we come to the section of looking forward. So, but we're seeing this change in sales, definitely in business consumer space, where sales have been dropping, digital commerce sales as well. But we have not seen that much of an effect within business to business, and Litium in large is pretty much unaffected so far by this, because we got a large B2B client base, and also in our sales pipeline and opportunity pipeline, there's many B2B players, and they are not as affected yet, at least. So we'll talk more about that in a minute. We had all-time high in new customers coming in, and also we did lots of expansions with current customers. So we had a good quarter and good first half a year in that sense. And we also, like I said, we had a breakthrough on the global scene. Very proud to be able to present our first US customer and a player within B2B wholesale. So that's right in the sweet spot for us when it comes to market and what we are trying to achieve in the marketplace. We said that we have created our own runway for funds. So we talked about two things in the last quarterly report, and that was we're going to be EBITDA positive within 12 months. And also we said that current cash funds will bridge us to a cash flow positive state, which is important to notice for you out there thinking of investing in Litium maybe. The market we operate in is driven in large by digital transformation. This has been going on for many years now within digital commerce or digital sales or sales altogether. We've all seen it in the consumer space, but also now recently, or last 5 to 10 years, has moved in with greater force in B2B as well. And all business leaders out there pretty much are affected by there's so many opportunities out there to do different things in digital commerce, try to beat your competition, but there's also the competition moving on you. So the marketplace is constantly changing. There's new sales channels popping up. You can go global. Everything is transparent. It's super competitive. So you really need to be edgy when it comes to digital sales. And this is what business leaders face every day, of course. And to be able to be successful with that kind of environment, it's very crucial that you got these capabilities in your tech stack and in your company as a whole, but we are more focused on the tech stack. So what business leaders are looking for is flexibility, speed, of course, and the sales driving capabilities or the scalability abilities, if you will, to be able to move either to grasp an opportunity or to deflect a threat. So, and that's where the last piece of the puzzle comes in Litium, because we bring this to the tech stack for our customers. And if you dive a little bit deeper within what that piece of the puzzle contains, I know this is a very talky slide, but we are very much, the platform is all about modularity and package flexibility. So you're able to put it together in a way that makes more sense for your business and business logic. Also, of course, all the functionality you need to run really advanced e-commerce and integrate it to your current tech stack, so it's very fully automated and you get all the efficiency benefits that you're looking for. But the idea here, and what we do in product development and the platform as such, is to create sort of a modular value proposition that you can pick and choose whatever you need the most. And at the heart of every sort of e-commerce solution out there, you need to, for sure, have a product information management system, a PIM, which is one of our components in the platform. And the other two are the CMS, the sort of distribution layer, where what you actually see in a net store, but also the commerce to run all the campaigns where products is supposed to show and all that enrichment that makes you able to take a buying decision as a client. So flexibility and modularity, all about that. So that's what we bring to the market. And this value proposition, if we compare ourselves to competitors, we would come in, we address what we call the mid-market, and that's of course a question of definition, how you define that. For us, it's somewhere, if you turn over like 10 million SEK up to 10 billion SEK, there's no like stop in the platform per se, but that's where we target. And versus competitors and solutions, that's more faster to get up and running for sure, but also limited versus what you want to or need to do with your business processes, and how many markets you want to address, and how customized you want to be to that market and such. So this is where we come in, and this for us it's the perfect market place to be at. So we're really strong in this sense. I got a few examples of how clients out there use the Litium platform. We got, for example, I'm not sure if you can see it, but this is Revolution Race. It's a Swedish player who's been very successful there. What's the short for this these days? DNVB, I think, Digital Native Vertical Brands. They were born digital. They've always been selling everything digital, and they are doing it with a direct-to-consumer business model through and through. So very successful, growing very fast. I think they're in 20 countries now. Just surpassed 1 billion SEK in turnover with great profitability. Been taking a beating on the stock market, like pretty much all e-commerce and tech companies have, but really solid and successful business. So that's one of the examples of using the Litium platform. I got another one. Just me that's been in the business for like 20 years. It's really cool that this is actually starting to happen now, that it's actually players out there selling really high cost and really complex products. So this is an example of Kelfri selling big machinery to farmers, like tractors and all the fixings to tractors. So it's happening now for real. It's the hurdle of selling complex products or expensive products. It's pretty much gone. The technology doesn't stop you anymore, and also the adoption of people out there buying is people are really ready to do this now, to buy really expensive things without actually seeing it or feeling it or touching it beforehand. So that's another example. And the last one I want to bring up is this is a testament to a shift in business models out there on the client side. This Eleiko, who's a big world leader in gym equipment like weight bars and such, who's been selling the traditional business-to-business model through resellers, but going with Litium and changing the Litium platform added a direct-to-consumer channel. So they're selling direct to consumers all over the world. They started this during the pandemic. So they're in 150 countries digital now, and went from 0 to over 100 million SEK within a year. So that was pretty massive boom there. So, but this is happening in many. I mean, there are a lot of manufacturers or brands, if you will, out there who's looking to add this sales channel to complement what they're doing in their traditional business model. So, not going to be much longer on the business. There's a couple of slides that you will get access to in the slide deck, of course, if you want it afterwards, and we can talk more one-to-one if you'd like. But I want to show you this as well. This is a customer acquisition model. So even though we are having partners are selling, they are customizing, they're deploying and supporting the platform, we strengthen this with our own sales and marketing efforts. So we got we're also doing that to generate leads and interest in the marketplace. So, but regardless of where the lead business opportunity is coming from the get-go, if it's the partner comes to us, so we go to the partner. We always go hand in hand over the finishing line towards making an offer and doing the deal with the customer. So there's no conflict of interest there at all. is very pure, our business model and customer acquisition model. Right, then I got a couple of logo slides. Skip those now and move to the more interesting parts maybe, looking ahead, is what we see for ourselves. I got a few macro trends first, what's happening in our marketplace. On the business and consumer commerce side of things, I mean, we got the digital transformation, we've all seen it, going from the physical stores to the digital channels. And that's, I mean, that transformation is still ongoing, even though it's clouded these days with first the pandemic effect and now the general pressure on the share of the willingness and consumption we call it room for consumers. But I mean the digital transformation is ongoing. It's a strong market per se, and this change will be ongoing for. I mean we don't see the end of it yet or see it playing out. So, but to be successful here in the consumer space, you need, it's really very much about being, you know, as relevant as you can in each interaction while doing it at a massive scale. And these days, technology has really enabled this with machine learning and AI and such, so you can really add that sort of personal touch to interactions one-to-one, even though it's mass scale in the back end. So that's to be a winner in this game, you need to be good at this, right? So, and the Litium platform brings these abilities as well, since you can customize it and adapt it as you will. On the business-to-business commerce side, we're seeing a strong shift now coming from demand from buyer side, that buyers out there certainly are looking for more digital experience. They're not okay anymore with, you know, lifting the phone or whatever, personal meetings all the time. So it's more and more going digital. So there's a strong sort of push from the demand side there to do things. And from the other side, the companies themselves, of course, want to be more and more automated, to be more and more cost efficient and scale up better, of course. So we see more and more B2B actors really questioning the old ways of doing things. And in the bottom of that driver is, of course, the Industry 4.0, the sort of the digitalization of all the manufacturing processes and the Internet of Things, and that's really put the emphasis and the lights on being more digital in all of your sort of business process. And when they look to what they're going to do in digital sales or relationship sales, which is definitely doable these days, they tend to look to what business to consumers, brands and actors have been doing. So for us, it's a strength that we are working with some of the most cutting edge business consumer brands out there when it comes to digital sales. So that's so of course an advantage for us as well there. When it comes to commerce tech, I think it was Forrester, right? There are like 9,000 different marketing technology solutions out there, going from, it's a wide array of opportunities out there. And going back to what I said about being a business leader these days, it's really hard to navigate in this territory, and there's new things popping up all the time, and it grows larger and larger. But definitely the trend is that it's going to be more and more specialized solution to reach new clients or you know, up your game when it comes to self-service, for example. Definitely going that way, but at the core of the tech stack, you need the flexibility, the speed, the agility characteristics of your technology, which we bring to the table. So you've probably heard of composable commerce is hot these days, but it's all about flexibility. Really, it's just a matter of how flexible you are gonna be. So, and if you look at the e-commerce market more in depth, this is visualizing the sort of the expectation of e-commerce growth back in 2019, when we were expecting, I mean, generally somewhere between 10 to 15% growth in the e-commerce markets, regardless pretty much of which vertical you were looking at. But of course, in more immature verticals, steeper incline, and in more mature verticals, lesser, but somewhere in general between 10 and 15%. So, but then, you know, the pandemic happened, and instead we saw this curve. So like in 2020 and a good portion of 2021, there was like pretty extreme growth numbers, as I'm sure you're familiar with. We've seen growth of anything between 40 to 80%, even triple digits for periods of time in that span. But then we started meeting these comparison numbers, and supply chains challenges and stuff sort of dampened that growth. And now we're seeing this falling back. So we're even seeing declines in e-commerce sales. Started in Q1, Q2. It's flattened out, and then it's starting to turn downwards, going from supply chain challenges, but also the general economic situation with people getting less and less in their wallets because of inflation. But the big question, of course, is where does this go from here? Is it going to turn upwards, or is it going to continue down for a while? I mean, but if our belief in short to mid-term is we definitely will see decline on the business to consumer side, and there could be foreclosures. We'll see declining sales, but that comes from both the share of space to consume from consumers. I can't find the English word for it, but I guess you get my point there. But also there's still lingering problems within supply chains in certain verticals that makes the product range arrive late or too little, or it's just the prices of shipping it is making it not a very profitable sell. So all these things come together in a pretty hard cocktail for business consumers brand out there. So we expect declining sales there, but in business to business, not that very much affected yet. We haven't seen it. And for us being a software company, we got two different opposing forces. We got one is the declining sales in e-commerce, which might linger on for a while before the digital transformation meets it, and it will turn upwards again, of course. But we are also catering to efficiency needs and automation needs to be able to scale better, be more cost efficient in your business. So for us, I mean, it's the market situation looks pretty solid and good still, I'd say. All right, time is flying. I'm got a couple of slides left. I think I can squeeze them in.
We have a few minutes for the Q&A, but yeah, absolutely, you can squeeze them in.
I'll be really fast. So if we look at ourselves at Litium, what our growth and scalability opportunities are at the moment, we launched Litium Commerce Cloud, new value proposition, new technology in the bottom, a new business model. End of last year, and this has been really well received and kicking in now, so more and more customers start to go live with this. And there's also a concept of pay as you go, and this on top of the subscription that you pay monthly. So this just the attractiveness of the platform and how much partners and customers are liking it, and the change in business model makes that's a good growth opportunity for us that we are executing on now. That one I just mentioned. Also on technology side, we're implementing what's called container technology. I'm not going to go into the details of that, but in essence, it allows us to be even more flexible and modular to the clients, and also at the same time making cost efficiency, because we can run the cloud operations more efficient. So we expect this to better our gross margin going forward. And last one here, we got a major opportunity in business to business. We're already strong here. We got a great product market fit. We got all the functionality much needed, or you can adapt it, customize it through our great solution partners. So we really see a good influx of business to business customers and opportunities as well. And the product market fit combined with the digital transformation that's going on stronger and stronger in the business sector is really an attractive spot for us. Last one, key takeaways. Please remember this, Litium, we're an attractive e-commerce platform, and we got a scalable business model through partners, also very high stickiness since customers invest a bit and customize their platform, so really high retention numbers. We've been showing continuous strong growth within annual recurring revenue. We got a high gross margin, which shows the underlying strength of the business model. And we got solid financials. We're funded to take ourselves to, like I said, the runway is set to be cash flow positive with the current funds at hand. And we are really we're in a good position to capture growth potential ahead of us. Right. Thanks for listening in. Nicola.
Excellent. Thank you very much for that nice presentation. And just some brief Q&A to finish this off. You're beginning to go international with your first US customer. Now in North America, there's tons of players and they're quite large. How would you say that Litium differentiates itself from the crowd? And also, which types of customers would you say that you're best fit to serve?
Yeah, it's very much the same as it is on our home turf, so to say, in the Nordics. So we meet these giant players there in our home turf as well. We actually win a lot of opportunities. So this is just our battle going international. So it's the same strength that attracts customers at the home turf that attracts customers international as well. And since we got the business model of solution partners, some of them with international footprint, like in this case with Columbus, that actually makes for us to really efficiently reach out to these markets. And for us, the bridgeheads we're using, our key strength within business to business is the bridgeheads for us when we go international. So that's where our focus is, even though we're very much in play for business to consumer brands as well, of course. Yeah.
Great. And just one final question to finish this off. Inflation is a big topic in the investment community.
Yeah.
How would you say that Litium has been affected so far, and are there any mitigating factors that you could discuss that sort of help alleviate the issues that come with inflation?
Yeah, we're definitely, I mean, for us, the strategy, like we said, we're going to go to a cash flow positive state. So we're definitely trying to sort of reduce the increase of cost or freeze it altogether, let the revenues come and go past. And that's the plan. That's what we're executing on. We are, of course, fully expecting cost increases in various areas, but we also got plans to mitigate those. In our contracts, we got, for example, indexes, so that will follow certain indexes in the marketplace. So that's one mitigating effect. But also, we are to some extent in our revenue stream affected by we got this variable revenue stream. It's about 12-13% in the last quarter from our total revenues, which we see, of course, that's sort of a dampening. But in that bucket, we got a mitigating effect of the Litium Commerce Cloud agreements coming out. So we are signing new customers going live now during the year. So we're in a, even though times are tough, we're in a pretty good spot, I'd say. Yeah.
Excellent. So our time is up for now, but I want to say thank you, Patrik, for attending and presenting.
Thank you, Nicola. Thank you, AB. And thanks for listening in. Thank you.
Hi and welcome back. My name is Gonzalo Artiach, Healthcare Equity Analyst here at ABG. Our next company is FluoGuide, a Danish biotech company developing cancer-targeting dyes for guided surgery. And with us, we have here today Morten Albertsen, the CEO. Please, Morten, the floor is yours.
Thank you very much for the introduction, and thank you for the invitation. So I welcome you to the presentation of FluoGuide and our effort toward precision surgery therapy for cancer. So may I have the next slide, please? We are a publicly listed company, so I kindly ask you to make your own judgment. And if I have the next one, this is really what we do. We light up cancer, and if you could start the video. Then what you can see here is a cancer that's lighting up in the middle, and then you have the brain around it, which is a dark tissue, and then you have the surgeon that is moving around with this equipment and try to dissect and free this cancer so they can remove it in one go and get it out of the brain. And what we do in FluoGuide is really that we light up cancer, and you can see it in the middle where the cancer lights up. So this is in a nutshell what the FluoGuide is doing. And if I may have the next slide. So surgery is a primary treatment option for most cancer, and about 80% of patients will have a surgery conducted once in their disease course. And it's when you do the surgery, you would like to have a complete removal of the cancer, because the more cancer you remove, the better the prognosis is for the patient. Unfortunately, what often happens is that the cancer regrow locally, and about half of cases in average, or half of the patient with cancer, the cancer will regrow locally due to not a complete removal of the cancer. And it's not because the surgeon is poor in any way, it's simply because the surgeon only have the eyes and the finger, and so they have to see and feel, and it can be very difficult for them to really distinguish what is a cancer and what's a normal tissue, and particularly where is the border between the two. So obviously a lot of different technologies are wobbling to figure a way to help the surgeons and completely remove the cancer. And we believe that the fluorescent guided surgery will be the next frontier, in the sense that that will really help the surgeon to bring cancer surgery to the next level. And we also believe that FluoGuide is on the very leading front in fluorescence-guided surgery, and I will explain why this is the case. So if I may have the next slide, please. So this is on the top of the images is again some images for just completed clinical trial. And you see on the left side, you see what appear to a normal cancer. On the right side, you see the same patient with the light that has been switched on, and where you can see they have our product FD1, and the cancer lights up. So this is a cancer that is hidden below some of the normal tissue, and you can see through the normal tissue. So the product we have is a freeze-dried powder that is reconstituted prior to use. Then it will circulate in the body after an intravenous injection prior to surgery. It will bound to all cell that expresses a uPAR, and then at time 0, the entire patient will light up. But then what is not bound to uPAR will be removed from the body, and then you will have only left, what is left is the flow force that is linked to the cancer cell, and that enable guidance of the surgery guidance of the surgeon through surgery. So this is really how it works. So it's a very simple procedure, yet with a quite profound impact. And if I may have the next slide. So uPAR is a molecule we are targeting, and uPAR is a receptor-bound enzyme system that is a proteolytic in its nature. So it means that it's break down the normal tissue, and the way the cancer uses it is that when it has to spread into normal tissue, it will break down normal tissue using uPAR, and then it allow it to invade the normal tissue. So uPAR will be particularly expressed on malignant cancer. It particularly expressed on the forefront of the cancer, and also uPAR is expressed on all different kind of cancer that is growing and spreading. And that means more than 80% of patients presenting themselves with cancer will have uPAR extensively expressed. If I may have the next one. Thank you. So FD1 is the first product we are working with. It has 4 very distinct, interesting features. One of them, the first one, is that there's a peptide that's bound to IC green, which is a commonly known fluorophore. So the first one is due to the peptide that binds to uPAR, and that means that the fluorophore will be expressed exactly where the UPAR is on the cells, and that means very specifically to cancer. And on the same time, it will be used across many different kind of cancers in the entire body. So a very high specificity to cancer and broadly applicable. That's the first important point with FD1. The second one is that the fluorophore is icy green, and icy green is interesting for two reasons. The first one is that equipment that is out there is built and designed so it both can detect icy green and also can get it to light up. And that requires some special light and it requires some special sensors. And having a product like FD1 that is exactly similar to icy green in the light spectrum means that we do not have to change the equipment. We can use exactly the same equipment that is out there that can detect icy green. And that way we will not have to ask the hospitals to buy new equipment or the equipment manufacturers to change the equipment. We can simply make a plug and play for the technical features of the equipment. Another aspect of icy green is that it uses near-infrared light, and that means compared to visible light, is up where you cannot see it, but it's not being absorbed by normal tissue, and that means that you can see it very deep into the tissue. So you, for instance, have two images here on the slide. The one on the left side is a first-generation fluorophore that is based on visible light, and on that image there's a cancer underneath you cannot see because it's hidden by the normal tissue. Normal light, you will only be able to see 1 to 2 millimeters into the tissue compared to near-infrared light, where you can see it 1 to 2 centimeters into the tissue. And of course, that could make a huge difference for detecting the cancer, or finding the cancer or not. The last thing that is interesting with icy green is that it's a product that's been around since 1959. It was first approved in the US, and it's known to be very well tolerated. So the risk of us getting some nasty surprises in the late clinical development is very low. Further, we have had a very robust preclinical program, multiple dose study done, and we are not limited by toxicity, by feasibility, and that means that it confirms the very good tolerability of icy green. So really, we have a very interesting product here in FD1. So no wonder that we also have very interesting clinical trials, which I will show on the next slide. So this one is some of the results from our first clinical trial. We have selected very aggressive brain cancer, high-grade glioma. It's an indication that there's about 30,000 patients in US and Europe, new patient every year. It's a very serious disease. About half of the patient is died within 14 months, and only 5% of the patient is alive after 5 years. It's a cancer that is located in the brain, and that means that its precision matters. I mean, if you take out too much of the cancer, you risk to disable the patient, and if you take out too little, of course, you have the problem with the regrowth. And on the images on the right side, really showing a cavity on the top where you see it like a neurosurgeon would see after they have removed the cancer. That is what they see, and they have to make the decision: should I remove more tissue here because I believe it's cancer, or if I move more tissue here, I risk actually to disable the patient. And that could be that they cannot move or speak or see, or even you can sort of really killing them. I mean, if you take out some vital structure of the brain. So this position is really matter. And on the second image, you see that we check this cavity with FD1, and there you can see that we actually had some light, and this was removed, and you could see it was cancer, and you can then see on the image below that we have a clean cavity, and that's how we can make a huge difference for the neurosurgeons and the patients. Next slide, please. So this is a more detailed slide on the data we got from the trial. It was the first trial we just completed here in spring. It was a 1/2A study, so the safety was the highest primary endpoint. And as I mentioned before, we have an icy green that is well tolerated. We have a very strong and clean preclinical package on the safety. And then it was confirmed here in the clinical trial. So we had 4 mild adverse event, grade 1 and 2, that was reported in 3 patients out of the 40 patients in total. The second objective was to find the optimal dose, and we did that. We started out on 1 milligram, and then we increased the dose. And at about 8 milligrams, we start seeing consistently that we had, we could use it for guidance. And then on 36 milligram was the optimal dose. And then fortunately, we saw actually on 48 milligram, we were limited not by toxicity, but limited by that the image quality was becoming suboptimal. And what we saw actually were that the cancer still lights up in the same way as 36 and 48, but that the background come up and blurred the image, and really see that the background come up and disturbing the image. So 36 milligrams is a selected dose for high-grade glioma. And then we had tissue samples, so the neurosurgeon sampled both tissue that lights up but did not light up, and then it was validated afterwards with a neurosurgeon, and we could see that we have a specificity of 100%, meaning that everything that lights up in the brain actually were cancer, and that is a quite good starting point. So if I may have the next slide, please. This is then the design of the 2B. Because of really a very nice result we got here in springtime, there's no reason for not advancing it. And what we have decided to do is going ahead with the 2B trial. That is designed basically the same way as we anticipated the phase 3 trial would be designed. It would be inclusion will be the patient that is suspected to have high-grade glioma. They will be randomized into two groups, 12 patients in each group. One group would be FD1 at 36 milligram, and the other one would be 5-ALA Gliolan. And Gliolan is this approved product I mentioned before that is in a first generation product approved for guidance of surgery, is approved for high-grade glioma. It's a product that is converted into to the fluorophore, and it's not completely precise in the sense that there's some of the tissue that is not cancer that lights up, and you need the surgeon to have some kind of training before they're actually allowed to use it. Nevertheless, it's the best they have, and it's actually helped them so far. It's also make the surgeons trained for using surgical guidance. So in that way, the market is more prepared. But we will compare to this product that is a standard of care in Europe. White light is more in the US. But so they're randomized to one of the two treatment. The surgery will be done under white light. The surgeons still do not know if the patient have had FD1 or 5-ALA. Then they will be checked with either with near-infrared light or the blue light. And then you can see if there's anything left in the cavity that you then can remove. And if it's then validated by a pathologist that is in fact is cancer, then you say the patient had a benefit of the product, and that will count as a positive patient. So the primary endpoint will be the proportion of patients with a relevant change in surgical strategy, meaning that cancer is detected by the dye, and that is actually confirmed to be cancer by a pathologist. This study is ongoing as we speak. If I have the next slide, please. We have also started up a lung trial that is ongoing, and lung was selected because lung is the most frequent form of cancer in the world. Lung is today discovered relatively late, so it means that it's relatively much spread in the body, typically of patients that have lung cancer. The point is that a lot of different programs is ongoing screening programs that makes the cancer being detected earlier in the disease, and that will completely increase or change the treatment of lung cancer in the sense that surgery will become much more relevant for it than it is before. And still surgery is very important for lung cancers. But what I want to say is that the argument I just made is why all the big medtech companies are looking very seriously into lung cancer. So it's really all of them with robotic surgery, with all different kind of equipments that are working on defining the lung cancer surgery with their equipment, using the features they have on their equipment. So lung cancer is a very partnering or equipment intensive indication. So both because it's number one in incidence, but also because it's a very get a lot of attention from partners, we selected that as an indication number 2. The trial is a very explorative trial. We will be a 2A study. We will look at 8 patients first on one dose, and then we have an opportunity to increase or decrease the dose, and then we will have 8 patients more, and then we could have a further 8 patients. 24 patients in total will be included in this trial, and as said, that is ongoing as we speak. We'll have the first result here in Q4, we expect. So if I may have the next slide. The other trial we just launched now, this has had all the green lights from regulatory agencies. We're not recruiting patients yet. That is expected here in October, but that's in head and neck. And head and neck is an interesting combination between lung and brain. Precision really matters in head and neck as well because there's a lot of very critical structures in the neck. So when you do remove the cancer, you cannot just take it away. You really have to be very precise. There's a cosmetic element into it. And then last, the equipment manufacturers is similar to the situation for lung, paying a lot of attention for head and neck cancer. So that is also an indication where we get a lot of exposure toward equipment manufacturers. We just published a study where we show that 93 patients have demonstrated extensively expression of UPAR in the head and neck cancer, and also to compare some of the other specific targets and really show that UPAR is a quite interesting target because not only show where the cancer is, but also actually predict how the patient actually will perform afterwards. But as said, it's an explorative study. So if I may have the next slide, please. This is a trial then in the fourth one we are starting up. That is being submitted later this year. It's a trial due to the high-grade gliomas trial we just completed. There was 40 patients in total, and 4 of the patients have other indications than high-grade glioma due to the situation that it was suspected to have high-grade glioma. And one of the patients had a mini-glioma in the trial. A mini-glioma is a form of cancer that normally is non-malignant, but still about a third of the cases will actually recur later on in the patient. And another issue for the patient is that they have they get disability or side effect from the surgery procedure. And because they live such a long time, it actually accumulated is a huge issue for the patient. So precision is really matter. So for the mini-glioma trial, both because we saw actually one of the patients where we really made a benefit for, but also because it's a high unmet medical need, we will launch this study. It again will be a very explorative study, figuring out the value of FG1 for those patients. So if I have the next slide, please. This is an example of this patient that was included into the trial. As you see on the row top of it, it was really the brain before it is before the surgery starts. The kind of the top of the brain is taken away, and then you look into the cancer in the brain. And the left part of it, the red one, is white light. Then you have the 5-ALA, the blue light in the middle, and then you have FG1 on the right side. And what you actually interesting see, and then on the next row you see the different cancers after the same cancer, but the different light after they're taken out from the patient. And you can see that the FG1 really lights up. And interestingly here, it was only 8 milligrams, and as you may recall from before, 8 milligrams were the first dose where we start seeing that it could be used across the different patient. We ended up with using 36 milligrams as the optimal dose, so it's a much more light that we obtain actually in those patients that we have the optimal dose. But what you see here, interestingly, is what I told before about the 5-ALA, is the part of it that lights up is actually not cancer, and the part that do not light up is actually cancer. And the reason for that is because you cannot see deeper into the tissue. So, and the specificity that is related to the 5-ALA. So this is just one patient, but still it's a very interesting patient. If I may have the next slide. We had a very interesting finding with this patient, namely that again, the cavity was checked with FG1. The neurosurgeon saw there was light, and she removed it, and actually it was confirmed to be cancer. So this patient actually had a benefit for using FG1. So if I may have the next slide, please. So this is an overview of the trials we're running. So we have the 2B in high-grade glioma. We have a result in first half next year. We have the lung first half next year, and as well the head and neck first half of next year. And then we have the mini-glioma and low-grade glioma will be second half of next year. So if I may have the next slide, please. So one thing that is a feature of FG1 is the photothermal therapy. And basically is that when you light up on the molecule, it will heat up. And as it's at the same time very specifically bound to cancer cell, it will heat up beyond the temperature that you need to kill the cells. And that means that you actually kill the cells very specifically. So if you imagine a structure in the brain where neurosurgeon leave cancer behind because it's invaded into this sensitive structure that they decide not to remove for the patient, then you can actually sweep it and clean up with photothermal therapy. In a sense, you can actually kill the cancer cells without killing the sensible structure. And this is a really a very neat feature that, of course, will be explored further. It will be more drug-like endpoint, so the study will be longer, and the endpoint will be more survival and recurrence. But it's the price will also be completely different. If I may have the next slide, please. So we are not the only one believing that fluorescent-guided surgery is really taking up and will reshape the whole surgical area for oncology. I mean, Stryker, there have been 4 acquisitions. Stryker acquired and Novadex, Medtronic, Visusense, Olympus acquired, Quest, and then also Getinge acquired Optics. It's all based on near-infrared light, and the first near-infrared second generation dye was approved in 91, and that was Cytalux for ovarian cancer. 5-ALA Glavlan was approved in 7, but we really believe that a lot of things is going to happen. And what they need the next those companies is a dye that can guide them, and that is a company like FluoGuide. So we have the next slide, please. So this is just an overview of the competitions, and you see them out on the left side. I think I will. The key point really is here that they are spread all over. And if I may have the next slide, there's one thing that is really important. If I can have the next slide, please. Yes, this one. There's one thing that is important, that is being specific to cancer, being able to use it across different cancer indication, and then have the equipment independency I just mentioned earlier on due to the IC Green labeling. That's all 3 features that is important, and that those we have in FD1. So if I may have the next slide, please. Thank you. This is an overview of the different kind of equipment. There's microscope, endoscope, and robotic surgery. And by the indication we have selected, we will be exposed to all the big medtech companies. And that, of course, is very interesting for us, forming a partnership down the road. For indication like aggressive brain cancer, we can take it to the market ourselves. But for lung or breast or colorectal cancer, well, the big indication, it will be more partnering scenario we're looking at. But this gives us really a good flexibility. So we have good interest for those partners. If I may have the next slide, please. So this is really the key upcoming milestones. We have this, as I mentioned, we have 3 very important clinical trial results in first half next year, and then we have one in second half next year. So we have a very dense clinical milestones. We've been incorporated in 18 and floated in 19, have the first clinical result in 20, and we're really moving quite quickly because our trials are short, because the patient only included into the trials in 48 hours. And I think that's all I have, and I thank you for your attention.
Thank you very much, Morten, for such a nice presentation. And now we have time for a few questions. And I will start with a question regarding the design of the new study. Your previous study, the phase 2A, every patient that was enrolled received both 5-ALA and FG1. And then you could compare within each patient both treatments. But now in the phase 2B, you are separating in 2 arms. One will receive FG1 and the other one will receive 5-ALA. Could you expand a bit on the rationale behind this new design?
Mm-hmm. Well, there's two reasons for it. The one is that we, when we started the trial, we dose them simultaneously. So we have FG1 was given intravenously and 5-ALA was given orally. And a known side effect from 5-ALA is that you get a lot of nausea and even vomiting. This was then you could not separate between the 2. When we moved to the evening dose of FD1, so we give it intravenously in the evening and gave 5-ALA in the morning, then we could see that that the patient had no nausea, no vomiting before they actually got the 5-ALA in the morning. So to be able to prove that clearly in a trial for regulatory purpose, we would like to separate the 2. The other reason for it is that the trial we're running now is a more, say, market-conformed trials to run, so it will be more in compliance with what the agency will see. Still, the trial we did with putting them into the same patient gave us a lot of advantages in the way that we could really clearly compare in the same patient how well the 2 compare to each other. So it was this is the reason for it. So the side effect and the more acceptance way of doing it for the agencies.
Right, thank you very much. Very interesting. And I have a second question. It's on your study in head and neck. The head and neck cancer, it's a quite heterogeneous type of cancer, right? So could you let us know if you will aim all types of head and neck cancer, or you will focus, I don't know, let's say oral cavity or neck or everything?
Yeah, we start out with the squamous cell carcinoma, and we start up in the oral cavity and the oropharyngeal location. So that will allow us both to have superficial located cancers in the tongue, for instance, or in the stomach, but also we will have cancers that is further down in the pharynx. So we will be able both to use scope, we use open field surgery, and that is a good model for us to define how many of the head and neck cancer types we will be able to target afterwards.
Very interesting. And a follow-up question, it's regarding your FG2 program. Could you let us know how this program is going and what is in the short term or mid-term, how this program looks like?
Mm-hmm. Yeah, the program FG2 is a new part-targeted flu for as well. It's particularly excreted in the liver, no, sorry, in the kidney, and compared to FD1 that is eliminated in the liver. So when you have it from the liver, FD1, then we kind of color the whole gut, and it's difficult to see the stomach-located tumor. FD2 is much more suited for stomach-located tumors. FD2 is one of the more modern fluorophores, so it's more bright than FD1. On the other hand, does not fit into the equipment, so there are some work that needs to be done with the equipment before it fit into it. When this is said, a lot of companies working with this kind of fluorophore with a different targeted, and one of them is on target with the Cytalux that was approved here in last year. So it doesn't really matter if those are coming out doing some of the groundwork and get the equipment base upgraded before we come out with it. And then the last thing is that it gives us a lot of flexibility in the partnering, in the sense that we could sell off an entire molecule rather than selling off for an indication. So that gives the difference between the two, and it's right now in preclinical development.
Great. And one last question. How satisfied are you with your current capital level, and how are you thinking of moving forward?
Well, we're quite happy with our capital level because it will allow us to get some of the clinical milestones, and that is really where, of course, we will not run 3 phase 3 programs in parallel, but that gives us a very good basis for picking the optimal indication, the optimal positioning, the optimal pricing, the optimal partnering, and then do what can I say, the next step, whatever that would be, based on this informed decision. But I would say that we are in a very strong position because having such a broad range of different clinical trials going on and getting the result in almost the same time is really, really neat and nice.
Morten, thank you very much for your nice presentation and for being here with us today.
Thank you very much.
Hi all, and welcome to this presentation with Xplora Technologies. My name is Øystein Lodgaard. I'm an analyst here at ABG. And with us today, we have Sten Kirkbak, who is the CEO and founder of Xplora, as well as Michael Clement, which is the CFO of the company. So with that, I give the word over to you, Sten. The floor is yours.
Thank you so much, and thank you for joining your conference here today. It's a pleasure for us to join. As you mentioned, myself, Sten Kirkbak, CEO, will guide you through the intro of this presentation, and then Michael Clement, our CFO, will take you through some financial highlights from Xplora. If you go 2 slides down, we will kick things off. One more. Thank you. So, just a quick introduction who we are and our mission in life. The reason why we get up in the morning and get to work is that we are onboarding kids to a more safe and appropriate way into the digital life. That actually means that we are capturing the next upcoming digital consumer, our kids, the first time they're entering into this world of connected devices. We are providing them their first mobile phone in the form factor of a smart watch. And also the first time they're entering into this new digital ecosystem with their first mobile phone, their first SIM connectivity subscription, and their first digital content. If you go to the next slides, I will quickly guide you through what that really means. In the short time we have been in the market since 2016, we have already become the category leader in our core market for smartwatches for kids. It's a large and untapped and fast-growing market. Our business model is highly scalable, and it also drives a lot of high profitable recurring revenues. Since we started, we have sold more than 840,000 smartwatches for kids in our core target group, kids from 4 to 10 years old. We have also now more than 140,000 paying subscribers. As we mentioned, since this is a mobile phone, you have to have the SIM connectivity plan in order to make it work, and we provide our own SIM connectivity cards inside the smartwatches. So more than 140,000 paying subscribers already. In total, Xplora products are distributed in more than 20 markets, and our headquarters is here in Oslo, and we have now more than 120 employees. And we are also a listed company in on Euronext Growth Exchange. Next slide, please. We find it also very important to give you a quick highlight of the key value proposition to the product, and also why we think this has become so very popular amongst both kids and parents. We have to remember with our product, we are addressing 2 key pain points to most parents having kids in the age group 4 to 10 years old. First pain point is they would like to be able to call their kids if they have to without buying them a smartphone, which is in reality is a super advanced computer. Second, most parents also really appreciate the fact that kids are spending more and more time in front of a screen, hence they are becoming less and less active. So 2 pain points, the ability to make a phone call and incentives for kids to have less screen time and more activity. That's why we are positioning our product as your child's first mobile phone, but then we have removed all the bells and whistles from a typical smartphone. So taking away internet connection, social media, and all these applications, that's not really appropriate for kids, but focus on some very, very key features and functionality, such as making phone call. If you are granted on the contact list from the parents, you can send messages, you can see location, we have emergency feature, safe zone, step counter, and so on. Only the core basic feature. It provides peace of mind for parents, and it provides a product for the kids that can extend or delay the need for a mobile phone or a smartphone. On the next page, you can then see how we have built our portfolio of intellectual property since we started the company. First, emphasizing building really a hardware agnostic IoT platform, allowing in reality really to connect whatever kind of sensor, a lot of multiple different hardware products. Of course, we focused initially on smartwatches. We have then also built a lot of IP around building 7th generation of product, and also this year launching 3 new products into the market. The third area of IP comes from our Xplora Connect services. Already we have a connectivity service in all our Nordic markets, and we have now also announced our rollout plan into more global market throughout this year, making Xplora Connect available in 9 markets throughout 2022. The fourth area of our IP strategy is related to our premium services, allowing us to add additional content and additional service revenue on top of our already highly profitable connectivity SIM revenues. On the next page, you will then also see how we are monetizing on our IP strategy. First and foremost, we are of course selling our smartwatches, having roughly 30% plus margin, as many hardware players will see on similar products. We are really looking into our products as an enabler to allow us to sell high margin service revenue. The second monetization model is, as mentioned, our SIM connectivity. All products in the Nordic market come pre-bundled with SIM cards from Xplora, and as mentioned, we are rolling out that strategy into more international markets throughout this year as well. And the third way we are monetizing is to increase or upgrade our subscriber members into additional premium services. That will come later this year and will be part of our service revenue into 2023. The next page will then see, will capture our current global footprint. We are by far the smartwatch provider in our core markets, having the broadest distribution footprint when it comes to either telco distributor, retail distributor, or in general distribution partners in more than 22 markets, and also more than 80 brands are currently carrying our portfolio of products and selling it through either online or physical retail stores. Also, a very important point, we are homologated successfully with more than 10 different telco partners around the world as well. We have had a strong footprint in the Nordic and the European market, and on the next page, you will see that one of our key focuses going into end of 2022, also going into 2023, will be to build a strong retail distribution footprint also in the US market. And we have already announced key agreements with retailers such as Walmart, Target, and Best Buy. On the next page, you will see a snapshot of our 2022 and 2023 product roadmap. Historically, we have introduced 2 or 3 products into the market with a life cycle of roughly 2 years. And this year we are launching 3 new products, 1 entry-level product, XGO3, and 2 premium products, X6 Play and X6 Pro, which will be launched into the market second half of this year. To end my introduction, on the next page, you can see a status quo of our current penetration in the market. In the Nordic markets, where we have been the longest time, and also in Norway, where we started, already now we have 18% market penetration of kids age group 4 to 10. So almost 1 out of 5 kids in Norway are currently using an Xplora watch with the associated Xplora SIM card. Michael?
Thank you, Stan. If I can get the next slide, please. We'll move into some of our historic financials. Xplora was established in 2016, and the company spent the lion's share of 2016 and 2017 developing platforms and bringing products to market. So 2018 was in essence the first commercial year for Xplora, where the company sold around 20,000 smartwatches, and primarily in the Nordic region. Growth has been brisk over the last 4 years, increasing sales then from 2018 levels of sub 20 million NOK to more than 430 million NOK in 2021. The driver behind these sales have largely been an increase in device sales, selling close to 400,000 smart watches in 2021. More than or around double the amount of watches sold in the year before. On the next slide, you can see the revenue breakdown of Xplora last year. Out of the 431 million NOK in revenues, 340 million NOK were derived from sales of smartwatches, device sales. 92 million NOK were driven by recurring service revenues from connectivity in the Nordic region. As Sten mentioned, we've come the longest in the Norwegian market, having a penetration of more than 18% of children in our target group, but are quickly building a market position in some of the other Nordic markets, now being extended to more markets outside the Nordics as we move into the latter parts of 2022 into 2023. On a geographic basis, Germany was our largest market last year and continues to be among our largest markets, driven by a very high share of device sales, whereas Norway is our second largest market, as the high share of service revenues builds on that revenue base. Sweden represents our third largest market, both in 2021 and so far in 2022. Moving on to the next slide, we can see that the company has, after some initial investments in markets and in its business, reached profitable operations on the EBITDA line in 2021. And the company certainly has ambitions to continue on this trend moving ahead. Although also 2022 is a year of major investments in new products, as Sten mentioned, and in new geographies. But scaling our business is of vital importance to us. On the next slide, you can see the development in the subscriber base of Xplora over the last few years. Xplora Technologies acquired its largest distributor in the Nordics and close partner in Q1 of 2021, gaining access to a subscriber base of 80,000 subscribers. Over the last 5 quarters, we have grown that subscriber base to 134,000 subscribers at the end of Q2. Close to 80,000 of these subscribers are in the Norwegian market, and as you see on the on the right-hand side of the slide, representing 18% penetration of our target market, kids aged 4 to 10 years of age, with 4% penetration in Sweden and 3% penetration in Finland. We have the shortest history in the Danish market, in a year and a half, reaching 2% penetration in the Danish market, with more than 7,000 subscribers at the end of Q2. Xplora is applying the same go-to-market strategy in all its markets, and we are happy to see that these are bearing fruits. On the next slide, we are trying to portray how our growth in penetration in these 4 markets has developed over time. As you can see, the blue line represents Norway, with now 18% penetration. We have the longest history in Norway, but we are seeing that the increase in penetration in Sweden, in Finland, and also in Denmark, although over a shorter time period, is developing very similar to the growth and penetration that we experienced in the Norwegian market at an earlier stage. We will now grow, as you can see on the next slide, copy this both business model and service model, as well as our go-to-market model, into more markets, and have announced that we, in 2022, will roll out our MVNO service business into the UK, already live, France, Spain, Germany, and the US market. We all are already present in some of these and have significant sales, as I've shown in the German market. I will now copy this service model as we have had highly success with in the Nordic markets in 5 new markets moving into 2023. So with that, finally, I think we can go into the next slide. And just shortly, as Sten mentioned, we've been listed on Euronext Growth Oslo since November 2020. So for 2 years now, we have 41.7 million outstanding shares, invested capital of around 540 million NOK, have around 1,300 shareholders, of which the 10 largest control close to 50%. Exited Q2 with more than 80 million NOK in cash, of which net cash was around 50 million NOK, and a strong equity ratio of 75%. So with that, I think I will leave the word over to Sten for a short summary on the last slide.
Thank you. To summarize it all, I think some key bullet points is worth highlighting in the summary. First of all, if you look into this market, if you evaluate this market, I think it's fair to say Xplora is by far a category leader in our core market when it comes to the width of the portfolio, when it comes to the width of our services, but also distribution power and footprint. Also, I think it's very important to mention that we have a very compelling and scalable business model, since we're not just selling watches, but look at our watches more as an enabler to provide a lot of highly profitable services, either in the form of SIM connectivity or going forward additional value-added services. And the value proposition is, as mentioned, very compelling for parents because we're addressing peace of mind for parents, and we're allowing kids to connect into the digital world at a slightly earlier age than to wait for their first smartphone. It's also important to mention that the company is very securely funded in order to deliver on our growth plans and ambition, both in terms of going into new markets, providing and delivering, introducing new services as well. And also, I think the last point is very important to highlight is that the company now have a very clear and defined growth strategy. It's not about launching new products and new services into the market and hope that this will be well received. Our growth strategy going forward is actually replicating what we have done successfully now for 4 years. We'll be introducing new generation of watches. We have understood and learned the market, what the market likes and what the market needs of that kind of product. So we are introducing new products, emphasizing more profits and scalability in the way we are distributing and building our products. Then the second point of the growth strategy is to replicate what we have successfully done already into the Nordic market and do exactly the same thing into 4 new international markets, and no risk in the execution of the technology or the agreement that's already been introduced and announced. And the third element is to add 1 additional layer of our service revenue on top of the SIM connectivity, which you have to have. We are then introducing new content services to upgrade to additional recurring revenue per month by having value-added services. So I think that summarizes the company and, most importantly, our growth model going forward. And with that, we would like to then open for any potential questions in the Q&A session.
Thank you very much for an interesting presentation. So I just wanted to start off with, there are, of course, other kids smartwatch brands out there. But how do you differentiate yourself from these other products? What are the unique factors for Xplora?
Yeah, I think the 2 things I would like to just emphasize is, 1 is, of course, our strength when it comes to distribution, meaning that we build a lot more awareness and availability for the market than most of our competitors by simply just being more available. That's the 1 thing. On the product and service side, we would like to highlight that we deliver more than just a product, which is really one of the key thing that most of the competitors, our competitors, are delivering. They have one watch. But if you think of the fact that whatever watch manufacturer, you have roughly 30% margin, so you are making $25 or so on a product, that really limits your ability to develop products, features, services, but also marketing power. Since we are one of the very, very few competitors that have the product plus SIM plus services, we have a significantly higher revenue and gross margin on the product we're selling, allowing us to invest more in marketing and a lot more in product development and services. Hence, we also have a much stronger service proposition than all our competitors.
Very interesting. And you've guided for 50% growth this year. Will that, do you expect that mainly to come from your existing core markets, such as Nordics and Germany, or is that a lot driven by new markets or new sales agreements that you have?
Me? Sure. So far this year, we have seen our existing markets, being the Nordics and being Germany, being key drivers of our revenues, and we expect that to continue throughout 2022. We have started to build new retail agreements, new distribution partners in other markets, such as the US. We've also announced the UK. We have, in our experience, it takes time to get these up and running, as we've seen in existing markets, to educate the sales force, to kind of build a reputation and an experience with them. So the answer to the question is existing markets primarily.
I see. And of course, the US is the biggest addressable market out there for your products, and you're putting a lot of focus on that market. Already have signed 3 big new distribution agreements with Best Buy, Target, and Walmart for online distribution. But how will you work to create brand awareness and awareness of your products in the US market?
I think one thing to highlight on that question is that from day one, since we launched in the Norwegian market in 2017, the first year with products, we have tried to replicate the go-to-market strategy every single year and every single market. We did exactly the same thing in the Nordic countries as we did in Norway. We did exactly the same thing in the German market as we did in the Nordic markets. And we will do exactly the same thing in the US market as we have done so far. That means, in specific, we focus firstly on our own channels, which we can control, our websites, our Amazon channel. Secondly, we will then emphasize the retail footprint we have to help us build awareness via our retailers. And the third element is to continue to build this awareness from our telco partnership, meaning that it's not just Xplora investing marketing dollars to build awareness. We are primarily doing that in the first step on our own channels. But then once we grow with retailers and telco, we are jointly investing in marketing with those partners, giving us significantly more impact in that awareness phase.
Interesting. And it's probably too early to say, but have you already started to see some interest in the US market, or is that too early to evaluate the reception there?
I think it's too early since we have no significantly sales data. And then the reason for that is that, as we have said for quite some time, roughly you can divide the market into these 3 channels: online, our own online channel, retail, and telco. The telco will roughly represent 50% of the market size, the retailer roughly 30%, and 20% left to our own online channel. Meaning that in the early phase, stage 1, when we only primarily have online and some early phase of retail, the volume will not be significant. However, what we can see is that already as early as now, Amazon has been among the top 3 market in size of our own channels globally. So that at least give one indication of the demand and the appetite for the product in the US market.
So then we should wait for you to try to sign a big US telco. That's the next big thing for you in the US.
We have clearly stated that is the next goal in the US market, as we see that has been part of the success factor in all other markets. Yes.
Okay, very exciting. Last question. If we think about Xplora in the long term, you've established a very good position in kids smartwatches. That is, of course, a very untapped market that could sustain growth for many years. But should we also think about the potential for Xplora to enter into other product categories outside of kids smartwatches?
I think that's a very good question, and also the reason why we articulated as part of the slide with our IP strategy, that when we started to build our IoT platform for kids smartwatches, our objective was to build that completely hardware agnostic. So we had this very easy opportunity to potentially pivot into new market opportunity if they would come. One observation we have now, talking to big players such as Qualcomm or the larger telco, is that they are seeing a significantly increase of requests from additional family IoT sectors, such as seniors, such as trackers for items or dogs or bikes, for example. So our technology is already prepared to grow into those verticals if we would like to.
Exciting. Sounds like there's a lot of growth potential ahead for many years ahead. Thank you very much, both Sten and Mikael, for presenting us to us here today.
Thank you.
Good afternoon, everyone, and welcome to this presentation with OssDsign. Very pleased to have the CEO, Morten Henneveld, with us today to present the company. And I'll let you take the floor right away, Morten, and follow up with a short Q&A afterwards.
Thank you very much, and thank you a lot for having us again this year. If we can move to the next slide, please. As always, when we have these presentations, we have the normal disclaimers. Just if there are any new to OssDsign, then we are a Swedish company. We're headquartered in Uppsala. We're about a little more than 50 employees, and we operate in 10 markets globally. I'll come a little bit back to the result that we just posted, which was quite extraordinary here after Q2. And everywhere we operate with full patents, full clearances, and we're fully reimbursed. Next slide, please. But before we really get into the company, I want to talk about the clinical challenges that we are solving. Next slide, please. Because the big problem, as you see, unfortunately, a lot of people have traumatic brain injuries. If we start with our cranial business, more than 1 million have some kind of head injury per year. Some will need to be hospitalized, and ultimately, some will need to have an implant. Now, the big issue we see there is that 10% of we hear about, even above that, implants get infected, and many of which will need a removal of the implant, so what we call an explantation. A little bit similar if we take the example from our spine business. Unfortunately, as we grow older, many of us will suffer from some kind of lower back pain or spinal instability, will need a procedure. And ultimately, if we get to that point, what we want to have is something called a fusion. So where the spine is stabilized using some kind of metalware, but also using bone graft as we are offering right now. Because today, more than 20%, about 20%, actually don't get the clinical outcome, which is called a fusion. Now, when you add up what we see in our cranial business and what we see in our biologics business, then this amounts to hundreds of thousands of patients that every year do not get the clinical outcome that they need. Therefore, have to undergo a revision, maybe multiple revision, which is extremely painful for the patients, but also hugely costly to the society. So we're dealing with some very real unmet clinical needs right now. Next slide, please. So what is our response really to that? Well, we have decided to focus on really bringing the next generation bone replacement to market. And what characterizes or what sets them apart, probably is a better description, is really that they are designed by the very nature of the products that we're taking to market to really work with the body's own healing capabilities. So we're trying to stimulate what the body is naturally trying to do, and we largely believe that's why we have so good results so far on our products. Next slide, please. If we start with our cranial business, then consistently all the way from the very first study in 2018, we have shown very low removal rate because of infection in the implants. Recently, we came out with almost 1,500 implants in our post-market surveillance studies, more than 200 hospitals worldwide, and actually with some improved implant removal rate of 1.6%. So we've now consistently throughout many, many years shown a much, much better clinical outcome than what you typically see in the marketplace today. This product is cleared in EU, in US, and now also in Japan. And last year, we're also the only one who has what we call an osteoconductive market clearance, which essentially means that the FDA acknowledges that the implant resorbs and turns into bone during the healing process. Next slide, please. After the acquisition in 2020 of Sirakoss, we now also have a bone graft that we are applying in the spine segment. We'll come back to that in a second. What this product has shown is essentially a performance in the preclinical models, which is a very discriminatory model, which one outperforms other synthetics that were tested in the same model, but actually had a performance which was equal to the best performing solution right now, because it's not a bone graft product, but the solution called BMP-2 or Medtronic's infused product. We saw a fusion rate of close to 90% after 12 weeks and 100% after 26 weeks. So again, this is a preclinical model. It's not clinical. We are in process of doing that right now, but it's a very substantial, very significant outcome we're seeing in that data set, and something we're certainly is resonating well with surgeons who we speak to right now. Next slide, please. So where is OssDsign right now? If you go to the next slide, we are becoming a broader company with more potential. For the first 10 years in the company's lifetime, we really worked on with a strict focus on cranial implants, and what we have established ourselves as is really the innovative leader in that field. Now, last year in August, we launched our new bone graft called OssDsign Catalyst, which is a very different market, but with a lot of synergies. But what characterizes that market is that it's highly scalable and it's a very high margin gross profit market. And by playing in that field now, we actually have expanded our market potential 5 times, which means that today we're operating in a total market in excess of $3 billion potential. Next slide, please. I just want to zoom in a little bit on the bone graft business that we're now bringing to market, because bone graft is essentially used to stimulate surgical outcomes throughout the body, so in many different types of procedures. We have decided very consciously to focus on the spine segment. As you see, it is by far the biggest part of the bone graft, but it is also an area where it may be new to OssDsign, but it's not new to many of us. We have been in this business before. We have existing surgeon relationships. So it was a very natural move for us to really focus on what is also the largest part of the market. Next slide, please. So how are we going to do this and how are we going to generate growth in the future? Well, it is quite unique, actually, a company of OssDsign size. We already have a global footprint. You know, we're headquartered in Uppsala. We have direct sales forces in mid and northern Europe. Southern Europe is covered with agents. We have distributors in Singapore and Japan. And in the US, we have our subsidiary with a direct sales force working together with a broad net of sales agents over there. So we already have the infrastructure. We will keep building, of course, but what it has allowed us to do is really to accelerate, in particular with our recently launched bone graft called OssDsign Catalyst. Next slide, please. So I also wanted to take the opportunity by not just talking about the long-term story of OssDsign, but really also give you an insight into how things are going right now. We just reported our second quarter results of 2022, and what we see is a heavy accelerating trajectory of the company now. We recorded a record sales quarter in every sense of the word. We had highest sales ever, first time double-digit quarterly sales, highest cranial PSI sales, highest US sales, and we also treated twice as many customers as we've done in any other quarter. And a total of 63% growth overall for the group in the quarter. Now, the highlight of the quarter was really the US, where we recorded an exponential growth of 155%. So we're really starting to see the US taking off, which is completely in line with the strategy we communicated in the early part of 21. During the quarter, we also finally managed to launch in Japan. That has been a little bit delayed because of the pandemic. And we also recorded our first sales. So now we are also present in the second largest medtech medtech market in the world. Another highlight was also that the OssDsign Catalyst, the bone graft, which we launched in the US in August of last year, during the quarter, we could already announce that we've now treated the first 100 patients in the US. And then last but not least, we have 2 very important clinical programs running for OssDsign Catalyst. TOP FUSION, our first in-man study, completed all patient enrollment, and PROPEL, which is our prospective spinal fusion registry, has now launched and is actively enrolling patients. So we are now in a position where we see much stronger momentum in the company right now than we've ever seen. If you go to the next slide, please. Now, what you see here, because I wanted to zoom in a little bit on the US, which was really the highlight. What you see here is what we call rolling 12-month sales, quarterly sales in the US. And as you can see from the early part of 19 into here the second quarter of 21, we're seeing a steady growth, essentially US growing in line with the business overall. And then something extraordinary has happened here in the last 12 months, where we are now seeing that growth trajectory being a lot more exponential. I think it's also worth here looking at the absolute numbers. We launched in the US in 2017. It took us about, give or take, 4 years to get to a point of rolling 10 million in sales. During the last year alone, we have more or less doubled that again, essentially showing the very significant momentum we're seeing right now in the US, which we are, of course, extremely happy with. And also, it seems to be robust, it seems to be sustainable. So therefore, our clear expectation is that we will continue to see that acceleration also in the coming quarters going forward. Next slide, please. I also wanted to zoom in a little bit on our clinical programs. For those of you who know OssDsign and the strategy called Ascent25, we'll get back to it in a second. Really, one of our big priorities going forward in the company is really acceleration on our clinical programs. If we start with our cranial franchise, then there are really two important things here in that franchise. One is the post-market surveillance that we're publishing every year, and we will see that updated publication coming out towards the end of 22. But we are also working very actively on setting up a prospective registry in the US on our cranial PSI product. And the reason for that is we just know that when publications are coming out, we tend to outperform the market that's out there. If there are any comparative studies, we also tend to do better. One of the challenges is that there is just enough publications in this franchise. So we want to set up a registry to really try to start collect more data and also ultimately, of course, have more publications. For OssDsign Catalyst, I mentioned our TOP FUSION First in Men and our PROPEL registry. TOP FUSION is now completed. We have patients back for 6-month follow-up right now. And for PROPEL, it's really about expanding the number of sites. We took in some first sites. You have to get them up and running. They're now enrolling patients on a weekly basis. So we felt that it was time to raise the ambition level a little bit by expanding the number of sites. And we've now set ourselves a target of having 100 patients in that registry by year end. Next slide, please. Other than that, we have a strong momentum in the company right now that you can see, certainly a lot better than we've ever had, with several quarterly records being set at the moment. And therefore, we will just continue executing on our strategy Ascent25, which is really keeping a very, very high focus on the US, keep building our global bone graft business, a high focus on innovation, expansion of the portfolio. As I said, accelerate clinical programs and registries, and of course, also keep working on operational efficiencies, specifically for us, reducing our lead time on our cranial PSI product, and of course, being very mindful on relative to cost reduction. So no change to strategy. We are turning a corner in the company right now and with a momentum. So we certainly don't want to change anything. We're very happy with what we see. So we will keep executing to the plan that we already announced last year. Next slide, please. So just as a summary, I think OssDsign is uniquely positioned for growth. We are seeing very significant growth right now, but we also expect significant growth as we look into the future. So why is that? One, as you saw from today's presentation, there is a very clear high unmet clinical need. we are bringing the latest and greatest in terms of next generation bone replacement products to the market. We have a very big and a much better growth potential than we've ever had. And also, as I said, we have a strong momentum going on right now. Our Cranial PSI and our OssDsign Catalyst both have exceptional clinical performance, one in a clinical setting and the other one in a preclinical setting. And then we already have the strong commercial presence in place, the teams in place that we, of course, we keep building, but it does mean that we are using that very actively right now to accelerate the company. So thank you very much for listening. I hope the story intrigued you. I hope the trajectory the company is on is intriguing. And I think with that, I'll hand over for Q&As.
Thank you very much, Morten, for a very interesting presentation, as usual. I'm going to have a couple of questions, and I thought that first we should touch upon the macro situation. I mean, you've been quite severely affected by the, let's call it, hospital volatility in procedures over the past year, maybe a bit more even. And that has sort of lingered on. But just yesterday, I heard some very positive comments coming out of Stryker and NuVasive. So maybe if you can just touch upon how you're seeing the sort of macro environment within orthopedics right now. Is it sort of reaching the end of the tunnel?
I think you have to be careful what you're saying these days. Listen, we've definitely seen an improvement from the early part of the year into the second quarter, and we have seen more procedures taking place again. But as you also know, I think we're still looking at a elective index around the 70 mark, at least when we exited the second quarter. I think we have to expect that the impact of the staff shortages, which are very significant, that they are more systemic in nature. And unfortunately, that means that they don't fundamentally improve things overnight. So are things getting better? Yes. Are we back to normal? Nowhere near, I would say right now. So, but of course, with the performance we have right now, we're seeing that as a big opportunity once we start to get back to more normal levels again. But we're certainly not there quite yet.
Okay, thank you. And as lead time has been somewhat of an issue, I mean, you worked a lot to improve this, and you touched upon it briefly in your presentation. But could you maybe, go into a bit more detail on what you're doing to shorten lead times and what that means for, scalability of Cranial?
Yeah. No, I mean, we launched a program towards the end of last year, internally known as Project Bold. And that has one aim, which is reduce the lead time. And unfortunately, there is no silver lining here, or magic bullet that you can use. It's really working through all the processes, all the way from the very early part of how we get design approval from surgeons, to how we order the titanium meshes, to how we produce, to how we actually ship it. So that program is looking overall on that. We already have seen the first improvements, but clearly we want to be able to deliver even faster than we are doing today. So it is a very high focus internally in the company.
Okay. And Catalyst, your bone graft that you, as you said, had meaningful sales now in Q2. I mean, that's the first time you said that it has meaningful sales. And generally the sales trajectory of this type of products tends to be sort of S-shaped. But what I'm wondering now is if the meaningful sales is coming from, that there's a lot of evaluation going on, that's initial sales for, surgeons, or if it's more like a few surgeons that has adopted this product and has started to use it quite a bit more than normal.
Yeah. No, I mean, we don't want to get too close. It's still so early days into the operational aspect of that commercialization. But I can say we're extremely happy with what we're seeing. I think we do start to see the benefit of having a team that fundamentally know the side of the spine business where we are applying it. We've seen a very accelerating growth. We set some fairly high ambitions internally relative to the trajectory. We are on that trajectory right now, so we're delivering to plan. And that goes actually for both sales, but also on the underlying metrics in terms of number of users, the number of VAC approvals, known as VAC approvals, so the hospital's approvals, that is a prerequisite for selling. So on actually all of those parameters, we are on plan right now. So we are extremely happy with how things are going in the US, and of course have high expectations for the rest of the year for that product line.
That's good to hear. And I just want to ask my last question, sort of go back to the clinical data aspect of it all. I mean, the preclinical data is very impressive compared to the product that's out there right now. But say that you could provide similar data in terms of fusion rates, etc., for in human trials as well. I mean, what could that mean for adoption rates of Catalyst in the medium to long term?
Yeah, well, I think I remember when we launched OssDsign Catalyst, like I received a lot of questions, or maybe more skeptical questions, whether we're able to sell on preclinical data. And the clear answer, as I said back then, is yes. And I think we are showing that right now. That is happening. Of course, right now, first and foremost, what we need to is generate clinical data, which is essentially around two things. You have a safety profile on the product, and you have an efficacy. If I start with the safety profile, which ultimately is the most important aspect when you're launching a new medtech product. And we have our first-in-man trial in Hungary, and now we've treated more than 100 patients. So I think we feel very comfortable around the safety profile on the product. Then, of course, we want to see the efficacy as well, and we will go as high as we can. I don't think necessarily that the fusion rate at 1 year, which is the kind of gold standard to measure on, is necessarily the only thing. You also have speed of fusion, which is particularly important. You have how the product is fusing in the body, in the procedures, and so on. So there are many things that actually you can come out and make claims around once you have the data. And that's where PROPEL is crucially important, because that allows us to get to a very broad data set with a lot of patients in a much faster manner than a larger clinical trial. So we expect a lot from that. Of course, it takes time to collect the data, get people in for checkups, publish the data. But until then, I think we are proving that we certainly can commercialize and succeed on preclinical data. And then as we generate more and more clinical data, of course, we'll start to use that actively to accelerate and go to more surgeons.
Okay. Thank you very much, Morten. This was very interesting. So thanks for doing it with us.
Yeah, thank you very much for having me again this year. Pleasure.
Good afternoon and welcome. My name is Rasmus Wendelbo Jacobsen, and I cover the financial sector in Denmark, which means that I have the pleasure of covering Bank Nordic, a bank covering banking activities in Faroe Islands and Greenland, as well as insurance activities in the Faroe Islands. And with us today from Bank Nordic, we have Turit Finn Bogadottir, who will take over as CEO come 2023. And without further ado, I will hand over the word to you, Turit, and yeah, take it away.
Thank you, Rasmus, and thank you for the introduction. And I'm happy here to have this opportunity to give you all a short presentation of Bank Nordic. Next slide, please. And one more. As you can see here, and as Rasmus briefly mentioned, we have announced a new management or new executive team, where Árni Einarsson will stay on as CEO until the release of the 2022 annual report, and then I'll take over from him as the CEO. And Heine Thomsen, as you also can see on this page, is also appointed new executive vice president. So this is the new executive team announced just prior to the summer period. Next page, please. So let's start with a brief overview of the group. We are a full-service banking institution with activities in the Faroes and in Greenland. And besides our banking activities, we also run our own non-life insurance company and a life insurance company and a real estate broker. But these three companies are solely operating in the Faroes. There are approximately 200 full-time employees in the group. And with respect to the two markets, the Faroese and the Greenlandic market, we have a leading position in the Faroes with a market share of around 42%. And we have, you can say, a challenger position in Greenland with a current market share of around 20%. So we see a growth potential in the Greenlandic market and also in the Faroese market, but especially within the insurance market in the Faroes. Yes, we can go to the next slide. If we look at the highlights for the first 6 months of this year, operating profit has improved, where growth in the insurance activities, here you can see it as the net insurance income is one of the drivers behind this increased operating profit. In general, this year we see a better balance between income and costs due to some initiatives that we executed last year. And therefore, we are well on our way now to meet our 2024 financial targets, as you also can see here in the bottom of the page. We have a strong credit portfolio. I'll come back to this a bit later on in the presentation. But here you can see it resulting in a reversal of impairment charges of 31 million Danish kroner here from the first 6 months of 2022. Earlier this year, we decided to invest 900 million that was held in cash with the Danish Central Bank in bonds, and that resulted in a negative investment portfolio earning for the first 6 months of 16 million Danish kroner. Briefly to mention some of the financial targets, capital resources are now aligned with targets, and outlook for the year is maintained, where we expect a net profit at between 160 and 190 million Danish kroner. Yeah, I think that's that. Yes, thank you. Equity story, to summarize at least some of the points from the first 2 pages. We are a significant player in the 2 attractive markets, the Faroese and the Greenlandic markets, and we are currently operating within all the main financial areas, both the private segment and the corporate segment. We have a strategic focus on delivering and improving a digital end-to-end customer experience. But we also believe that our customers at this point in time, at least, should be in control and be able to, at any point in the journey, in the digital journey, to request personalized advice that is in a human being, a real person, if they're not confident in continuing on a digital journey. Our strategic focus, both on the customer experience, but we also have this second strategic focus within our own company, and that is developing an efficient operation through digitalization and automation of all our processes. And as I mentioned, we have a low-risk loan portfolio, limited exposure to historically risky sectors, and I have a page where you can see more figures on this in a moment. And here at the bottom, you can see all our financial targets, and that we are well on our way to meet our long-term targets, 2024 targets, within all the three main areas: customers, employees, and shareholders. Yes, next page, please. ESG reporting. And back in 2021, we defined some new ESG targets, 2025 targets, and some of them one of them resulting in that we want to have no direct carbon emission in 2025. So we are currently phasing out all petrol and diesel cars in the group, and also converting from fossil fuel to sustainable sources of energy in all our buildings in the group. We also have a great focus on developing products that support sustainable developments in the societies we are operating in, since we believe that we really can contribute to sustainable transformation of the two societies through our customers. So ESG is an area of priority and has been for us since 2016, but has developed and matured since then. And I'm sure that there's plenty more to come in following years with respect to ESG and our focus on working with the ESG related matters. So if we turn to page 8 it is, yes. Here you can see the slide I mentioned before on our exposures and capital positions. I promised to come back to our low risk loan portfolio. And here you can see that we have a strong LTV for housing loans, and also a well collateralized loan portfolio in general. Last year in 2020, we had a discretionary management estimate of 52 million Danish kroner. We recognized in 2020 due to COVID-19. And this estimate has been maintained. Of course, COVID-19 uncertainty has decreased, but the provision has been retained due to uncertainty in general, primarily caused by the war in Ukraine. And if we look to the right on this page, we can see the capital positions here in the first half of 2022. Risk exposure amount is, as you can see, is increased a bit due to higher market risk. As I started in the beginning, I told you that we have invested in some bonds instead of having cash in the central bank, and that has resulted in increased market risks. And then we also issued new MREL capital in the first half of 2022. And then there are some changes to come. You can see further to the right, on the right-hand side of this page, the net profit for 2022 after a reduction of 50% reduction in ordinary dividend has to come. And we also have some incoming legislation that is expected to reduce REA of SME exposures by around 250 million Danish kroner, and starting from next year. So they're not yet in place, but we expect them to come here in a short time. Yes, let's just change to the second. Yeah. Here we can see we'll just touch upon the Faroese economy, since that's one of our major market area. The Faroese economy has a strong growth momentum. This year, we have seen the export has reached the highest level ever. We have a very low unemployment rate, and tourism has rebounded after COVID-19 and the decrease we saw due to the COVID-19 crisis. So a strong economy, but still there are some risks counting the other way, as well as all other countries in Europe. We also see inflation, a high inflation rate at the moment. We have a relatively low consumer confidence rate, and we also see it in respect to some business confidence areas. Also through some of the sectors within business areas, we also see that the confidence has been decreased. With respect to Russia, Russia was the largest export partner before the war in Ukraine, but the companies have been able to find new markets to even higher prices than before, and that's the main reason in record high exports this year. Currently, the government is preparing upcoming negotiations with Russia, but nothing has been decided yet. And yeah, we'll have to wait and see what the outcome will be from those negotiations. Yeah, should we change to next page, please? Yes, that's the same picture, but now we are looking into the Greenlandic economy. Not a strong economy as the Faroese, but nevertheless a moderate GDP growth and a decreasing unemployment. Exports have not yet recovered, and we also see that retail sales have fallen the last year. A big issue with respect to Greenland is the 2 new airports that are set to open next year. And we expect to see a massive increase in tourism due to the new airports. But of course, it takes time to build up a new segment, a new industry like tourism. At least if it should be a significant contributor to the economic growth in the country. We have seen it in the Faroes, but it has taken, up to 10 years to reach the point we have now. So we expect that, the 2 new airports will be like a launch or trigger for an increase in tourism in Greenland. But we also expect it to take some years to build a stable economic contribution from this sector. And if we change to the next page, that's a summarization of the whole presentation. As I started by telling you, we have seen improved core operations and positive trends in our insurance operations, good credit quality. The initiatives that we launched last year to improve the cost-income balance, they have been fruitful, and thus we are now on track to deliver our 2024 financial targets and the maintained 2022 guidance of net profit. So I guess that summarized the whole presentation. I don't know if there are any questions to some of the matters or the presentation in general.
Yes, thank you for that. I think we it would be appropriate to dive a little bit more into how your loan book has been affected by the increasing energy prices and inflation. Also, a little deeper into which sectors if you start to see some trouble signs.
Yeah. In the Faroes and Greenland, compared to the countries surrounding us, we still haven't seen increasing electricity prices or gas prices, as you see in other places. Electricity prices, it's expected to be a limited increase next year, a very limited increase. So we don't have that issue in the same way as you see in other countries, in the Faroes and in Greenland. And focus in both of the countries is on sustainable initiatives, limiting the dependencies on fossil fuels. But of course, inflation and the higher interest rates influence private households. We don't see a significant change towards this at this moment, but in the future we expect a higher level of impairment charges, but not of any significance due to our strong LTV ratios. If we look at the Faroese industry, especially fishery is exposed to oil prices, but this already has had an effect on their activities. And with higher prices on fish, as we in general can see this year, the total effect on this sector has, until now at least, been very limited. So no significant changes so far with respect to the Faroese private households or the sectors in general.
Yeah, that sounds good. You have a very well-driven insurance business in the Faroe Islands as of now. Maybe you could give an outlook, shortly outline the market conditions and competition if you want to expand this business to Greenland as well.
Yes, I can do that. Today, only a Danish agency operate in the Greenlandic market. And although we see that prices are competitive, at least when we compare to prices in Denmark and in the Faroes, the products are not developed to the Greenlandic market. So we believe that if we are to operate in Greenland, we could provide a unique value proposition to our customers, where products are developed with respect to Greenlandic issues and matters. But a prerequisite for us doing insurance business in Greenland is a license to operate in the market, and that is currently to be considered by the Danish FSA. We have received some positive feedback from the local authorities in both countries. So we believe that this is just a formal process that needs to be sorted out, but we're still waiting for this to happen. So there's potential there, but still some formal matters need to be taken care of for us to be able to enter the Greenlandic market with respect to insurance activities.
And do you have a broader timeline for these authorities' decisions?
No, we haven't got the exact timeline, but hopefully we are looking into, maybe next year or in a year from now. But it's not. I can't say. It's not up to us.
Okay. So if we look a little bit on the payout side, you have had some years with very large dividends, and at the same time you have a large ownership stake from the Faroese government. So I just wanted to hear if there's also been talk about the Faroese government wanting to sell a bit of their part, and then they haven't. So I just wanted to hear what the status is with this, and also the possibility of buybacks in this context. Is it something that you look at only if they want to sell, and should we thus expect dividends as the primary part.
Yeah, it's correct that a couple of years ago, the Faroese government announced that they were looking into selling their position or shares in Bank Nordic. But as far as we know, nothing more has been done with this matter. So yeah, there's no news on respect to what we can expect from their point of view. To your questions about share buybacks, the Faroese tax legislation is currently a showstopper for us doing some buybacks at the moment, since a buyback should be, according to Faroese legislation, be taxed as dividend. And we have some discussions with the authorities in respect of getting this matter changed, but the legislation needs to be changed first in order for us to continue with some buyback programs. That's currently a showstopper.
Okay, so if we have time for one last question that could be about the fishing industry, very important for both of your markets, although they differ in Faroe Islands and Greenland as well. How do you see these industries going through the crisis? And maybe if you could add some flavor to the difference also from the block grant that Greenland is having from Denmark.
Yeah, if we start with the block grant with respect to Greenland is a stable contribution to the Greenlandic GDP, and it's a significant, very large share of their GDP. So it acts like a stable element in the Greenlandic economic development. In the Faroes, the block grant is much lesser and is a much smaller share of our GDP. So it doesn't have the same effect on the stabilizing the Faroese economy. With respect of fishing industry, I don't know if you were thinking about Russia or just in general.
More in general, I think you covered the Russia situation very well. Yeah.
Yeah, well, in general, we see that there are some different matters with respect to the Faroese and the Greenlandic market, also related to what kind of the fishing types are exported. But we can see that the Faroese, in general, the Faroese companies have experienced a price increase this year. I guess mainly due to the crisis. When you export food and food-related products, you have a good position when you are in a situation that we are at the moment, and that is the matter for both the Faroese and the Greenlandic economy, where fish and fish-related products consist of approximately 95% of all exports. So of course, there are also some risk related to being so depending on some sectors or some industries. But still, when we're looking at the situation, global situation at the moment, we are in a good position with respect to selling our products.
Yes, I think that was it for my questions, and also about our time set here. So if you have any concluding remarks, I don't know if you have, but
no, I don't think so. I think they covered the most important issues.
Yes, perfect. Yes, but I will say thank you for presenting for us today, and we look forward to seeing you again in the future.
Thank you for the opportunity.
Good afternoon and welcome to this final presentation here at ABG Sundal Collier Investor Days. My name is Simon Granat and I work as an equity analyst at ABG covering technology and IT companies. And with us today we have the pleasure of welcoming Henrik Molin, who is the CEO of Physitrack, and he will for the coming 20 minutes present the company and give us an update on recent happenings, and then we will follow up with a smaller Q&A session. So with that said, Henrik, please go ahead and present.
Thank you, Simon. Saving the best for last, obviously. Don't let me stand in the way of the after work drinks. So let's kick this off. Let's go forward 2 slides, please. Simon. I am, as Simon said, I'm the CEO and co-founder of Physitrack. We are listed on Nasdaq First North Premier. Our ticker is PTRK. I'll give you a little introduction to the company and what we're up to. I'll talk a little bit about the strategy and outlook. I'll touch a little bit on what's going on in this type of market environment and this type of macro environment that can be challenging for a lot of companies. And I'm happy to say that it's almost the opposite for us in terms of what our business is based on, but I'll get to that in a moment, and then we'll open up for some questions. So let's go to the next slide. So Physitrack, we have 2 sides of the business, so 2 divisions. If you look there on the left side, that's the business that I co-founded with Nathan Skvortsov, my close friend, back in 2012. We call that life care technology. It's technology that we put in the hands of healthcare providers around the world so that they can feel to make their patients and or whatever employees perhaps feel better and happier. They go through recovery and we support them throughout that recovery with the tools that we sell to our healthcare provider customers. That's about 75% of the business. And I should say right now, our turnover on a run rate business is about 12.2 million euros, or roughly 125, 130 million Swedish krona, depending on what mood the Swedish krona versus the euro is in on that day. Now, on the right side, we have our virtual wellness division, which is a relatively new addition to the group. We started working on the wellness division in 2021, and this is something which we have come into via acquisitions, but acquisitions that have been integrated into the group and supported by technology that we have developed. And so we take a tactical and strategic view on our acquisitions, and we make sure that we have great organic growth after our companies join the group, which is very, very important. So not a buy and hold, and I'll talk to you a little bit more about that. But overall, a very nicely diversified portfolio. And let's go to the next slide here, Simon. And on a geographical perspective, we are all over the world. Our life care technology is available in 15 languages, and we have customers in a wide-ranging geographies from Australia to the US, and a lot of activity we have in Europe. So the heart of the business is in the UK and in the Netherlands and the Nordics, and a lot of the application development and the tools that we produce are made there. But it's a truly diversified picture here, which means that we're not really vulnerable to any specific geos. We're not really vulnerable to any specific customers. It's a very diversified portfolio. And that gives you a little bit of a hint as to how a company like ours can be very robust, even if the outside world is a little bit turbulent. Let's go to the next slide. This is from our last quarterly report, and this is pretty typical of us. We've reported 6 times now as a publicly listed company. We have met or exceeded market expectations and delivered what we promised, which in this day and age is not something that's always the case, especially with newly listed companies. But I'm happy to say that this is really at the heart of where we are. We like to deliver on our promises. We like to achieve numbers and KPIs that we have expressed as being target numbers and KPIs externally. And so this is a typical example. Our reporting structure is quite nice when you look at this, but this gives you a little bit of a hint as to where we are. And our target with the business is to grow 30% organically year over year. And this is something that we've consistently clocked in at as a listed company. Obviously, in the past, it's been more, which we will illustrate with the next slide there, Simon. So this is the journey, and so as you can see there, somewhere in the middle there, you have organic revenue CAGR 89%, and so this is something that we're very proud of having achieved, and we're very focused on growing with little external capital. So over the years, we have grown as a bootstrap business. We had some shortcuts for us that helped us with that. If you look at the left there, there's a little Apple symbol. We were part of Apple's accelerator program for iPad apps back in the early days, back in 2015. We found product market fit in quite an extreme way thanks to that, and that enabled us to actually grow with just our own money. So it was my and my co-founders' money originally, and friends and family along the way. We never really raised money externally until we IPO'd the business in 2021. So this is how we intend to continue running things. Nice growth organically and also acquisition growth. If you look there on the right side, you can see that we added a whole wellness division, which is now 3.4 million, and this is something that's expected to grow quite dramatically over the next few years because the market drivers for these are really interesting. So let's go to the next slide, Simon, and let's take a little look at the two different divisions. And I'm going to talk to you a little bit about the life care division and the tools that we have at our disposal there. So I used diversified when I spoke about the revenue streams. So diversified in terms of geography and the different language versions, in terms of the customer base, not relying on having customers that dominate your book of business so much that if you lose them, you have a big problem. So we're very much the opposite. We're very diversified. And so we're a software as a service company. We sell our software to businesses. Life care, we sell to care businesses. So care providers use these tools to help their patients feel better, faster, and in a more highly qualitative way. The heart of this business is the second box from the left, which is the Physitrack and PhysioTools platforms. They are subscription services where you get access to clinical content that you use with your patients in between appointments. So if you've been to a physiotherapist, you've been to a chiropractor, you've done some sort of treatment, you usually get some tools and some homework to do in between appointments. That's the heart of our business. The biggest exercise library in the world, 15,000 clinical exercises that are available as a subscription service for quite a small price. And the reason why we do this is because we like a widely diversified book of business, but also we open up the door to have more tools for our customers. And so if you look at the screen here, you have 5 different boxes, and this is how we operate. We make sure that we cater to the needs of our customers, whether they're small to mid-size and perhaps just pay if there's just one guy, they might pay just 10 euros a month to get access to our exercise library. But if they're a big enterprise, they might need telehealth and messaging. They might need outcomes analysis and statistical tools to help them understand their rehab businesses. And we also white label. We deliver custom apps to some of our best customers, and as a business line, that's gone really well. So this business doesn't really rely on the whole user ecosystem growing over time. Of course it does. We have really nice strong growth in the underlying user ecosystem, but once people are part of that ecosystem, there's a lot we can do with them with a diversified set of tools, which makes this into a very robust business. Let's go to the next slide. I'm not going to dig into this too much because we have a limited amount of time, but the way that this stuff works is that a healthcare provider usually signs up to our system. They can do that in a fully automated process, going online, paying with a credit card. We have some great automated tools to onboard and support and take care of our customers so that they remain in place for as long as possible. So that's the box, second box from the left up there. The journey with the patient is quite dynamic. It's based on some nicely designed apps that Apple helped us with once upon a time. You can use these things as well in very old school ways, printing or just on a website, and your old granny's iPad will work perfectly well with this stuff. So we try to find sort of the flavor of what our customers' patients need. And if you do these things in a more advanced way, you can look at the bottom box on the right there. We can use statistics and things like that to help our customers understand what they do. So bigger customers, bigger healthcare systems in the public space, so public healthcare, or the big hospital clinics in the US, for example, example, they like to know a little bit more what goes on inside of their ecosystems, which can contain thousands of users, and they can have hundreds of thousands of patients per year. The white labeling is illustrated at top right. So nicely diversified, nicely thought through to be a robust business, and that doesn't suffer too much if there are changes in the outside world or in the customer base. More on that in a moment. Let's go to the next slide. Now, wellness. This is the new division, 3.4 million euros in turnover, which were built up in a relatively short period of time. We're talking about a year and a half that we're going from nothing into that type of size. The big reason for our wanting to go in there is illustrated here. And we obviously have really big ambitions in terms of our whole business. We like to elevate the world's well-being, which you saw as our mission statement, which you had on the first page there of the presentation. And now, if you want to do this properly, you have to go down the path of prevention and wellness and taking care of individuals, and not just when they go through rehabilitation or they have an injury. You need to preemptively take care of them so they can feel better in the context of their everyday lives, which is why we sell tools into companies so they can take care of their employees. Let's go to the next slide. So this is the star of the wellness show. This is Champion Health. Champion Health uses algorithms to understand what an employee goes through in their working lives, and a little bit of a sprinkle of what they go through in their personal lives as well. What stress factors they're subjected to, how they live their everyday lives, and how that makes them feel at the end of the day. An employer would invest in Champion Health to understand what their employees need to be healthier, happier, more productive, etc. And an employee has a fantastic tool to learn more about their individual drivers and what they need to focus on to feel better and be happier and be more productive and things like that. So it's a very individual journey, and this is something that's put together by algorithms so similar to Netflix. This is something that picks up world leading in terms of quality, in terms of scope, videos and educational material from our proprietary database, and it provides that in a steady stream to employees, just like Netflix would, but in an automated fashion. So, and if you look there on the bottom right there, you have everything that you need to understand yourself. And there's a flip side to that for an employer where they, on an anonymized basis, can understand exactly what goes on inside of their employee ecosystem. Very, very powerful platform. Let's go to the next slide here. Now, the beauty of this stuff is not just the algorithm-based drip feeding of educational material and contents and things that you need to know to feel better and happier and all that. It's the fact that we've actually opened this up. And this is why we came into this through acquisitions. We wanted a holistic, a full coverage ecosystem with all the different components that you might need on a day-to-day basis as an employee to feel better. And we wanted a tool that that employer could trust to just take care of their employees. And so we have a really, really nice set of tools here. Similar, we like the diversified situation. Compare this to the life care slide that I show you. Same thought here. We make sure that we have something that can really provide a powerful, holistic experience, whether it is this Netflix for well-being or what can be used to actually get care on an emotional well-being, mental health level, or on a physical level with access to physiotherapy, for example, online physiotherapy. So that makes the whole thing come together very, very nicely with great tech and also the care provision that we've acquired our way into in the last year and a half. Let's go to the next slide. Just as an illustration of this stuff. So you want that seamless experience. And if you see that the line on the second row there on the left, private medical insurance. So this, you can see this as a medical insurance light without the financial burden of being an insurance company, but it's something to be there as the first line of defense for your employees to make sure that you take care of them in stressful times. And over time, what you will see more of these components being integrated into Champion Health to provide eventually the most powerful holistic employee wellness solution in the market. And we want a single point of access for this, and we want tailored content with those algorithms. And it's something that's going to be a very, very nice and powerful product. It's a very fast-growing business already. Champion Health, since we acquired them, they've pretty much doubled in terms of their run rate. In terms of all the care businesses that we have, they've done extremely well in this climate. A little bit more. I have one last slide here, Simon, if we just switch to the last one here. We did launch access to physiotherapy. So if the algorithms tell you that, you know what, your body is starting to be a little bit too much in pain for comfort, you have access through Champion, the ability to do online physiotherapy and also hands-on physiotherapy, because we actually have a network of clinics available to users of Champion Health in the UK market. So these are some very, very important pieces of the puzzle, and not just for Physitrack's business as it is, but also if you look at the macro climate as we experience it right now, there's a lot of things going on that are putting humans, employees, or patients under a lot of pressure right now, because the world is a stressful place. The macro environment is the most unusual macro environment, at least that I've seen since I was born about 4 decades ago. And people need these tools. And this is why this is a very, very interesting commercial situation for the Physitrack Group in general, and also for Champion Health in particular. So when we look at the macro environment, and we can go to the next slide, Simon. If you can look at the underlying market growth dynamics, we are definitely in a situation which is supporting the revenue generating situation of our group, of our business. There's some extreme movements there on the macro side when you look at inflation and you look at what it's doing to people, their consumption patterns, and what it's doing to their interest rates on their mortgages. It's putting a lot of pressure and a lot of stress on people, and this is where we can come in and help. So it feels really good to be that provider that can actually do that can come in and help. And of course, the secondary effect of that is the fact that it creates a very robust, nicely growing business, because these are prioritized areas for companies. In an inflationary environment, when you have so many macro challenges, your employees will need help. And the help that they need is probably not going to be in the form of raised salaries. That will help a little bit, but in the long term, what they need are tools so that they can take care of their emotional well-being and their physical well-being, and to sort of have the ways to deal with this on a daily basis. And so there are a lot of investments going into that right now. We're seeing some very big and some medium-sized and small companies moving down the path of investing in Champion Health. Very, very powerful. And as well, on the life care side of Physitrack, there are a lot of things that are happening as well because of the stressful environment. There are a lot of injuries, there are a lot of surgeries, there are a lot of things going on that are supporting the growth of that technology. So on a top line revenue growth situation for us, we are very much favored by this macro environment. And so on the left side, the market growth dynamics, that we are very much in that macro tailwind situation. Of course, you still see digitization, etc., going on, but it's very, very evident right now that we're in the right space here. And then if you look on the right side, the M&A initiatives, we are consistently and constantly looking at new opportunities to invest. We are keeping a bit of a lower profile now than we have previously, because we want to guard our cash, we want to guard our profitability. Care businesses, by definition, are a little bit less profitable than what we see on the Physitrack side of things. If you go to the next slide, Simon, just that's my final slide before we open up for questions. Now, if you look at the middle, the profit margins, now, historically, Physitrack, the life care business, has clocked in at over 50% of margins, so EBITDA margins, and this is where we are going as a group. But when you first acquire care businesses, they usually come in at a lower margin, and you have to work organically just to raise those by looking at synergies, by looking at injecting great technology, and by accelerating top revenue with higher margin products. But we are definitely in the most buoyant environment that I've ever seen for our business, and it's very, very exciting to be part of that. And that was a little bit longer than the 15, 16 minutes I had planned, but I'm happy to go to the Q&A now, Simon, if you have any questions for me.
Thank you so much, Henrik. Certainly lots of exciting stuff happening, so thank you for that presentation. Moving into Q&A, while you are quite diversified geographically, what key markets would you say are highlighted in order for you to sustain your rapid organic growth here going forward?
So our core markets when it comes to Champion Health are the UK, the Nordics, and Germany. The UK is growing extremely rapidly, and I think it's just the beginning. So as I said, Champion Health has more or less doubled since we acquired them in the beginning of May. Super exciting to be part of that. The German side of Champion Health has actually grown. If you look at it on a year-on-year basis, that's in the Q2 report, that's actually grown 1,200%. But if you look at this year alone, we're up something like 400% on that business. Super buoyant, super fast growing. So these are definitely target geos that are highly prioritized. And when you look at the Physitrack or sort of the life care side of things, we see growth in the usual suspect markets, and the strongest one actually for life care is the US market for us. That's where the needle moves the fastest, but we are present in a lot of places. Australia is still going strong, and after all these years, that was the first English market that we launched into. UK as well, a lot of stuff going on in public healthcare, etc. But really the major growth here on Champion, that's important, that remains those three key markets, and that's where we'll see the most action going forward, and to the tune of several 100% in those underlying businesses, which is extremely fun to be part of.
I can only imagine, and we touched a little bit on the inflationary topic during the presentation, and we have current levels that hasn't been seen for a long time. How do you adapt pricing in relation to the current environment, and are you receiving any pushbacks or anything similar from customers?
So pricing power is something that comes up as your magic Harry Potter wand these days. If you have pricing power, you're usually robust in inflationary environments, and you see that with bigger SaaS businesses, or Microsoft is a perfect example, and others, where you can actually raise prices and customers do absorb that. On the Physitrack side, that's not an exception. We are a core product for our care providers on the life care side of things, and so we have consistently raised prices over the last 3 years. We have been artificially cheap, in my view. I think we have not charged the amount of money that this technology deserves, I think, in a lot of markets, and our customers understand that. So we sort of double up on that price, the price sensitivity or the lack of price sensitivity, in the fact that this is a core tool, day-to-day tool that's very important. Plus, it was underpriced. Champion is relatively new for us, and so we haven't adjusted pricing there. But I wouldn't be surprised if you have a really nice price elasticity momentum in that business as well, because it is very important that this is a very important tool for taking care of your employees. So we'll see down the line. Right now, we're just in the middle of the market expansion, and so we don't see any need to adjust those prices. In terms of inflation for us and our sensitivity there, so I'm guessing that's could be a follow-up question. Now we are lucky that we are grandfathered in a lot of the ways that we acquire or we buy technology from third parties, and so we subscribe to SaaS tools at our end to make sure our platform runs. And so we've seen price raises for stuff like Slack. We've seen price raises for some of the components in the platform. But actually, I think that because the tech market has been under so much pressure from a capital raising point of view, the big providers like Amazon Web Services and other big guys, they have actually not raised prices because they know just how sensitive this is right now for tech companies. So I think we're quite spared there. And lastly, in terms of our staff and our teams, well, the biggest addition that we had to our team was a development team that we built. We replaced an outside developer with we're just building our own team. And so the biggest hiring spree that we've ever done internally since inception, we're talking about a team that's close to 20 people today. It's actually done quite recently. And so it has all of these sort of the new pricing in place in terms of salaries. And so long story short, there's not really any cost challenges up ahead, we think, because of inflation. We like to be opportunistic so we can invest in things and people, and we want to grow, but that's a different story. So we've actually communicated that we think that we're in a good place to have around a 30% EBITDA margin right now, with the target of raising that to 40 to 45 in the next couple of years. But right now, this is a great environment to invest into, to acquire people and components and tech and all that stuff to just support growth. So if you see lower margins at our place, around the 30% mark, which is where we clocked in the last, the last 5 quarters, last 6 reports, it's perfectly normal with being opportunistic. And but overall, I think we're in a really good shape.
Great, and as you pointed out, you also answered some of my follow-up questions, but I have more. And you also touched upon one subject in the latter part of your answer there, and that was relating to your margins. And your entrance into virtual care seemed to be weighing a little bit on margin, but it seems to be growing quite nicely. What would be the main hurdles in order for you to achieve your 40% EBITDA margin target? And what effect does virtual care have on improved sales?
So I'll flip that around. The main tool that we have to expand margins is to focus on higher margin products. And so a big part of the existing business that we had with these care providers as we acquired them were lower margin products because they had a certain element of virtual care in it, but they also had an element of physical care in them. And the combination that they had when we incepted with them as part of the group were that they needed a tilt further into virtual. And the good news is that with Champion Health and also with the collaboration with Nightingale, it's creating some really, really nice market expansion dynamics that's based on revenue. So revenue composition in terms of the products that you sell and develop, etc. The margin expansion is less evident in terms of cost savings. You do have certain overlaps when you acquire a company, but in fact, on the wellness side, most of what we focused was really acceleration, and that's what's driving margins to go wider for us. And so I think that's a healthy dynamic, because the last thing you want to do when you acquire somebody is to start cutting costs and people. That's usually quite demotivating. And so we've actually focused the firepower on looking at the product mix, and that's the number one tool for us to make things happen.
Okay, thank you so much for that answer as well. As we are running out of time, I'd like to ask you if you have any final remarks to us that you feel that you wish to highlight that we haven't addressed already.
Listen, I think if there's an all-weather play in the digital health market, meaning something that has robust revenue streams, nice growth, and a predictable future in terms of margin and success, it is us. I don't want to do too much advertising and toot my own horn, but the way that we have composed our book of business, the way that we think about the market dynamics, and the way that the macro environment is playing into what we do, regardless if the market is difficult or if it's really easy, it is really proven to be a very, very robust strategy. And I think you've seen that in the numbers as well over the last 5 quarters with 6 reports. And if there's anything I want to say, it is really we're sticking to our guns, and there's no plan to change that anytime soon.
The future certainly looks exciting. Thank you so much for attending here today, Henrik, and I wish you a great rest of the day.
My pleasure. Thank you.